Hey.
Oh, hey everybody. Welcome to day 4 of the Metastock Traders Conference. It's good to see you. If you have questions as we go, make sure you chat them in the questions box if you go to webinar, or just chat them in the chat box if you're in YouTube. I want to say thank you for being here. It's good to see you. Let's kick off. I'm going to read a legal disclaimer. Let's do it. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So I hope you enjoyed that. As we kick off today, I want to thank again all of our great sponsors. Stocks and Commodities Magazine is the first one I'm going to talk about. They've been creating articles since 1982. They've been sponsoring the Metastock summits and conferences that we've been doing for, I don't know, 15 years now. If you get a subscription to Stocks and Commodities, you'll get a physical magazine sent to you in the mail as long as you're in the US. You get a digital copy. You also got access to all of their 17,000 articles. So very, very cool. You can find out more about the Stocks and Commodities magazine at traders.com. The other, oops, I just clicked on it on accident. The other one I want to also kind of talk a little bit about. If you want to, you can join the Traders Forum. I want to personally invite you to join our Traders Forum. If you do, you can chat with other traders live during the market. They're always there. We're always there. I'm always there. To learn about the markets, we talk about indicators, we talk about strategies, we do interviews with technicians. It's a great place. A lot of fun to hang out. I've learned a lot. I invite you to come and hang out with me at thetradersforum.com. So we are, of course, Metastock. We're going to be talking about Metastock all week long. Metastock's been rated the best software in its price category for 32 years straight. We can help you scan the markets, test ideas, forecast, all that kind of good stuff. We're still doing the offer where if you buy a month, we'll give you the second and third month for free. That can bring your cost down to about 25 bucks a month. It's worth every penny. Give it a go. If you have any questions about Metastock as we go today, give us a call, 800-882-3040, metastock.com/sales chat if you want to chat with us, or metastock.com/conf promo. Our first guest today is Zaheer Anwari. Zaheer has been doing a lot of business with Metastock over the course of the last several years. He actually started trading in 2007 and is the co-founder of Sublime Trading IO. Let me go ahead and we'll get over to Zaheer. Zaheer, how are you doing?
Hey Jeff, I'm good. How are you?
I'm good. Let's see. Let me go ahead and I'm going to make you the presenter real quick.
Lovely.
Okay. This should be asking if you want to share your screen. Perfect. All right. I can see you. Well, I can see your screen. I can hear you.
Fantastic.
I'm going to go ahead and let you go.
Brilliant. So, hi guys. I hope you're well. I hope you've had an excellent week of webinars and speakers. I know Metastock always put a wonderful multi-speaker event together. So I hope this presentation gives you a slightly different view of the markets compared to everything else that you've seen. So let's dive in. We're going to be looking at the Market Edge technology, which is the add-on that we have created for Metastock, and how we can execute it as part of a 3-step strategy guide to navigating tariffs and smart investments. Of course, tariffs have swamped our media channels, I guess, since the beginning of the year. We have obviously come out the other side with the S&P now setting record highs. So we want to have a look at how this year has unfolded and what we could potentially see through the rest of the year and of course into 2026. Now, What I'm going to share with you guys is how to use the MET, the market edge technology, and a trend following investment strategy to significantly improve your portfolio performance to over 30% a year every year. So wherever you are right now, generally, if I'm speaking to people, portfolios are generally underperforming. Maybe they're matching the index 8-9% a year. Maybe you're new to investing. Wherever you are, this will be able to give you that boost you need, either to get started correctly or to boost your portfolio performance. You're about to learn a predictable and systematic way to identify the best trending stocks and assets, when to enter the market for optimal returns for bull and bear trends, because of course bear markets, the talk of a market crash, again, is all over our media channels. But how do we actually turn that into an opportunity? So we want to block out all the social media noise and really focus on what the market is doing. How to hold, compound, and exit for maximum gains, outperforming all other strategies and money managers, and how to adapt this process around your lifestyle so you can continue to enjoy life while your money grows in the background. Because I'm assuming everyone on here is a professional, a working professional, busy professional. You're managing your own portfolio from home. Ultimately, you want to be able to do that while you get on with your life, married, kids, etc., work, and just have these smart processes working away in the background. Just a bit about myself, guys. I have a degree in software engineering, which is where my love for tech and metastock really comes in, and the tools that we've developed. I work for Oracle as a software engineer. Oracle Corporation, their stock, of course, is doing very, very well. You will have likely seen that gap up last week, or was it earlier this week or last week? I can't remember. There was a huge gap up on Oracle. We could potentially have a look at that. I then became a TEFL teacher, which is teaching English as a foreign language. I lived out in Taiwan, Japan, Philippines, teaching English, which is where my love for teaching people how to invest comes in. A lot of my past endeavors really sort of feed into what I do today. I then moved into advertising photography, which is really where I understood the need for high-end equipment. So in advertising photography, we used a Hasselblad camera, one of the first cameras that was taken to the moon. If you're not familiar with Hasselblad, they really are the godfathers of photography, of the camera world. And I liken Metastock in the same way. Metastock is very much one of the godfather pieces of the trading world. So I learned a lot from my advertising photography days in terms of how to use and invest in the right equipment to deliver for your clients. In this case, when it comes to your portfolio, your client is obviously yourself. So you don't want to, look away from using good equipment. It's really essential. I started trend following in 2007. Before that, sort of 2005, 2006, I was very much trying to find my footing. I was day trading, swing trading, value investing, all those different methods. I either found them time consuming or inconsistent or difficult to maintain. When I came across trend following, everything sort of fell into place. That was in 2007. Co-founded Sublime Trading in 2018, which is our education platform, and then co-found the Revisi Fund in 2023. So we actually have a hedge fund now incorporated in Luxembourg. To have a hedge fund of any sort in Luxembourg, you've got to have an audited track record. Our audited track record goes back to 2016. As I said, comes in at around 30% a year. So what I'm sharing with you today, guys, it's facts. It's fact. It's grounded in truth. This isn't hearsay or back tested. This is the real deal. I've been blessed to be able to contribute to all these wonderful publications. As Jeff said at the start, so I've had a long-standing partnership with Metastock. It's been a wonderful partnership that's really helped us refine our tools. So we'll get into that today. And ultimately, guys, this is the simplest, most effective, and most profitable way to find, invest, and compound stocks and assets, period. As I said, it's the same system we use in the education, which is Sublime Trading, and it's the same system that we use in our fund, the Revisi Fund, and we call it the Market Edge Technology. Now, we've got a couple of goals that I want to share with you. First of all, we want the MET to be the #1 selling add-on on Metastock. That's one of our personal goals, and that's because it works and is the perfect legacy toolkit. I'm going to expand on what I mean by legacy toolkit in a second. But just to give you some feedback, if you like, on what some of our current users are saying, the Explorer is worth the cost alone. So we'll go through the Explorer features in a second. Just subscribe and like what I found so far. More polished than my own system. This is thanks for the great Metastock add-on. I've just subscribed to this Metastock add-on. The visual representations for the different timeframes are fantastic. I love the clean and impactful display of all the timeframes and how easy it is to see the alignment. And we're going to go through what all of this means. Terms like alignment. It's very, very critical to picking good stocks. And the second goal is to put trend following back in the limelight, as it's become a forgotten art form with lesser strategies taking center stage. Trend following, if you look at it, if you study it, guys, it has topped performance tables for decades, yet you hear very little being talked about it in our media channels. In recent years, value investing has very much sort of taken the limelight. And I want trend following to really be where it deserves to be, which is up there in terms of attention that it gets. And the goal really is to help others have the same confidence to find, invest, and compound stocks and assets. Do check out our Trustpilot, guys. We've actually had more Trustpilot reviews go up since then. Just to share with you some of what people are saying, 110% return in just 3 years. So you can see, as I mentioned at the beginning, we average 30% a year. So some of the testimonials that are going up on our Trustpilot match those kind of returns. So again, not only are we doing it for ourselves, but we're doing it for our community members using the MET add-on. 100% profit. Again, I'm reviewing it again as I've achieved returns of over 100%. Guys, these are all verified reviews, by the way, so legit reviews that have gone up. Again, 30% annual returns, in excess of 100% returns, 40% in 2024, so outperforming the S&P 500. And again, help me hit over 100% profit growth. So you can see the kind of returns that we are helping our members achieve. So let's just do a quick comparison, guys. You've got $20,000 or £20,000 as a starting amount. Let's say you put $20,000 in an S&P 500 tracker fund for 20 years. You add an additional $100 a month. And let's say you're making a generous 11% a year. I say that's generous. Typically, you will be making 8, 9, maybe 10%, but 11%, let's say you're making 11% a year on a tracker fund. Now, in the next column, let's say you've got 20,000, again, 20-year time horizon, $100 a month, but this time we're investing in stocks outperforming the index, outperforming the average. So let's say that's that 30% return. If we look at what you will achieve after 20 years, with a tracker fund, you'll have around $250,000, which is fine. It's not a bad amount of money, but if you learn to do what I'm going to share with you today, you'll push that to $4.5 million. And this is really where true wealth creation comes in. And when you're then dealing with those kinds of money, guys, things really then take on a different meaning. First of all, the confidence that comes with it, because a lot of people are very much underperforming and don't know why they're underperforming. With a system like ours, you'll get on top of that. All the money will be under your control. It's not locked away in some kind of government scheme that's drip fed to you later on in life. Retirement can be brought forward. You can start your own businesses. If you're a contractor, you can pick your own contracts. Of course, I believe inherently everyone's good. There is a good heart in all of us, and we all want to do a little bit more when it comes to charity work. When you're dealing with larger sums of money, you will generally be a lot more generous. And of course, we want the finer things in life, because why not? And that, of course, may include an upgrade in where you live right now. Maybe your family's growing. But the most important thing, guys, and this is what I was alluding to earlier, is that legacy system that we've created, because the schooling system is not going to teach this to you, just like the schooling system didn't teach this to us. So someone's got to jump on top of it, get to grips with it, learn it, and then pass it down to the next in line, whether that's your children, your loved ones, whatever the case may be. So someone has to learn this, and that has to be you. Pass it down to your kids, and then they can carry on the good work that you have created. And that's what true generational wealth means. Right now, I feel terms like generational wealth, they're just buzzwords. We need to take hold of that and turn it into something that's tangible and something that you can actually execute on. So by the end of this, guys, you will have an option. I say, you're at a crossroads. When you're presented with best practices, you've got two choices: either adopt the best practices and push your performance to a higher level, or continue what you're doing, which may be an average performance or an underperformance. But ultimately, at the end of this, you will have an option to make. So we have a copy service just to get you up to speed with how those 100% returns have been made by our members in the community that you saw on our Trustpilot. We have a portfolio copy service. It's based on a £20,000 account. That's typically the very minimum starting amount that our community members have. Of course, some have more, 100K, a million, etc. But 20K is a very nice starting amount because it gives you the flexibility to manage your risk. You can't manage risk on $500, no matter what a broker may tell you to open a broker account. It's impossible. You will lose it. You want to have a large, good starting amount, and then you want to be able to diversify. Put 1% here, 1% here, 1% here. So with a 20K account, you can do that. From February 2023, when we started with that 20K account, to this month, the running P&L is now almost £35,000. In fact, it's probably larger with the gap ups that we've had on the indices today. There's been moves up. You can see that we've taken only 115 positions in what, two and a bit, almost 3 years. If you average that out over 3 years, it's hardly any positions, because what we do is we focus on quality, not quantity. Trade less, hold more, and compound. That's really the philosophy. So we're running at 173% return on investment in the last 2.5 years. This is the sector diversification, because this is really where it starts. Our philosophy is to scan sectors, which is where a Metastock and the explorers come in, and we're then looking to find the strongest stocks in the strongest sectors. What you want is a really nice diversified portfolio where you're scanning sectors, picking out the best stocks, building portfolios around those, cutting out the losers, holding and compounding winners. It's actually very, very simple and straightforward once you actually know what you're doing. The point of me showing you this, guys, is that if you go online, all you ever hear about is big tech. Nvidia, Microsoft, Tesla with it moving up, Google with it setting record highs, AI is everywhere. But people seem to forget that there's 10 other sectors that you've got to be looking into. And sometimes there's some fantastic opportunities that just don't get talked about. Here are some of them. Amphenol, it's climbed 280% since we started starting sharing positions in the portfolio, 280% since 2022. CBOE, 127% since 2022. Lowe's Corporation, 97% since 2022. Notice, guys, how many of these stocks are you familiar with? How many of them aren't you familiar with? I'm based here in the UK, and a lot of these stocks sometimes are new because they're getting picked up by the scanners. I've never heard of them. When I look at their charts, these stocks are decades old. The US market simply cannot be beaten for opportunities. McKesson Corporation, this is a healthcare stock. It's moved up almost 200% since 2022. And then, of course, stocks like Nvidia. Nvidia is a buzz stock. It's a darling of the media channels. Yet what we want is to take it from being a darling of the media channels and being a stock that's in your portfolio, that you've invested correctly, you've managed your risk correctly, you've compounded correctly. It's more than just, right, people are talking about Nvidia, let me buy it. There's got to be a system and a process to it. But Nvidia has moved up almost 1,500% since 2022. And don't forget, DeepSeek came out early this year, and there was all that talk about DeepSeek, and DeepSeek was going to end Nvidia. Nvidia has gone on to set record highs in the last 3-4 months. So again, that was all wrong, all that fear mongering. TJX has climbed 160% since 2022. And we've achieved this using the MET. So let's dive in, the 3-step blueprint for consistent stock market returns in 2025, through the rest of 2025 and beyond. Now, first, we want to establish high probability investing conditions, understanding environments where you want to invest and be in the market, and times where you want to stand aside and protect your capital. To do this, I'm going to go to Metastock. And I am going to open the S&P 500. Now, I'll get more into how the functionality of Metastock in a second, but let's just focus on the S&P 500, because the S&P 500 is an excellent indicator of what the stock market is doing. We don't want to invest in the S&P 500 because it's an index and it's an average, and if you invest in it, we've looked at, you'll just get an average performance. What we want are stocks that are outperforming the S&P 500. What does that mean? We'll look at that in a second. But ultimately, a key marker that we use to understand market conditions is the highest point of last year. So this green line going across the charts. This is a tool that we've developed. The green line is the high of last year. The red line is the low of last year. When the S&P 500 moves above the highest point of last year, that is confirmation that the next bull trend is in phase. This happened in June, and since June we've had July, August, and now September. We've had continuous green months, so we are very much in bullish territory. Now if we just go back a little, just expand the chart here, this area here, this is where the talk of tariffs came in. The talk of tariffs started coming in really sort of March times. That's when we had that first decline. Generally, guys, also remember that at the start of a year, February in particular is a weak month, and we tend to see a correction at the start of the year anyway, historically. So the fact that we were seeing weakness wasn't really a surprise. It was just that weakness really kicked in through April. Now, if you go through our media channels, April was where everyone was saying, hey, the market's going to come to an end. They were comparing it to the 1930s. You remember that, guys? 1930s were all over our media channels. If you go to my media channels, particularly LinkedIn, I said to people, listen, guys, just hold your horses. Yes, it's volatile. Yes, there's, we're in uncertain territory, but the chances of the S&P 500 recovering, and then not only recovering, then breaking out and setting record highs is always higher than a continuation to the downside. And the reason for that is because there were a lot of individual stocks that were holding very well and were actually breaking out and setting record highs in April. So when stocks like Nvidia were declining quite significantly, other stocks like Berkshire Hathaway and Amphenol, for example, were holding, breaking out, and pushing up. So if you looked at it on a much bigger level, or in terms of individual stocks and looking at sectors, you wouldn't have been so susceptible to the fear mongering going on social media. Instead, you would have just said, right, okay, I can see what's going on here. There's some volatility. Some sectors are getting hit. Let's cut out of those stocks. So there may have been a time where your portfolio might have needed rebalancing. Maybe positions got stopped out. The weaker stocks you would have cut out, or maybe you locked in profit on certain stocks. But a lot of the stocks in our portfolio, we simply let them run, because all they were doing were going sideways in small ranges, and then they started breaking out and leading the market. And now all the other stocks are following. Nvidia is following, Meta is following, Microsoft is following, Google is following. So all these stocks that actually dragged the indices down in March and April have all since recovered and are setting record highs. Over 60% of the stock market is trading above the daily 200 simple moving average. That's a really, really important indicator. The 200 simple moving average, over 60% and climbing, is above the 200 simple moving average. So you have all of these indicators that simply said, apply patience, let the market settle, let the dumb money get taken out. When the smart money starts coming back in, we then start jumping back in with additional positions and new positions and compounds, etc. So I hope that makes sense, guys. Use the S&P 500 to identify market conditions, particularly when it starts breaking out above the high of last year and it starts setting record highs. And then during market conditions, these volatile periods, look at your stocks on an individual basis, cut out the weaker ones, and then hold and compound the stronger ones. So right now, we are very much in bullish territory. So where is the S&P likely to go towards? Well, 7,000 is the next likely target, as it's now above 6,000, likely to move towards 7,000. So for me, it's very, very simple. And by using the S&P 500, I'm not interested in what our news anchors tell us, what analysts and finfluencers online are telling you, because almost 100% of the time, guys, they are incorrect. They are wrong. That information is misleading. And ultimately, what they are after is your clicks, because clicks ultimately is what makes them money. So just be very, very clear about that. Okay, so going back to what I said, establishing high probability investing conditions. Very simply, use the S&P 500. Okay, once we've used the S&P 500 and with the S&P 500 setting record highs, the next step is to shortlist high probability stocks. And we use the MET to invest in trending stocks that are outperforming the S&P 500. What does this mean? Well, we've already established that the S&P 500 is an average. It's an average of 500 stocks. So that means that some of those stocks will be matching the average. Some will underperform the average. Some of those stocks will outperform the average. So stocks that are outperforming average are stocks that move up quicker and further than the index. Hence why, again, guys, I don't invest in ETFs, because ETFs will have a mixture of stocks that outperform, match, and underperform. And so what you have is an ETF that's actually just being dragged down by these two groups, the matching and the underperforming, when what you really want to do is break up the ETF, look at the individual stocks, and just pick out the strongest stocks. And they're the ones that are in your portfolio. Now, I get there's a learning process and there's technology needed to do this stuff, but go back to what I said at the beginning. You can either settle for the average and have $250,000 after 20 years, or learn to do this, spend a bit of time and investment learning to do this, and end up with millions later on in life. So the choice really is up to you. This is where those decisions come in terms of best practices that you have to decide upon. So let's go back to those stocks that I shared. The S&P 500 since 2022, since the low of 2022, which is around this area here, has climbed around 90%. With the move that's happened today, we're looking at around 90%. But have a look at the stocks that I just shared earlier. Amphenol's climbed 280%, CBOE 127%, Lowe's 97%, McKesson 183%, Nvidia almost 1,500%, TJX 160%. So you can see how these stocks have moved up further and quicker than the S&P 500 at 89%. Now, what do these stocks all have in common? All of these stocks follow this philosophy, which I call the 4PS method. I do not invest in buy low, sell high. For me, that's a fallacy that's allowed to spread through over the years across the internet. Buy low, sell high. Don't forget, guys, another word for buy low, sell high is catching a falling knife. Yet people seem to forget that. Just because people like Warren Buffett have made value investing famous, they think that's the best approach for them. But when you buy into these undervalued stocks, often what you'll find is that they keep on dropping, and very few of them actually deliver. Just getting back to break even is difficult. So we got to reverse that logic. And instead of buy low, sell high, I buy stocks that buy high, sell higher. Think of it like stairs. I'm looking for stocks that go up, then flatten out, go up, flatten out, go up, flatten down, go up, flatten down. They repeat that over decades. And so what we're looking for is this sort of pattern, which I call the 4PS method. Phase one, proven performance. If a stock has performed well in the past, at least over 12, 18 months, that's the kind of trends that I'm looking for. But I'm looking for stocks with at least 5 to 10 years of history. Within that 5 to 10 years of history, I'm looking for stocks with that proven performance that have trended very well in the past. I'm then looking for a sideways market, which is a base or a consolidation. The longer the consolidation, the bigger the breakout, guys, right? So we want to turn these expressions that everyone seems to regurgitate into actually something that you can execute on. So I'm looking for a consolidation base of at least 3 to 6 months, sometimes longer. I then want to break out from that consolidation. Once that breakout happens, this is the confirmation that the next uptrend is in play. And it's then that phase four, the new trend, which I then look to invest in. So my portfolio is basically full of stocks that are in phase four. All those stocks that I shared just earlier, Amphenol, CBOE, Nvidia, etc., they are all phase four. And the phase four typically lasts 12 to 18 months before I may take profit, rebalance the portfolio. So here's an example, McKesson Corporation, one of the stocks I shared earlier. Phase one was a massive move between 2009 and 2015. So you can see very clearly how well it performed. It then went through a 7-year sideways market. So remember that longer the consolidation, the bigger the breakout. It then had that phase three, the breakout in January 23, and then February 23 is when we entered. And you can see that since then, it has climbed 180% or 190%, whatever the case may be, since February 23. So this is a typical, very good example of this pattern, the chart pattern that I look for. And I look for this on the monthly time frame. Now, of course, applying this to thousands of stocks on a daily basis is an impossible task. And so that's where technology comes in. So how do we find stocks in phase three and phase four? Well, we use explorers for all the stocks that are moving from phase two to phase three. So what do I mean by explorers? Well, let's go to Metastock. Now, when you first open up Metastock, this is what you're presented with. The magic happens. in this top left corner where it says open power console, you can see the P. If I click on that, you're then presented with the power console. Here on the left hand side, you've got a number of buttons. If I click explore, and if I go to my favorites, because I favorited there, this is one of the new features of Metastock earlier this year. I think it was earlier this year, end of last year. Apologies, I can't remember. I think it was earlier this year. Metastock released version 19, which is phenomenal. Got lots of cool little features. One of those cool little features is that you can favorite your preferred explorers. So you can see here that with the MET, you will get these 4 explorers. Now, what are these explorers programmed to do? They are programmed to look for breakouts. We've got 2 for let me just break these down one by one so you can see for yourself. Give me a second, guys. So we've got 2 MET explorers here, one for long setups and the other for short setups for volume over 200K. So all large cap markets. So for example, the US stock market, we would use these scanners, these explorers and they've been programmed to find all the stocks that are moving from phase 2 to phase 3. And what that will do is it will go through, if we just go through the lists available, bear with me one second. Let me just close that down. And if you go to North America, you can see here that in total, you are looking at almost 20,000 stocks. Around 20,000 stocks, so 20,000 stocks the explorers will go through, and they will give you a much more manageable list of 100 to 200 stocks that are moving from phase 2 to phase 3. Now, 100 to 200 stocks may even seem like a large amount, but I'm going to show you how we get through 100 stocks in literally minutes with some analysis. So we've got scanners or explorers that will look for long opportunities and short opportunities in large cap markets, so US markets, for example. And then we've got explorers that will look for long opportunities and short opportunities in small to medium cap markets. So I'm in the UK, so I scan the UK market. We've got members in India. They will use the same scanners for the Indian market. We've got members in the Middle East. We've got members throughout Europe, and wherever they may be much smaller cap markets, they will use those scanners both for long and short opportunities. So we've got everything covered here. And so ultimately what these scanners do, these 4 scanners, is scan through thousands of stocks within minutes and give you a much more manageable list, 100 to 200 stocks, maybe more, maybe less, depending on market conditions on that particular day, of stocks that are all moving from phase 2 to phase 3, all stocks that are breaking out and starting their new trend. So what is that doing, guys? What that's doing, first of all, it's blocking out everything that's on social media, because often what you see on social media is about a market crash rather than a market continuation. So it's focusing you on what the market is actually doing. So that's the first thing. The second thing is that it is then picking out stocks that you won't find anywhere else. True wealth, guys, this is a point to note. True wealth is made from stocks not found in our media channels. That should really resonate with you guys, because if you go online, you either hear the same old AI stocks and big tech stocks, or meme stocks, for example, because meme stocks, again, get click and it's hype. We want to move away from that, and we want to find stocks that will steadily and consistently grow your wealth to large sums of money in the background. So that's step 2. We use the explorers to find all the stocks moving from phase 2 to phase 3. And then step 3, compounding and maximizing profit. We have developed bespoke charting tools to maximize phase 4. So once that phase 4 starts developing, we want to understand entry points, we want to understand stop losses, risk management, trailing stop losses, compound levels. We want all of those levels clearly marked on the charts so that we can take those values, put them into our broker account. Now, what I'm going to show you in a second meets our checklist. Our checklist is our edge. The checklist is applied to the monthly, the weekly, and the daily timeframes. every asset that is picked out by the explorers, every stock that is picked up by the explorers is referenced against this checklist. Yes, it's going from phase 2 to phase 3. Yes, it's breaking out. Yes, it's setting record highs. Yes, it's trending and it's starting its next uptrend phase. But out of those 100 to 200 stocks, we only want the 1, 2, 3, 4, 5 stocks that are the very best stocks and put them in our portfolio. We want to cherry pick the cream of the crop. So what we do is we take those stocks that have the initial list of stocks created by the explorer, and then we reference it against this checklist. And I'm going to show you how that looks. The checklist, guys, defines our edge. Now, here's the thing. Edge equals defining high probability stocks and assets. If you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. I'm going to say that again. If you cannot define your edge, you don't have one. If you don't have an edge, you will get eaten by someone who does. If you're underperforming, you don't have an edge. So we've got to adopt an edge, one that's easily identifiable, one that's proven, one that's consistent, one that's repeatable. The MET and that checklist I just shared is our edge, and it must be yours too. So let's switch to MetaStock. Okay, and I am going to, where are we? Excuse me. Okay, and I am going to now, once we have created that list, what we do is we save that list. So we run the Explorer. The Explorer will pick up 100 to 200 stocks. What we then do is we save that list. This is all part of the functionality of MetaStock. We save that list. So if you have a look here, I did the scans yesterday for the US market, and you can see that that was the 17th of September. This is my own sort of naming convention. US market, 17th of September. You can see above, that's the UK market for the 17th of September. Yesterday, there were 57 stocks picked up by the Explorer that were moving from phase 2 to phase 3, phase 3 to phase 4. 57 stocks. What I then do is I then individually open up these stocks and I analyze them. So I'm going to just go through a list of stocks, pick out the ones that are looking very tasty at the moment. So one of those stocks, let me just take this off. Right, so I select the stock, in this case, Curtis Wright. I've chosen the template here, the 4-screen breakout strategy, and I am going to open the chart. Let's close this one down in the background. Sorry, guys. Yeah, there we go. All right. Okay, so here we have it. Here's one of the stocks that has been picked up in recent days. Curtis Wright. Again, not a stock I was familiar with because I'm here in the UK. I wasn't familiar with this stock. It got picked up by the Explorer. When I look at it, it is a powerhouse of a stock. First of all, look at its performance. Remember that. Remember what I said about we look for stocks that move up like stairs, up, flat, up, flat, up, flat. Curtis Wright is a perfect example, but look at its history. Its history goes all the way to the 1990s, and it has performed incredibly well. It's now trading at over $500 a share. Now, what are we looking at? Well, first of all, phase 1, very good performance history. This recent run from 2020 all the way through to November 2024, massive run. That's your phase 1. Phase 2 is this correction. Phase 3 was the breakout in May when it moved above the highest point of last year. All stocks that I look at, guys, a point to note, when I invest in them, they're all setting record highs. Now, what's important about this is that because they're setting record highs, I can assume that those stocks are healthy, and I don't need to be spending hours analyzing those stocks in terms of the fundamentals. So it saves me a lot of time. Yes, you may want to look at the fundamentals as an added layer. I don't do that because I personally don't have the time or the inclination to want to do that. Ultimately, if a stock is setting record highs, that for me is the signal that this stock wants to continue pushing up. But it has to go through those phases. Phase 1, phase 2, phase 3 is the breakout record highs, and phase 4 is that trend developing. And you can see that it broke out around $400 where it set record highs, and it's now trading at over $500. So it's moving to the upside. Based on its history, we know that it can move up for many, many months. So this is actually quite a new trend. Okay, then we move to the weekly time frame. So this is where that alignment comes in. I said earlier that what I look for is alignments between the monthly, the weekly, and the daily. I've got that checklist system. So the monthly is very straightforward. I apply the 4 phases. I then go down to the weekly. Now on the weekly time frame, again, very straightforward. I've got a trend filter that turns green when the trend is in play. And I want it to be above the 50 simple moving average and above the 200 simple moving average. A checklist that tells me that the weekly is in good stead. It's aligned with the monthly time frame. It's bullish, as is the monthly time frame. So the monthly and the weekly are aligned. Now we also have a ribbon here at the bottom, guys. These are one of the cool features of MetaStock, where when your indicators are aligned, when our indicators are aligned, we can have a quick look here at the bottom. And if it says bullish, that means the indicators are aligned. If there is a gap like it was here, that's the indicators have come out of alignment, and that may be a period where we have to stand aside or manage our positions. But right now it's looking bullish, and we can see based on the past trend that when it remained bullish for a very, very long period of time, from 2022 all the way through to 2025. So we could potentially see another trend unfold going forward. Remember, what's happened in the past is likely to repeat in the future. Now, that's the weekly. The weekly is aligned with the monthly. What we want is the daily to align with the weekly. So the weekly is big sister, the daily is little sister. So we've got similar indicators on the daily time frame. The trend filter is green. Okay, it's a little bit of gray because it's flattened out a little bit. That's okay. Overall, though, it's moving to the upside. It's above the 200 and the 50 simple moving averages, which is what we want. It's above the 200 simple moving average. And we've got that bullish ribbon confirming that overall, this stock is bullish. And we've actually had this stock in our portfolio since earlier this year. What I'm looking to do now is add further positions. I'm looking to compound. So how do I add further positions? Right, that's where the daily in the bottom right comes in. So we just looked at the monthly in the top left, we looked at the weekly in the top right, and the daily in the bottom left. All three time frames, based on the indicators that we have, say that this stock is moving to the upside. Now, I then go into the daily in the bottom right. Now, the daily in the bottom right, first of all, if I compress the chart, let me just bring on a little bit more data. You will see that there are entry points. Those entry points are confirmed with these diamonds. The diamonds tell you that this breakout is confirmed by here, by here, by here, by here. Now, if it's a strong breakout based on our set of criteria, you'll get a diamond. If it's a weak breakout, you'll get circles. So the software is even filtering out the weak breakouts from the strong breakouts. So you can really pinpoint the very best entry points. Now, if you decide to enter in on the weaker entry points, which is also a possibility, you may want to reduce your risk. So if on the higher probability entry points where the diamonds are, you want to enter there on full risk, which could be 1% or 2%, your reduced risk may be 0.5% or 1% on the weaker signals. Me personally, I stand aside on the weaker signals. I'm only interested in the very best entry point. Now, with every entry point, so if we look at the most recent entry point here, you're given an entry level based on a particular logic. You're giving a stop loss based on a formula, an ATR formula. So it looks at the volatility of each asset using ATR, which is average true range, and it will then create a stop loss unique to that asset. So if you think about it, for example, Tesla is a very volatile asset, whereas Amphenol or Curtis Wright isn't as volatile as Tesla. So Tesla will require a much wider stop loss. So the software will do that for you based on the algorithms that we have created. And then you've got this level up here, which is the compound level. So when the asset moves to this level, this is when you can consider buying more. Now, of course, you can be aggressive and you can buy in every time the signal is produced and add more to your portfolio. That's one way of doing it. I prefer to allow my positions to move, give them a little bit more space, give them some time to grow and mature, and then I buy the next signal at the right time. So I'm not overly aggressive. You want to You want to be very steady with how you build your portfolio, steady over time, and that's how you will then achieve large compounded returns. Now, another point to note, guys, which is what I love about MetaStock, is that every time frame comes with its own expert commentary. So within the software, we have programmed the commentary to sort of be your little voice on your shoulder telling you what's happening. So you can see here, the blue bars indicate that Curtis Wright daily, weekly, and monthly charts are aligned and are now all bullish. That's a little feature I forgot to mention, guys. You can see that the bars are blue. When the bars are blue, that means the monthly, weekly, and the daily are moving up together. So again, a very clever feature of MetaStock. You can see that it was blue, and now it's gone to the sort of standard red and green, and that's because the alignment has fallen out, and that's okay. It's fallen out here as well, but it just flattened out and then continued. It goes back to what I was saying. We want those up, flat, up, flat, up, flat, those kind of trend features, that trend structure. But the point to note, guys, is that every time frame comes with its own commentary. So if I go to the monthly, if I open up the monthly time frame and I go to view expert commentary, you can see that the monthly time frame has its own commentary there as well, and you've got that on every time frame. All right, monthly, weekly, and daily. So if it's a good stock and you should be investing in it, the commentary will tell you. If it's not a very good stock, then the commentary will also tell you that. So once you get to grips with the software, you've then got that commentary that will sort of confirm and teach you as you go along. All right, let's have a look at a couple of other stocks. Another stock is Fix Comfort Systems. Again, not a stock that I was familiar with until it actually got picked up by the explorers. But let's just do a very quick analysis. Look at its performance, guys. Remember that sort of stair analogy, up, across, up, flat, up, flat, up, flat. That's exactly what Comfort Systems has done. It's now actually trading at almost $800. So you know, it answers that question: how high can a stock go? Well, let the stock dictate. It's above the highest point of last year. It's setting record highs. It's shooting ahead. It's in our portfolio. It's been in our portfolio since earlier this year when phase 4 was confirmed. If you look at the weekly is trend filter is green, above the 50, above the 200 simple moving averages. And if we go to the daily time frame, the trend filter is green. That gap up was on earnings, so very good move up on earnings. It's then continued above the 200, the 50, sorry, the 20, the 50, and the 200 simple moving averages. The ribbon is blue as well, guys, here. So if we do a quick scan of the ribbons, you've got green ribbon on the monthly, green ribbon on the weekly, and green ribbon on the daily. And that is confirmed on the daily in the bottom right with the bars being blue. So it's a no-brainer that this stock should be in your portfolio. All breakout signals, if this breakout signal is confirmed today, so it's another bullish move today, if this is confirmed, then we will have the entry points, the stop losses all displayed on the charts for you to then put into your broker account. Now, the other point to note, guys, is that as the stock develops, we've got trailing stop losses. So you can see how far the stop loss is away from price action, and that's critical because it gives the stock the time and the space it needs to develop. 12 to 18, 24 months down the line, when it tops out, it will hit the stop loss, and you can then cut out with 90% of your stock profit locked in. So what this system does is it removes all the guesswork. You've just got to learn how to do it. As I said, it's the same system that we use for our hedge fund. It's the same system that's helped our community members make those 100% plus returns over the last 2 years. Very simple, very straightforward process to learn and understand. I'm just going to show you one more, and what I want to show you with this one is how this stock actually failed. This is a failing stock. It's a stock that didn't work out. Now, it looked good at the time because remember, guys, a good trade is one where you follow your trading plan regardless of the outcome. We're not interested in winning and losing. We're interested in profit versus loss. There will be losses. Losses are part and parcel of the process. If you can't stomach losses, this isn't for you. Look for something else. However, if you understand that you cut losers short, let winners run and compound, losses become insignificant. Now, Inchu was a stock that met our criteria back in sort of May, June. It was one of those stocks that recovered very well from the Trump tariffs, started moving ahead. We entered, came to $800, failed, and it's now back in phase 2. So at the time of entry, which was a couple of months back, it was doing very well. If you go to the weekly, you can see here the trend filter was green. above the 50, the 200 simple moving average. The ribbon was blue, excuse me. The ribbon said bullish. Also on the daily in the bottom left, at the time of entry, which was around this area here, it was doing very well. Trend filter was green above the moving averages. The ribbon at the bottom was green. It then failed. Now, why it failed, we can all speculate. At the end of the day, I had my risk management in play, which was 1%. I had my stop losses in play. I cannot control what a stock does next. The likelihood is that it's going to find support around the 200 simple moving average and continue moving up. And if it does, I can then get back in again when it meets my criteria. Until then, I've cut out of this position. And the reason why I cut out of this position was because at the time when it failed, it hit my stop loss. So my stop loss, my entry was based on this signal here. My stop loss would have been somewhere down here. It reversed, hit my stop loss, stopped me out for a small loss. But it's been absorbed into the profit that I'm accumulating on Fix and STX and all these other stocks that are in my portfolio performing very, very well. Let's see if STX, I just want to bring STX to your attention as well. Just give me a quick, give me a hot minute, guys. It's been a little bit slow. Come on. Looks like it's frozen up on me. Let's give it a second to load. Yeah, it's loading up. There it is. STN, Stantec. Sorry, not Stantec. Stantec's not the stock I wanted, although Stantec is one to keep an eye out on. The one I wanted, here we go. Seagate. Seagate Technologies. Again, a stock that I wasn't familiar with, and it has really shot ahead since May of this year. And again, it just meets our criteria. Monthly, weekly, daily, all aligned. If we go to the daily in the bottom right, you can see the bars have been blue going all the way back to around this area here, which is May. Look how many breakout signals, big diamonds, telling you good, strong breakout signals. So these are the kind of stocks that you want to be looking at, investing in, holding, compounding your portfolio, and then rebalancing. Okay, guys, I'm aware of time, so I'm just going to quickly finish off. This should now make a lot more sense in terms of how can you push your performance to 30% a year and push your total returns over the next 20 years into the millions instead of settling for tens of thousands or hundreds of thousands. This now all makes a lot more sense in terms of how you can get on top of your wealth goals. And ultimately, the most important part is that legacy element that I alluded to, which is if you learn this, you can then share this and get your own kids and loved ones to carry on the hard work once our time on this planet comes to an end. So this is the 3-step blueprint, guys. First of all, step 1 is you want to pinpoint when to invest for maximum ROI. This is market conditions, how we use the S&P 500. Step 2, identify top assets to invest in for maximum ROI. That's where the explorers come in, and the analysis, the four screen setup, monthly, weekly, and the 2 daily charts. And then step 3, clarity on how to invest for maximum ROI. This is where that trend following strategy execution comes in. So once you've done your alignment, the monthly, weekly, daily, you then go to the daily in the bottom right. When the bars turn blue, you've got your entry points, your stop losses, your compound levels, trailing stop losses, all on the chart that you can then move into your broker account to start turning your analysis into profit. This is the overall sort of trading plan, if you like, the edge. Use the Explorer, step 1, use the full screen setup, step 2, create a risk management framework. I talked about top risk and lower risk, no more than 2% per position typically. Then use the daily in the bottom right for the positions, your entry points, your stop losses, move them into your broker account. Place a set of stocks, take 10 stocks with 1 to 2% risk each. Then what will happen is that some of them will, in an ideal world, they all return a profit, which can happen. But sometimes what typically happens is a mixed bag. Some will be losers, some will be break even. The ones that go on to return a profit, you hold and you compound. Step 7, strategically hold and compound. Step 6, cut out of losers. 7, hold and compound. 8, manage with the trailing stop losses. Again, that's all displayed on the chart, so you're not second guessing where to enter. No emotions involved. Very, very objective approach. Take profit and rebalance every 12 to 18 months. Repeat this process for life. And the last part, train your loved ones to carry on your good work, because that's where your legacy comes in. So what do you get with the MET? Well, you get the 4 explorers, you get 16 expert advisors, you get 11 bespoke indicators, you get a template, which is that 4-screen setup. You get a detailed manual explaining everything. One thing to note, guys, is that this is not a black box system. There's complete transparency in all the values and indicators and algorithms that go in at the back end. You will get full understanding of everything. And you've got a wonderful support structure, not just from us at Sublime Trading, but I can tell you that part of the reason why I love working with Metastock is the support structure is second to none. Emails get responded in a good time. Online chat when they're online are excellent at dealing with your issues. So you'll get the same sort of service from us here at Sublime Trading. The MET is a one-time offer of 1497. That has been reduced to 997 as part of this webinar. In addition to that, by the way, guys, that's a one-time offer. Okay, 1497. It's not a weekly or a monthly or an annual subscription. It's a one-time payment, 1497, which is 997. And you'll also get these MET bonuses, a one-to-one onboarding call with myself, so we get to discuss your portfolio. You get a private community where we discuss all the daily setups, and you'll also get a live bootcamp recording, which will be in your members area, and you'll be invited to future live training events at no additional cost. So the bonuses, which total $3,100, you don't pay that. You don't pay the full price of 1497. You've got everything that I've talked about today for one-time offer of 997. Over to you, Jeff.
Sorry, Zaheer. Zaheer, do you have time for just a question or two?
Yeah, absolutely.
One of the questions we have is, what markets do you recommend this for?
All markets. So we focus on US markets predominantly, but we also look at UK stocks, we look at commodities, we look at gold. So some of the commodities we have in our portfolio, gold, silver, live cattle, all in our portfolio since, gold has been in our portfolio since March of last year. Silver has been in our portfolio since earlier this year. Live cattle has been in our portfolio since earlier this year. So you can apply it to, and Forex as well. So we're long on the euro dollar. We're short on the euro. Well, we're basically short on the dollar because the dollar is weakening at the moment. So you can apply it to all markets.
Okay. Another question we have is about how long are you holding a typical position?
12 to 18 months, sometimes longer, often longer.
And how often do you get a signal for it?
So that will be based on market conditions. So if we go back to, let's say, for example, STX, we just have a look at STX here. And if I open up the daily chart, you can have a look at the fact that the trend has been in play since May. But if you look at the number of signals, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 signals since May. So if you've got a portfolio of stocks and they're all breaking out at different times, you'll have a plethora of breakout signals that you can then put into your portfolio. So you'll have ample opportunities to enter into all these stocks.
Zaheer, you've just come up with the word of the day. Do you generally, for money management, when you buy a security, do you generally buy all at once, or do you generally stage in? What is your recommendation there?
So I have a very strict risk management framework. I don't risk more than 2% per position, and I will risk all of that 2% at one go, and I will spread out my portfolio across 10, 15, 20 stocks, and then I will cut out the ones that fail, and then the ones that move in my favor, when they hit my compound level, buy another position, add another 2% risk, so on and so forth.
All right, right on. Thank you very much, Zaheer. Unfortunately, we're out of time. I'm going to talk a little bit about how to get this offer, but I want to say thank you for being here.
Lovely. Cheers, Jeff.
All right, cheers. Okay, let me go ahead and do this. All right. Greg was making fun of me just a little bit because I always say, okay, I need to do this and do this and do this, but it's important. It helps me not forget things I need to do. In any case, MET has been A very, very impressive system. You get the one template, the indicators. I love the multiple time frame view. The expert advisors, the scans, all of that stuff's available. Zaheer did a really good job about talking about it and kind of providing information on it. So one of the things that we did sit down and do initially, and we do this with a lot of the products, we just want to make sure, because we offer them, well, we want to make sure they work for you. You know, as I said, because we offer them on a money back guarantee. But that's not the only reason. We want them to work for you as well. So we do have about a 2.5-hour boot camp where we walk you through the product and how to use the product, how to set up the scans. Zaheer did a really good job with that, and that'll be available for you as soon as you get your order. So that's just included as part of the package. So normally, as Zaheer was saying, this is available at $14.95. Here at the event, it's going to be $9.97. You'll get that boot camp training that's included. If you haven't tried Metastock, I'll remind you, we've been talking a lot about Metastock, but it has been rated #1 in its price category, and it's won that for 32 years in a row. We back it with a money back guarantee. So it gives you a good reward, low risk scenario, kind of something you wish you had on all of your trades, right? So you can do this. You can give us a call, 800-506 I'm sorry, this is the international phone number. I think I have the actual. Let me give you, if you want to give us a call and you're here in the US, give us a call at 800-882-3040. You can also visit us online at metastock.com/saleschat or metastock.com/sublimemet. So with all that being said, give this a go. Great product. Brad says many of the stocks you showed have moved a lot. Is it safe to say that your methodology would have got into a stock at the start of a long move? That's been my experience. Unfortunately, Zaheer's gone because we kick him out. There's a reason we kick him out, just so you know. It's just so that when he leaves, we don't. But I would say with the risk management and the stuff that's in there, Brad, it works really, really well in terms of keeping you in winning trades. We just did a lesson on CANSIM, and one of the things that Bill O'Neill always talked about, and when Zaheer talked about it, it kind of reminded me of kind of a class we just did. Bill O'Neill, founder of IBD, the CANSIM method. He's like, a lot of people say buy high and sell low, or buy low and sell high. My philosophy has always been to buy high and sell higher. Again, and I think this is a great way to do that. What you're looking for is stocks that are breaking into new all-time highs. So metastock.com/sublimemet, 800-882-3040, or metastock.com/saleschat. So there you go. I very quickly want to thank our sponsor, one of them today, Stocks and Commodities Magazine. They've been a great supporter of the Metastock conferences that we've been doing over the years. You can find out more about them at traders.com. Published in their magazine since 1982. They still do the printed editions, and if you're in the US, you'll get that as part of the subscription. As part of a subscription, you'll also get access to all of the 17,000 articles that they've done. And I know as a trader, one of the things that I try and kind of keep in mind, not just in trading, but in life in general, is like you're either going to be getting better at what you're doing, you're going to be improving what you're doing, or you're going to be falling behind. I think that's a real kind of truth. You're either growing or you're not, right? One of the things I like about Stocks and Commodities is every month they send me a lot of really good ideas that I can kind of read through, learn about, all that kind of stuff. So www.traders.com. A big thank you from me for all the support they've given us over the years. I really appreciate those guys. So in any case, and girls. I should probably say that. We are, of course, Metastock. We've been talking about Metastock the whole event. All of the specials, including the ones that Zaheer just talked about, can be found at metastock.com/comp/promo. So there we go. Our next presenter is already talking. Norm, how you doing?
Yeah, the dog started barking. Listen, can I just start with a plug for Metastock just real quickly? Because I work with traders that have all kinds of platforms. And the previous presenter mentioned something that I really want to emphasize. You know, listen, you can look at a lot of platforms and they all, you know, they'll all put up the chart. They all have their learning curve. They all have, but when it comes right down to it, support is where the difference is. And Metastock is right up there at the top with support. This is not me talking about it except for my particular use, but my feedback. So, you know, I wanted to just, if you're like me and you just can't stand, you know, when you cannot get the help that you want, you know, this is the prime object. This is what in the boardroom, I'm sure they say in the beginning, it's all about support, because that's what you're known for. So I want to kind of bring that up.
Awesome, thank you. Do you want to do me another favor, Norm?
Sure.
Since you're in here already, I'm going to give away this book right now. So this is one of Steve Bigelow's books. It's called Eliminating Emotions, Candlestick Profits. Steve was a good friend of Metastock for a long time, and we have a whole bunch of his books that we're going to kind of give away. So what I need from you, Norm, just to kind of determine who the winner is if you could give me a number between 2 and 5,089, I can decide on who gets this book.
I'm going to go with 5,089. I'm going to go with 4,999.
All right, that is Sharon S. with a Gmail address. Sharon, if I drop you an email next week and say I want your address so I can mail you a book, it's not a scam. Norm, I can see you, I can hear you. I'm going to let you go. Go for it.
But do you love me? You know, you can see me.
I never stopped.
Okay, great. And hi to your beautiful daughter, who's very, very funny on your field. Let's see. Somehow I'm seeing trying to speak. All right. You can hear me okay, though, right?
Yes, sir. Yeah,
okay,
I can hear
great.
you great.
All right. I want to change things up a little bit today. First, I want to know how many of you actually are prop trading or considering prop trading. Can you give me kind of an idea of where you are in your prop trading? Just drop it in the chat if you want. Just kind of give me an idea. I know traders tend to be very quiet and unassuming, but I have a general approach here about prop trading that I can get a little bit more specific. Okay, great. Thank you. All right. Let's talk about how not to blow out your funded account and start collecting consistent profits. This is from really a master series that is about to be released. This is one of the sections that I'm going to present today, because I think the more specific that I can get with you as far as how to trade and with relation to prop trading. Prop trading is a whole different world. I believe that prop trading is probably the most significant positive change that's happened to futures trading for the individual trader since, I would say, exchange traded options, or even the micro futures account. This is big because the fact that you can trade somebody else's money, and that takes away a lot of the pressure. And the disciplined trader, you can see our logo down here. We've been around since 2000, and our initial emphasis was on the mental and emotional part of trading. And when you can bring the cortisone level down, you can follow your trading plan more directly, more consistently, more profitably. And the previous presenter actually mentioned this in his way, in that your success as far as winning and losing, and whether you're trading properly, had a good day or bad day, is whether you followed your trading plan, not whether you won or lost. So let's get into it. This is one of the keys that I think, and one of the most underappreciated approaches that we can take, is the limit order. And there is a magic to the limit order when it comes to prop trading, and I want to go through that with you today. And this is good for whether you're retail trading, prop trading. I'd like you to understand a little bit more about why professional traders like myself love the limit order and use it very consistently. If you don't know who I am, I've spoken on countless domestic and international stages for the last 4 years. I love to travel. I've been to 78 different countries. Of course, I counted the Caribbean islands, about 5 or 6 of them there. But I love to travel and to be able to present in Singapore and the European countries and so on. This was a love. This was what I wanted to do right from the beginning, and I've been able to do it. So I love it on stage. They usually bring me on first because I'm kind of a high-strung guy. So I think I can get the crowd going, like I hope I can get you going today. I've written 4 books and dozens of industry papers focusing on building and running responsible trading plans. In fact, this book is still, I just looked today, is still written 11 or 12 years ago, How to Design and Construct Effective Trading Plans, still on Amazon, as well as a book written about me and some of the things that I've said in the past is also there. But I'm also coming out with a book next month in early October called Their Money, Your Profit, Cashing In on the Prop Trading Revolution. I've been very excited about putting together this book. It's not a long book. It's only about 100 pages, and it succinctly talks about the opportunity and how to take advantage of it in prop trading. So if you're not a prop trader now, or if you're struggling as a prop trader, you may want to take a look at that book when it is published next month. I am known really for infusing the importance of mental and emotional discipline in my talks and writings. I believe, I mean, we all know that in the day trading arena, that especially in futures, I'm sure it's true in stocks also, that 90% of traders are unsuccessful. I guess that includes the break-even people, as well as most of that number are just people who are losing money. On the other hand, there are probably 1 out of 10 people, if lucky, that are doing anything on a daily basis to help their mental and emotional well-being. I believe those 2 numbers are largely related. I believe that the reason, and this comes from my coaching over the last 5 or 10 years, and my running large trading rooms, that the issue is with most traders, the mental and emotional. So if I can infuse mental and emotional quelling or neutralizing techniques in my trading plans, I do it. And so you're going to hear a little bit about that as we move along in this 45 minutes or whatever we have here. In this trading room of 63 professional traders, this is not the exact room. I couldn't find a picture. It was back in the 80s. Didn't take any pictures of it, but I did find this picture. It's very similar. The only difference is that you see these little TVs, these little monitors here. We had actually a flip chart that, with the click, 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 with the numbers turning around. That's how far back this was, where we were trading for. All of these were professional traders who were managing client accounts on the telephone and consulting with their clients on a daily basis. Well, in that room of 63 professional traders, I learned 2 things. One is that simple trading plans work. And the second thing I learned is every trader is different. And I mean every trader. I don't think there are 2 traders that are alike. And that's the reason why somebody with a great trading plan can hand you a trading plan that they're making a lot of money on, and somehow you can't seem to get the same result. Most of it is because you can't follow it, because it's asking you, say, to be patient, and you're not a patient person, or somebody that so that kind of thing, those mismatches of personality and trading plan, very, very important. That's why I always include a one-on-one session with me to help you to match the trading plan with who you are. I can show you some of the nuances that you can apply. And simple trading plans work. And really the reason, again, is a mental and emotional tail to it, meaning that the more indicators that you have on a trading plan, the more there are reasons many times to doubt taking a trade, and therefore not getting in immediately and appropriately, and wind up chasing markets rather than even letting them come to you. So simple trading plans work. And you're going to see a couple of charts on the kind of charts that I work off of. Again, this is where I learned how to build trading plans that work for traders and include what I call nuances, which are small tweaks that you can make in the basic trading plan that can help fit you so that you can follow it more succinctly. I hope that the meaning of that translates well to you. All right, let's get into a little game theory, because I don't like to call day trading or prop trading where you're trading their money and getting 90% of the profit that you earn. It's not a game. You really should be considering it as a business. And the late Joe Ross wrote a book actually called Trading as a Business, where really everything that you do, losses and gains, this is all part of the overall success of your business. Okay, but let's talk. I think we need to talk about what is called game theory, and I want to talk about it because there are certain things in prop trading that are working against us to succeed. The stringent rules, and I'm going to mention one or two of them, the most stringent, and how to overcome them through a couple of techniques. But understanding game theory is very important. Game theory is the study of mathematical models of strategic interaction. Now, strategic interaction, it's not strategic interaction really is about watching the environment and what they're doing and letting that dictate your response to that or your action. So it's not a matter of doing the same thing all the time. It's a matter of looking at what's going on around you and making the decision based on that strategic interaction. Okay, so let's take, since I was a semi-professional blackjack player for a couple of years until I couldn't get into this was in Lake Tahoe. When they find out that you're a card counter, they're very they don't let you in anymore. And so I wanted to show you why, in a way, an example of strategic interaction. When you count, and I'm going to give you a tip on counting cards, a very simple tip. This is the basic of card counting. You've heard of card counters in blackjack. What you're doing here as a card counter, now it's good that the dealer shows you all of the cards. Now I'm going to talk to you just about the old days where there was one deck in the dealer's hand, and she would deal the cards face up so that you saw all the cards, and then she would remove all these cards and then deal again from the remaining cards in the hand. Okay, so let's look at the first hand that is being dealt. What you want to do here as a card counter is you're counting the 2s, 3s, 4s, 5s, 6s, 2, 3, 4, 5s, and 6. Every time you see one, you say to yourself in your mind, +1. Okay, so 1, 2, so +1, +2. I'm looking here, +3, +4. Again, I'm counting 2, 3, 4s, 5s, and 6s. So I'm looking here at a +5, +4. When you get good at this, you can actually glance at it and see it. So we got a +4 here. Okay. Now, again, you're not again, but you're also looking at the 10s, jacks, queens, kings, and aces. 10, jack, queens. So all the picture cards, the ace and the 10. When you see those, it's -1. Okay. So and what's happening here is that if you look at the exposed cards and you come out at the end of counting all of these cards, the pluses against the minuses, and you have, say, a +3, that means that there are 4 high cards left in the deck to be dealt. Okay, remember, she dealt these cards, and now with the remaining cards, she's going to deal a second hand. So we can we can tell what's in the remaining cards by looking at what is spent. and we're looking, we want them to know, we really want to know how many 10 cards are left in the deck, 10s, jack, queen, king, ace. Because if we know that, then we know that that we can hold on a lower number on certain situations. There are rules to when to take a hit, when not, but generally you can adjust that by sticking to a lower number and allowing the dealer to bust, because she has to take hits until she's over 16. Okay, so what we're doing here is we're looking at this first hand. We're seeing that. Let's see what we have. I said we had a +4, and we have 1, 2, 3 cards right here. So in this hand, we have a +1 count left in her hand. That's really not enough to do anything different than play straight blackjack. But if it was a +2 or 3, I would put down twice my bet or 3 times my bet, because I have that edge in the next hand that she's going to deal. I go through all of this so that you understand that when you are playing a game, and when you're applying game theory, and I'm applying that to prop trading and really any trading, there are edges that you can ascertain based on what's coming at you. And in this particular case, what's coming at us is the next hand being 10 rich, enough to put an extra bet down and adjust our, in trading, its position sizing. In blackjack, it's the amount that you're going to bet. And so we let the hand play out after that, and we have an edge because we know that the deck is 10 rich. Okay, this is game theory, and we in the game of prop trading, there are rules that are different than the rules in when you were trading normal, let's call it retail accounts. Okay, I think enough about game theory. Let's get into it. I just wanted to impress on you the importance of edges and the upcoming differences in prop trading. Okay, let's see if we can get this. So here's what we're up against as prop traders. There's a 5% drawdown rule where the loss of open trade equity is counted against you. Okay, 5% is very tight. As a professional trader, and I worked for Payne Weber as a commodity trading advisor. I also ran that room that you saw, and so on. But as a professional commodity trading advisor, when they give you millions to trade, 5%, 10% is usually what is kind of a temporary red line, because clients don't like to hear double digits depressions in their accounts, and really it's a good level to start taking a look at what's going on. But 5% is very tight, and that's what's going. So you've got a very tight drawdown rule when you're dealing with prop trading, and they count open trade equity against you in that drawdown rule. An additional work against you, so to speak. Okay, so what does that mean? It means that if you start with a $50,000 account, and all of my examples today will be about a $50,000 account. All of my accounts are with Apex or Top Step, but you can, plenty of out there, but most of them model the rules that I'm giving you right now. In a $50,000 account, you need to get to $53,000, and then you get funded. And when you get funded, another $3,000, and then you start getting paid. But in a $50,000 account, if you have a trade on, you put on a trade, it's up $1,000. You don't take it. You put in a break-even stop because you want more, and you let that money come all the way down to break-even, and you're stopped out at break-even. Now, if it's your own money, you say to yourself, hey, $50,000, I have $50,000. Yeah, I should have taken that $1,000, but I didn't. But I still have my $50,000. I'm okay. Well, you're not okay. You're not okay if you're a commodity trading advisor. And in that room, if somebody did that in that room, they'd be in my office in a moment if I saw that. You cannot give away open trade equity. You can't give away 2%, 2.5% of open trade equity and just give it away. They count that against you. So in prop trading, when you started with that $50,000, there is a 5% drawdown level, 47,500. You can't breach that, from 50,000 to 47.5. Well, if you gave away that $1,000 in my example, it wouldn't be 47.5 anymore. That line would then be 48.5. So they count that open trade equity against you, and your next trade, you only have a floor of 1,500, not 2,500. So this is a major contributor to how you should. This is the game theory part. This is what they're handing you. They're handing you a tough hand, and you need to play that hand. And to play that hand, you need to do a few things to counter that, and that's what this session, that's what my master class is all about in general. But this piece is also about that, one of those pieces, and that is the limit order. Okay, so again, the 5% drawdown rule counts that loss of open trade equity. You cannot let that dissipate. Okay, now because of this, we have to find ways to offset this disadvantage by prioritizing capturing open trade equity at or near its full capacity. So this is the touche. This is what we do as a prop trader that we normally would not have to do in our retail trading, and that is to, when we get open trade equity, look to grab it. Now, you know, there are conditions there. I mean, you don't want 2 ticks and grab it. You want a meaningful amount to grab, and that's based on your general trading plan principles. Okay, but but again, we are prioritizing the capturing of open trade equity, because if you capture open trade equity, that actually adds or pads your distance to the line. So let's say you started trading and you're $1,500 from that line. You did what I told you you shouldn't do before, and you have a $50,000 account, and you're at 48.2. Okay, 48.5. Well, in the next trade, if that same occurrence happened and you were up $1,000, and you took that $1,000, all of a sudden your equity would be 51,000, and your distance from the red line, that bust out line, would again be 48.5, because you've padded your distance by $1,000. So it's very, very important to capture and prioritize open trade equity. Okay, I wanted to point you to a book that I found very important for my business and for my trading. I'm applying it here. It's a book called The One Thing. I don't know if you've ever seen this book, but it's by Gary Weller and Jay Papps. Check. Here's the expression of the one thing. Here's the one point that the one thing asks you to do. Okay, it asks you to ask the question, what is the one thing that I can do that by doing it, everything else will be easier or unnecessary? What's the one thing that you can do? Whoops, I missed a word there. What is the one thing that you can do, or that I can do? You can ask these questions to yourself. What is the one thing that I can do such that by doing it, everything else would be easier or unnecessary? Okay, you can do that in business. You can do that here in trading. And the one thing in prop trading is this: focus on the red line, not on your equity. Okay, I will trade a whole day without looking at my equity. I mean, I understand where it is because I know what I've gained and I know what the balance was. I'm not concerned with that. I'm not looking at it. I'm not staring at it. I don't care about it. All I care about is focusing on my distance from where I am to that red line. Again, and I do that through understanding that capturing open trade equity is going to be my key to staying away from the red line. So the one thing in prop trading, the one thing, as such, by doing it, everything else will be easier. Making money will be easier. Getting to 53,000 and getting funded will be easier. Getting to 53,000 and start getting paid will be easier. And all of the other things that you think are important are probably unnecessary. Focus on the red line, not on your equity. And to do that, one of the basic tools that we can use is the limit order. Okay, now, until our account balance in a $50,000 funded account is over 60,000, so you're funded And although you can start getting paid after, actually the number is 52.6, but call it 53,000, you can take a little bit of money out. But I always recommend to my people that are in that situation, just continue to trade until you're at $60,000 or more, because until your account is over $60,000, the limit order is our #1 weapon for prop trading success. The thing about that $60,000 level that I talked about is at $60,000, you actually have almost a $10,000 cushion to the red line. Now, there's a red line in the funded area too, of which if you break it, you got to go back to qualifying. So actually the number is 9.9, because in a funded account, in most of these firms, the red line in the funded phase is stuck at $50,100. I don't know why they picked that number. Well, there are reasons, but I don't want to go into that now. But the idea is that in all other phases, in the qualifying phases and the funded phase, until you get to 53,000, the red line follows you. That $2,500 follows you, or how much, or whatever you've collapsed it to. But when you pass 53,000, that red line stays at 50,100. So at 60,000, you're now almost $10,000 cushion. Now you can start trading with a little more freedom. You can start increasing your position sizing and so on. It's a lot of things that you can do. But until that point, until you get very clear distance from the red line, you want to utilize the limit order. Okay, the limit order is an order, if you never saw the definition, to purchase or sell a futures contract at a specific price or better. I'm gonna check the time here. Okay, let's take a look at some of the uses of the scalp, of the limit order. The first is the scalp. Now, I've never been a scalper. In that room of traders, about half of them were scalpers, and most of them were exclusively scalpers. They never let anything run. A lot of them did very well. To me, it looked tedious. It looked like you had to do a lot more work than just letting something run and having a nice big trade. But there are very big advantages in prop trading to be a scalper. And so when I'm prop trading, I am a scalper as well as I'm not a total scalper. Half the positions that I apply when I put on 2 contracts in a futures contract, one is a scalp and one is a runner, where I'm defending that open trade equity all the way up. So there's a number of things that we need to talk about. We can't talk about all of them here, but the idea is that the scalp is one technique that's easy to apply and helps you be successful as a prop trader, okay? It's a high probability situation when you're scalping, because the less you ask for, the more likely you are to get it. I guess the best example is when you're on your first date and you had nice dinner and you walk your date home, and you're at the door, and if you ask for a little kiss on the cheek, you're probably going to get it. You know, in fact, if you get a handshake, didn't go well, you're going to get the handshake. You got a pretty good shot, a very good shot if it went well, a little kiss on the cheek. But to ask your date to, can I come in and can we have a little coffee and have another nightcap, that's not going to happen most of the time. So the scalp is the kiss, okay? It's a high probability situation because the less you ask for, the more likely you are to get it. Now, the trigger that you use must be tested to be reliable to move early to profitability. I call it a pop. Okay, you've got to have you have to have a tested trigger when you get into a position. You don't have to, but I'm just saying if you want to create the edges that I'm talking about, you want to have a trigger with a pop upon application, meaning that when you put it on, you don't want to wait more than a couple of candles to see the movement in your favor by enough to take a scalp. Let me give you an example. Here's a similar type chart that we use. You can see it only has a couple of moving averages, and it's a simple candle chart. I like to trade from the 5. A lot of my people like to trade the 2. I want to show you exactly how I generally apply. Now, it really doesn't matter. I won't go into what each of these, I use EMAs, the exponential moving average, but the idea is that the white is a longer term moving average. A lot of people use things like the 50 and the 20 or whatever. One is a shorter moving average, one is a longer term moving average. Now, when the shorter term moving average is over the longer term, then that's a positive situation, which means that I think you can understand the idea of the shorter term. If you're using, say, an 8-bar exponential moving average as this, let's say you're using a 20 here and a 50 here. What's happening over 20 bars as an average is compared to what's happening over a 50, and that's where you get your spread. Needless to say that when the shorter moving average is over the longer moving average, you have a tendency to move higher. Okay, it's a positive thing for price action. And there's a lot of trading plans that I've built and many have built that operate on the cross of a moving average and when to get in. Okay, let's make that a thing right now. And let's say you get in here at the close of this candle. This candle closes and you're actually getting in right here at the first. I like to wait for the close of a candle to get in. So let's say you're getting in at the open of the next candle. As soon as this closes, boom, my finger goes off the mouse and I'm into the position. Well, where is the scalp? Where do you take your limit? Now, that's a calculation we can't go through right now, but I will say that the stronger the up move in this particular formation, you're seeing that the candle that created part of what created our decision to move to take a long position. This candle is fairly big. It's one of the bigger candles in this mess, or equal to some of the bigger candles. So you can ask for a little bit more. A smaller entrance candle, you ask for less. So let's say you take on those two positions that I like to take on. And I would probably put my scalp here. And this is where I would apply my limit. You put in a limit order to say, when the market reaches this level, I want to take my profit. This is where now why do you do that? Because from here to here, if you let the market come to you through a limit order and you take this distance, whatever this is worth, is going to pad your distance for the red line. Not only will it increase your equity by this much, but will also push back that red line underneath you. So again, we don't want the equity will take care of itself. What we want to concentrate on is padding our distance from the red line. That is our only real objective until we reach $60,000 that is our one thing. Okay. So again, I do want to say that this is another signal that one would get into, possibly, even though it's not a cross. There's another reason to do that. We've got an engulfing pattern. We've got realization after the engulf. If you got in here, okay, you may ask for a little bit more, and you would have gotten it here somewhere in this area. So, and I can give you the exact measures that we use. If you own our trading plan, we have a trading plan called Loaded Gun, which is specifically built for prop trading. I'm going to offer it to you at the end of this presentation at a terrific investment amount. So, but I can't get in. I just want to give you the general parameters just in case I never see you again. Okay, so let's continue on. The second thing that you want to understand is that you want to respect support and resistance. And I'm leaving a little air here, because most traders somehow have forgotten the impact of support and resistance to the degree that they should as traders. You want to always respect support and resistance. Previous tops and bottoms are always tested, I mean, from a technical standpoint. And less than 50% of the time, on the first attempt, you won't exceed whatever level that is. So if you have a high that's made and the market's come down and the market reverses and now is approaching that high level that was previously established, it's less than 50% it will get through that with any distance. Now, sometimes it will go 2 or 3 ticks over that to get in all of the fools who just get in based on that, not fools, but people who maybe don't understand the importance of support and resistance. They'll get in and then just take that and then come back down and have those new people lose money, or lack of appreciation, people lose money. You want to, and generally there are many good trading plans that are built on exceeding previous highs, coming back and then exceeding the high that was just made with that high that was just made from the previous, if you know what I mean. It's a 1, 2, 3 formation. And so on the first approach, okay, you need to take out your open trade equity, okay? If you only have one position left, one contract left, and you're approaching that open trade and you're approaching that support or that resistance on a long trade, if you're approaching that, you need to take it. You need to take it. And you may say, well, it could go further. Sure, it could go further. But we are playing the odds here. We are getting the edges in our favor most of the time. Now, a double top and triple top, even worse as far as percentages are concerned. Okay, so the idea here is you want to you're not going for it all every time when you're prop trading. You are taking that open trade equity at supports and resistance levels. So whether it's a double top, triple top, you know, we use trend lines also to determine some of the areas where we want to put our limit order in to grab open trade equity. Bottoming and topping candle formations. If you're at the top of a run and you see a hanging man, hey, take your open trade. I'm sorry, you see a shooting star, open trade equity. If your market's moving down and you see a hanging man, take your open trade equity. Engulfing patterns, large ones, are important also. So you want to look for opportunities to take your open trade equity. Here's an example, the same example we used before. Now we put on our 2 positions here. We took our first one out here. Now we have 1 left. Now I like to move my the remaining position. I like to move that stop to break even. Okay, but you can, or moving under the longer term average, maybe a little bit even a better spot in a lot of cases, is to because really it's that longer term moving average that's going to be a barrier when the market starts to come down. And you can see it here where it hugged that pretty well without breaking it. Okay, here you can see where once we got above it, again, if you take your profit here on 1, then you want to move your break even at least up to here, and maybe even to break even, not to break even, but your stop on the remaining position here or here. But that's another discussion, and I would have to decide with you and your personality which may be better for you. But we still have a position on, okay? And we're looking here at this former high. Well, this is one limit order, the first one that I put in, and the second one I would put in right here. Okay, why? Because I want to take my open trade equity before I challenge completely the previous high. Now, when I say completely, I mean I'm not going to put in my open order here. I'm not going to put in my limit order here. Tails I don't like to put in. You know, I kind of ignore those. I'm certainly not going to challenge the absolute. Again, the less I'm asking for, the more I'm likely to get it. If the market is going to approach this and challenge this, it likely, you know, odds are it's not going to make it all the way, even though a lot of traders think it's. So you need to find the level. So I've chose a level below this reversal signal right here. That's kind of a nice level to consider. And I would have gotten it here comfortably. Now, there are other levels that you could have put higher and gotten it in this trade, but that's not the point. That's not the point. The point is to capture open trade equity in the most possible, in more possible areas. I mean, I could put it here, I guess, and as it approached the high, but I think that as a trader, you know that markets will get close most of the time to a previous high, and so I chose here, and I'm going to show you something else in a second, but I just wanted to give you a specific process. 2 positions, take the scalp, and then find a support resistance to play against for the second limit order. Now, if you're an open if that second position is in open territory, then there are some trailing things that you need to do in order to preserve. You don't want that open trade equity coming all the way back. Okay. Again, you can see this is if you hadn't taken it from here on your limit order, certainly when you see a shooting star at the top of a run, you want to take it. Okay, but here's the other point I want to make. When you get close to that limit order, say in our last example, near that that resistance level, okay, if you're near the finish line and the market hesitates, it's getting near your limit order, but it's not quite getting there. Another candle starts to form and it starts to hesitate, but you're close. You're kind of 70, 80, 90% of the way to that limit. Just take it. Just take it. You got to, because our one thing is to pad the distance from the red line. And to do that, you want to capture as much of the total open trade equity as you can. The rest will take care of itself. Yes, you won't get as much profit in a trade where you may not be waiting for the full extent of what you wanted. But in a hesitation, don't even wait. Take it there. Take it there. Why? Because you're taking your open trade equity at near its top, and so that full amount is going to help you. Okay? So again, the use of limits, we've got the scalp high probability open trade equity capture. Okay? You've got the right before support or resistance level. You want to leave room. You want to clear any of the wicks. I kind of showed you that in one of the charts I showed you. And you can see that there's kind of there's a wick right there that, you know, again, you know, if I was putting my, if I was in this run right here and I saw these wicks here, I'm putting my stop. There's another wick here. These wicks are very powerful when they're at the top of runs, and this is actually a continued run. So I'm putting my limit order here. So whether there are a number of things to consider about where you want to put your limit order to make sure you get it, so that you're padding your distance from the open trade equity at the peak of the open trade equity. This is what you want, okay? You want to respect candle reversal patterns like these, okay? Or like this kind of thing. If you're hesitating at your limit, again, you want to take it, okay? Now you're going to need a frequent, reliable trigger in order to do this, okay? When I say frequent, I mean so that you're not testing your patience. Patience is probably the one thing that most traders seem to have an issue with to some degree. They want to be in. It was my area of problem when I started trading. I want to be in it. Listen, if you're doing this, let's get in. You can't make any money unless you're in it, okay? And then reliability. You need to have a tested trigger, and you need one that delivers a pop at least 2/3 of the time. What you want is, you know, if this actually is one of our triggers, if this is a trigger here, you need to know that within the first couple of candles, you're going to see a appreciable movement in your direction, okay? Here's another one of our triggers, and with this candle right here, we would have been out right in this area. So you want to make sure that you have a frequent, reliable trigger, one that gives you a pop within the first couple of candles, at least 2/3 of the time, okay? So we have something called, that I built specifically, called the Loaded Gun Simple Trading Plan. I know you've heard about it. It's been around for 4 or 5 years, and it is one of the only, I've never seen really a trading plan built for prop trading in some of the ways that I talked about. Jeffrey said, I felt burned out for a very long time, multiple systems, methods, and indicators. I like the Loaded Gun system because it's so easy and yet simple to understand and use. What Loaded Gun has given me is an edge in my trading. Sometimes an edge is all you really need. Many thanks to me, and thank you, Jeffrey, for your trust, for your wisdom, knowledge, and and he's become kind of a friend, so we call it a friendship. Brian, I'm over $10,000 in 7 days on a $250,000 funded account. Thank you, Loaded Gun. Things can happen very quickly when you're doing the right thing, when you're concentrating on the one thing, okay? The loaded gun is simple to understand, set up with easy to follow rules, works any time frame, takes me less than 5 minutes to look at all the markets I trade. After that, it's mostly importantly, follow the rules, join the small percentage of traders who are consistently making money, and Ted is one of those people. We also have a trading room. And I resisted a trading room for years until one of my old clients, I didn't know that 4 or 5 years ago, he had bought a loaded gun. And not only that, but 15 years ago, he bought our mental training program. He's known me for a long time in the shadows, never really communicated with him, just a buyer on a piece of paper. He called me one day and says, hey, let me run a trading room for you. I just love the way loaded gun is working with the prop trading. Let me run a trade. And so I said, fine. This was back in May. This is the most appreciated trading room, I'm sure, in the industry now. Dan is a former independent floor trader and member of the Chicago Board of Trade. He spent 12 years as Morton Grove, Illinois. I'm sure you know him. He's the mayor for 12 years. They named a street after the guy. He's a trading pro and room moderator for the Disciplined Trader with his son Matthew, who was collecting money on a consistent basis from prop trading. So he and Matt, Dan and Matt, run this trading room. It's a room for prop traders for using our loaded gun simple trading plan. One of the most important things about trading is you have to develop a winning attitude. And I always say that learn the simple trading plan, but get into the room and start seeing what winning is all about. Because if you haven't been winning, you're probably approaching the market by saying, hey, I'm not sure this is going to work for me today. I'm not sure this is going to happen. That's not the approach you should take. The approach is saying, today's going to be a great day. I've got a trading plan that works. Let's go to it. You want to have a positive, forward thinking, and that's what you'll learn by seeing somebody else just winning in a trading room. So a great trading room, I'm going to give you access to it if you would, as part of my offer. I wanted to take a moment, let you know how amazed I am with Dan's trading room. I've booked 3,300 across 2 of Al accounts this morning. I didn't expect this, but I can feel myself borrowing discipline and patience from Dan. He's kept me out of the trade. I think I would have taken the learning experience is incredible. This is a fantastic thing you guys have set up. Dan is a professional trader. I'm a professional trader. There's certain things that we do that you need to see, okay? Not just a guy that builds a trading plan, but a professional trader, okay? Guy that runs it. A lot of people that build plans don't run them, okay? Loaded gun simple trading plan, simple trading. I wanted to send you a quick email, let you know that the loaded gun room is really fantastic. Dan and Matthew are teaching me so much every day. I can already see that I'm approaching trading futures very differently. I have several profitable trades already in the last couple of days. So I wanted to just give you some emphasis on that trading room. Here's what I'm offering for you today. The loaded gun simple trading plan, okay? This is the last slide. I think I've got about 3 minutes, 2 or 3 minutes here. All right, here's what I'm offering to you. The total plan, it fits on one sheet of paper. It's a simple trading plan. It only has about an hour and a half of there's 2 videos, about 45 minutes each. That includes all the charts. It is a simple trading plan that is directed to win in prop trading, okay? And it looks like this. You saw what it looks like before, okay? There is a nuance. The nuances, there are currently 7 of them. I mentioned what a nuance is. These are small tweaks that you can make in the trading plan that don't add any significant risk, but match you as a person so that you can follow it with less resistance from yourself, okay? Because in the beginning, until you can develop a winning attitude, you need to stick to the plan and start winning. And you can't take all that old baggage with you. These nuances will help you. And to continue to help you, you get 90 days of unlimited one-on-one private coaching sessions with me. Now, most will only need 1 or 2 sessions tops. But I want that first session with everybody so that I can help you maybe to match the nuance. I want to know what your trading background is. I want to know what your situation is, and I want to help you to apply loaded gun in a way that's going to be easy for you to do it. Look, it's an easy, simple trading plan in the beginning, but listen, things can always be easier and smoother, and I want to make sure that's happening. So private one-on-one sessions with me, as many as you need for the first 90 days. And the 90 days actually starts with our first session, not when you purchase today. So if you're taking a vacation in the next couple of weeks, take advantage of this price because it's only for today. And and start looking at the material. But when you book your first session with me, that's when the 90 days start. We all gather every month at the last Wednesday of the month. And if you can't make it, you can get the recording, or you can pre-ask me questions and I'll answer them during the coaching. But we talk about our experiences, any updates, things that I'm looking at, etc. And I'm going to give you a month free in our trading room. It'll become $99 a month after that if you want to stay. But I want you to have that experience of winning and what it's like, okay? You're going to get a month free in the trading room. You get my personal guarantee. I'm so confident that you're following the Loaded Gun Simple trading plan. It's going to result in you getting funded by your prop firm so that you can risk their money and not yours and still receive 90% of the profit you generate. Just share your trading experience with me. Show me that you followed it and it didn't work, and that if it didn't work for you, I will refund your money plus $500 for your trouble. I've never had to do it, and I don't believe I will ever have to do it because this is a solid trading plan for prop traders, okay? If you go to the page, if you go to this page right here, I'm going to show it to you in a second. You're going to see that it's offered at $24.97 without the trading room. I'm giving you that even as a bonus here. But that's not what I'm offering today. Today is $797, and it is only for 10 traders. Why? Because this piece right here, this private coaching, you know, I don't have to, you know, I don't want to have to, I don't do it every day. I only coach 2 days a week on this coaching. I just made this presentation a couple of days ago and had a full 10 people come within a couple of hours. So 20 people is going to fill it. I don't want you to wait 2 weeks to see me. So limit 10 period, $797 is what I'm going to ask you for. And that's it. It's a one-time payment. All you got to do is go to their money, yourprofit.com. I think it's being put in the chat if I disappear here. Their money, yourprofit.com. Use the coupon code LIMIT. Figure you'd be the appropriate coupon code, and that $24.97 will turn into $797. So their money, yourprofit.com. I really enjoy giving what I believe is the one thing that you need to concentrate on to win in prop trading. I hope you see the value of that. And if I never see you again, I hope you find ways yourself to employ the limit order so that you can grab open trade equity and really start winning in prop trading. There's a lot more I can show you, but those are only for people that I'm working closely with in this program. So the Loaded Gun Simple Trading Plan is yours with the bonus of the one-on-one coaching, the group coaching, and of course the 1 month in free trading room. Okay, I am out of air here, and I don't know if there's any questions, but if there are, maybe I can answer them.
One question I had is this how well does this work outside of the U.S.?
I'm sorry, what was that question?
How well does this work outside of the U.S.?
Yeah,
in stocks and
it's good for everybody.
Okay.
Inside and outside. Did you ask me if it's good outside the U.S.? I'm hearing a little bit muffled there.
Yeah, that was the question.
Yeah. Listen, we have many. I just had my first client from the Congo yesterday. 2 days ago on this offer. I guess it takes an unbelievable offer for the Congolese to secure a spot, but I had my first. I've never had a client from the Congo. That's the first one in that particular country. A lot of places won't even accept clients from countries that that may have questionable assets in order to protect online safety and credibility and so on. But yes, all over the world we help. So and I always, whenever somebody purchases, I always call them on the phone and congratulate them myself, no matter where you are in the world. So expect a call. You won't get away from me if you're living in France or something. I'm going to be calling you. So.
All right, very cool. That thank you very much, Norman. Appreciate it. Let me go ahead and say thanks for coming. Thanks for spending some time with us.
Oh, you're welcome. Always enjoy these presentations. Always enjoy you and your daughter. And hey, I don't think you've had one for a couple of weeks. I'm kind of going dry here with the humor.
My daughter decided she's old enough that she doesn't want to be on the internet. So none of those. None of those for now. Probably a smart decision though. She's getting old enough.
She was fun. We're gonna miss her. Tell her.
All right, I will tell her that. All right, thank you very much, Norman.
Very welcome.
Okay, we can do this. The links for those offers are here in the chat. And let me go ahead and make myself the presenter real quick. As we kind of transition to the next speaker, I want to invite you again. If you haven't yet, come join the Traders Forum. You can find it at thetradersforum.com. It's a live market chat. I've been chatting in there all morning about different positions that I'm in or stocks that I'm looking at. I'm not the only one though. A lot of ideas being shared, a lot of discussion. We do several market-related events every week, and we'd love to see you there. Thetradersforum.com. The design or the idea behind the community there is it's designed to be a community of traders helping other traders, and it's been working pretty well so far. So in any case, we are also Metastock here. Metastock's been rated the best software in its price category for 32 years in a row. We've talked about scanning, we've talked about testing, we've talked about expert advisor and the commentary you get. We've talked even about the forecaster, we've talked about the news, we've talked probably a little bit too much about how it's been rated the best software in its price category for 32 years in a row. Offer we're doing here is if you buy a month of Metastock, we'll give you the second and third month for free. I can't believe that's going to get you almost to Christmas. That'll get you to December 18th if you set up today. So to do that or to take advantage of any of the other offers that we've got directly from Metastock over the course of the week, you can go to metastock.com/conf promo, metastock.com/sales chat, or you can always call us. We'll be happy to answer questions you've got, send you more information, whatever it might be. 800-882-3040. And with that, I'm going to see, hey, Mr. Greg Lewis, are you available right now?
Sorry, yes, I am. My mouse, I think, just died, so I had to rely on my trackpad to push the little non-mute button.
I always have a problem finding the actual non-mute button. Does my audio sound okay today?
Yeah, it sounds fine to me.
Okay, good. All right, I just want to make sure because Norm said it was a little bit. So guess what time it is? You'll never guess. Never, ever, ever.
Is it time to talk about how Metastock's been voted #1 for 30 years straight on Task's Stocks and Commodities Reader's Choice Award?
No, I just did that. It's prize time.
Oh, okay. Okay. Let's do that. There's that too.
I've got another book of Steve Bigelow's. Steve's was a great friend of Metastock, somebody that had a huge impact on the trading that I do, and somebody that was a great partner of Metastock. So this book is called High Profit Candlestick Patterns, and we're going to send it to the next lucky winner, which Greg is going to decide who that lucky winner is going to be. Greg, what I need from you is just a number, any number. It can be between 2 and 5,089.
Okay, 2 and 5,089. According to the Google random number generator, that number right now is 1465, 1,465.
All right, and that is a Wayne B in the USA. A lot of USA winners. We usually have a lot more international winners. I don't think there's been hardly any at all this time.
Oh,
Greg, why don't you tell those people that are watching on YouTube how they can be eligible for a prize?
Absolutely. If you're watching on GoToWebinar, you've already entered. You don't need to re-enter. Entering multiple times doesn't increase your chance of winning. If you're watching on YouTube and you haven't entered, just go to metastock.com. There is a banner right on the top. Click on that, enter your information, and you'll be good to go. Also, it's entered at the top of the YouTube chat, pinned to the top of the chat. And that is all you need to do.
All right. I've also noticed chat's been really quiet today. We might want to talk a little bit about, like, if you ask questions, you might win the mega prize at the end of the day. But yeah, chat's been really, really quiet. Are you guys there? Hello?
Hello. Just to do a shout out. Let us know where you're from. Just say hi. Yeah. I'm from Texas or wherever.
It's a lot funner to do these if you were here with us. So if you have any questions, if you want to, if you have comments, all that kind of stuff, I'd invite you to share them with us. So
also, it wouldn't it has been tested clinically that you'll be a happier person if you like and subscribe to Metastock's YouTube channel.
You'll have to send me that.
Yeah, I'll send you that. I'll send you that. It's real. Look it up on the internet.
All right, cool. Hey, man. There we go. Richard says he is from London. Maverick says hi. So, yeah, say hello,
Thanks,
everybody.
guys.
All right. Our next presenter. Thank you very much, Greg. I appreciate all the help.
You're welcome. I'm here if you need me.
Our next presenter is Jody Samuels of FX Traders Edge. Jody has presented a number of times here, and we're going to have her talk now. So I love Jody. She does a really, really good job, and we're doing some work with her. So let's go ahead and get you started, Jody. Jody, how are you doing?
I'm doing great, Jeff. Thanks for inviting me. This is great. Yeah,
we're always glad to have you.
Thank you. Okay, I'm going to share my screen. Let me just let me know if it's good.
I'll let you know. I'm here to make sure everything's transitions smoothly. I can see mastering trend and corrections, and I believe that is exactly what you want me to see, Jody.
Perfect.
Cool. I'm going to get out of the way. Your turn.
And I have until when?
Up until the top of the hour.
Okay. Great. Well, welcome everyone. I'm so glad you're here. And again, thank you, Jeff and Metastock, for inviting me here today. Today, we're going to tackle one of the biggest challenges traders face, making sense of the chaos in the markets. The session is called Mastering Trends and Corrections, because once you understand how trends and corrections flow, trading becomes clearer, less emotional, and far more structured. And I'm going to show you how the Wavy Tunnel Pro dashboard, a tool we've built from over 40 years, my 40 years of trading experience, can help you to do that in minutes a day. So let me quickly introduce myself after we read this disclaimer that this presentation is for educational purposes only. Past performance does not equal future results. And remember to practice with a demo or paper trading account with any new concept or strategy. Fine. Let me introduce myself. My name is Jody Samuels. I began my career as a professional trader on Wall Street and Bay Street, trading currencies for JP Morgan and managing positions that generated millions for the bank. Over the years, I've expanded into futures, stocks, and options. And today, my passion, I do trade, is teaching traders how to master the markets. I also wrote The Trader's Pendulum, the 10 Habits of Highly Successful Traders. In it, I describe 3 pendulums that every trader must manage. The market pendulum, which swings between trends and corrections. The financial pendulum, which governs risk, reward, and capital. And the emotional pendulum, which swings between fear and greed, patience and impatience, etc., etc. So the pendulum framework, markets, finances, and emotions, constantly in motion, is at the heart of what I teach. And today I'll show you how the Wavy Tunnel Pro dashboard helps bring balance to that market pendulum, turning chaos into clarity. So grab your pens and paper, because I'm going to show you some setups that you can apply immediately, and that would be great. Along the way, my work has also been recognized in major publications, including USA Today and International Business Times. It's always an honor to be featured, but what matters most to me is showing traders how to apply these ideas in a practical way, and that's what we're going to do today. As traders, we've all felt the emotional roller coaster that comes with market swings. And just saying that makes me bring back my JP Morgan days in the 80s. One moment we feel like geniuses, and the next we're frustrated and second guessing ourselves. I'm sure you can all relate to that. That's why understanding market cycles and timing is so crucial. And this is my thing. I learned about market cycles in the 80s, and I have never looked back. The market doesn't move randomly. It follows repeating trends and corrections. And when you have a structured roadmap and simple timing tools, trading becomes less about guessing and more about clarity and consistency. It's like for me, it's like watching a movie on the screen, and I can almost, not all the time, but much of the time I can guess the ending. So that's really cool. And I'm going to show you that. So here's the 8-wave market cycle, and this is what I want you to learn today. This is the foundation for everything we'll cover. Waves 1 through 5 form the impulse trend. This is the major trend move. You can see my cursor hopefully moving from point 0 to point T. At point T, traders tend to get greedy, they load up, they're optimistic and exuberant, and the market sells off. And here they're fearful, they bail, they're panicked and discouraged. So we want to flip the script here and put fear up here and greed down there. And in order to do that, yes, we have to practice, 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 and change the brain. And we can do that as traders. So once we get to point T, we have a massive ABC correction that's standard in Elliott wave analysis, a 3-wave move before the next cycle begins. Now here's the key. This cycle repeats across every market and time frame. Whether you're looking at a 5-minute chart or a 1-minute chart, day trading futures, day trading stocks, a daily chart of Apple, or a weekly chart of Bitcoin, the same rhythm of trends and corrections unfolds again and again. Now, this is the ideal pattern. So when I see this ideal pattern, I feel really, really comfortable trading it. So if you can identify where you are in this cycle, you gain a massive edge. You might stop chasing the market and start anticipating the next market moves. Before we look at the setups themselves, here's the DNA of the Wavy Tunnel Pro method. The Wavy Tunnel Pro is a system that we developed to count the waves without really counting the waves. I never wanted to be a consummate Elliott wave counter, but I wanted to see the that's my dog barking, if you'll excuse. But I wanted to see how the waves unfolded in the market, and that's what the Wavy Tunnel does. So Elliott wave gives us the rhythm of the market, the impulse and corrective phases you just saw. Fibonacci symmetry allows us to measure timing and price levels, identifying where markets are most likely to turn. And we use Fibonacci. That's a great tool to use for coming up with market targets when you're in the market. And momentum gives us confirmation, showing us whether a trend has strength or exhaustion is setting in. Together, these 3 elements create a structured, really a rule-based way of reading the markets. And from this DNA, we get the Wavy Tunnel Pro setups. And the Wavy Tunnel Pro is visual. I'm a visual trader. I like to look at the patterns in the market. I'm going to show you that right now. So here we have a picture of the Wavy Tunnel, and I'm going to tell you what these settings are for these moving averages, because this is, you can see the 8-wave market cycle down here on the bottom, and it's really mimicked on the price chart. You can see that this is the wave, the 3 lines. This is the 34 EMA on the high, low, and close. So it forms a beautiful support zone when price corrects into that zone in an uptrend. The filter is the 12 EMA, that's the green average that you see on the charts. And the tunnel is the 144 and 169 EMA on the close. That's what this is. So this mimics, I hope you can see the 8-wave market cycle in this. That's what I mean by a visual display of the Elliott wave cycle, which I love. I love. So let's dissect this. These on the left, these are the 5 core setups that we have in the dashboard. These are the 5 core setups that I have taught since I developed this program, a long time, like 15 years ago. And these are the setups that I continue to trade today. Only now the setups, you can find them in the dashboard. We'll get to that later, but let's discuss these setups because that's the most important thing. You want to be able to take this away and understand. The end of trend. There are two setups, the price to wave, the PW, and the fill the gap, the FG. So when the market is exhausted, and you will see momentum divergences also. I don't have the awesome oscillator on, but that's what I use to look for momentum divergences, where price makes a new high and the awesome oscillator makes a lower high. That signals that we could be at an exhaustion point, that the market could be running out of steam. So the first move that happens is the price moves into the wave. That's the first move. And you see these dots, and these are our semaphores. This is proprietary, but the moving averages are not. So when we move down into the wave and then we trace and price fails to make a new high and then start to roll over, then we have the fill the gap trade. And usually price goes below the tunnel. Okay, that's what usually happens. So that's the PW fill the gap, end of trend, beautiful setup that occurs over and over again, also for an uptrend, a downtrend, and this is for an uptrend. And then the trend continuation setups, we have two in the Wavy tunnel. One is the breakout 4, which occurs right here after we've had this significant sell-off. And then the second is the breakout 3. That's the trend trade setup when we are in the impulsive structure of this 8-wave market cycle, and every time price moves down into the wave and we get one of these blue or red semaphores, that's the time to buy or to buy on the break. Okay. And then we have Royal Noble Noble. This is Royal, this is Noble. When we have a sideways price action, we will frequently get Royal Noble 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 until we break out and make new highs or new lows. So that's the Wavy Tunnel Pro in a nutshell. And this gives you a roadmap. PW fill the gap for end of trend trades, breakout 3, breakout 4 for continuation, Royal Noble Noble for sideways. So let's look at a real example. This is from the scanner. I did this, I guess I took this 2 days ago. Yeah, 2 days ago. UGI. So this is exactly what we've been talking about. We have a price to wave and then fill the gap, and with divergence with the awesome oscillator. And what I like to see is I like to see price coming down below the tunnel. So this is like an early warning, but I do like to see, I wouldn't act on this. I want to see price coming down below the tunnel. Or if price starts to move up and takes out this high, then that's another story. Maybe we won't get below the tunnel. But the beauty is that this gives us a structured way to trade the market turning points rather than guessing or reacting after the fact. I'm hoping that you can see that. Now let's look at this example. We'll look at a bullish PW fill the gap on the left. Now we have beautiful divergence, and this is bearish, right? The wave is below the tunnel. This is bearish. So this move up to the tunnel is the start. It's a correction up. And if the wave moves above the tunnel, then this becomes full out bullish. But this is a defensive. The first move into the tunnel is a defensive. So if you see this pattern, let's say you're trading, you're day trading, this would be a great profit taking target. If you go long, this is, a beautiful profit taking target. Let's say if you're day trading futures or something, or even stocks. Because you don't know at this point that it's going to continue to move higher, because this is a significant, significant level. So this is a bullish PW fill the gap on the left, and here is a bearish PW fill the gap on the right, where we are in an uptrend. We do have divergence here, and then we have a beautiful move down below the wave. Price retraces, fails to take out to make a new high, and then continues on down, and we get our noble semaphore below the tunnel, right on target. And then what happens? that's the bottom, and then it starts to move higher. So what's important here that I just want to mention is that these aren't cherry-picked charts from textbooks, even though these look like textbook wavy tunnel trades. These examples were gotten directly from the dashboard, and that tool scans thousands of symbols daily and flags these setups automatically. So it brings 5,000 symbols down to 20 or 30, perhaps, that you can then look at and decide what fits your trading style, because there are many setups. So this is how you move from theory to practice. The dashboard brings these repeatable setups to your screen every day across stocks, ETFs, futures, Forex, and even crypto. Okay, let's go on to the next slide. So let's move on. We started up here with the price to wave and then the fill the gap. What is the next trade setup that occurs? It's the breakout 4 trade. And I told you that I like to see the gray semaphore moving below the tunnel. That's what I like. Or to trigger a trade, I want to see a 1, 2, 3 reversal. So I want to see if we don't, go lower and we start to move back up and take out this high, well, maybe this correction is over with. So once this ABC correction is complete, and this is just such a beautiful visual because we have the wave separating from the tunnel. This is getting wider, this gap. And once this correction is complete, then we have the breakout 4 setup. And the first target for the breakout 4 setup, you can run your Fibonacci and take a percentage of this move. You can use the previous high for your initial target. And then if we take out the previous high, then we continue on higher and we start this cycle all over again. And we've seen this example in the markets because we've been bullish all year, well, bullish since April. We've seen this, we saw this pattern in April in so many different stocks, and even the indices, where we corrected down to this level and then reversed and started to move up. And in so many stocks, we've taken out these highs. So if you are familiar with this, then it seems almost logical to you. So this breakout 4, by the way, is one of my favorite setups in trading stocks. And another setup that I like is bounces off the wave during a bullish run. Okay, so let's look at both sides, both cases, the breakout 4 sell and the breakout 4 buy. On the left, again, we have the bullish price to wave, fill the gap. Now, this is the breakout 4 sell, okay? But I would take profits up here if I bought down here. In a bullish market, I would rather look at the right side of the screen and be looking for buys, okay? And I would just use this to take profits. Not a bad place to take profits because we can easily correct back down. We can even, we can. And for that, we would move down into the potentially into the wave here. And if this market is truly turning around and if it's bullish, then what we will see over time, this is the weekly chart, we would see the wave crossing above the tunnel. So we don't know at this point what the future will bring, if this is the top and we're going to come down, or if this indeed is just going to be a correction down and then we're going to start to move up. But these moving averages gives you beautiful places to take your profits. Okay. And on the right, we looked at this before. We have divergence, we have the PW fill the gap trade, and this morphs into a breakout 4 buy. And then if this pattern continues, we will continue to move up and take out this high. And you're going to be looking for buys. So this shows you the 8-wave market cycle, and it tells a story. It's like a movie on, on your screen. I don't know if it's really a movie, but it tells a story, right? Okay, so what's the takeaway? That if you, try to learn these sequences so that you can see how the markets play out. Before I show you the dashboard, I'm going to show you the dashboard and we'll do a scan. Let's take a step back and talk about why we built this in the first place. Most traders face the same problems. There are simply too many charts to analyze. Even if you know what setups to look for, it's overwhelming to scan hundreds of markets, especially if you're trading stocks. And that's why most people have a watch list to narrow down the field, and you can do a bunch of analysis first to narrow down your watch list if you're trading stocks or managing a portfolio. Or you can get something like a dashboard, which will narrow down the stocks to the setups that you want to look at once you learn these setups. So because there's so many charts to analyze, it means that you often miss the key setups or catch them too late. Does it happen to anybody? I know it happens to me because I'm really busy. So I need to be super organized and have a routine in place, a really good routine in place to make sure that I check the markets at least once a week for my stock portfolio, at least once a week, and just go through and see what I want to focus on for the coming week. And for futures trading or day trading, obviously you're going to be trading on the smaller time frames every day. I do that too. I trade futures and I have my stock portfolio that I manage. So I use the Wavy tunnel for both, for those of you that are interested. So when you don't have structure, you end up trading emotionally and reacting instead of anticipating. And I have another program called the Wealth Builders Roadmap, and we were meeting yesterday. And this is exactly what we were talking about, how to not trade emotionally. And we discussed a number of things. And it's something that we need to work on. But one thing that helps is having a structure, really having a structure, and then taking notes at the end of the day or at the end of the week to see how we're doing with our structure, if we're sticking with our plan or not. It's really important to stick with our plan. So this is the Wavy Tunnel Pro is a roadmap. And with this clear roadmap, without it, trading can become stressful and inconsistent. So we want to switch that around and have trading become less stressful and more consistent. And I know I do better with structure. When I have structure in my life, it doesn't even have to be with trading. When I have structure across the board in my personal life and with trading, I do much better in general. I have a very busy life, and I just planned a wedding for my daughter. She's married now. Amazing. Yay, yay, yay. So I have a pretty busy life. So I need to really fit in the structure. And these are the challenges that we want to solve. So what is my solution? The Wavy Tunnel Pro dashboard. We designed it to scan, it currently scans over 4,900 symbols, stocks, ETFs, futures, Forex, and crypto. And it flags the Wavy Tunnel Pro setups that we've been talking about today. The price to wave, the fill the gap, and the breakout trades. Instead of guessing, chasing, or spending hours glued to the charts, because that's easy to do too, right? And especially if you're a new trader, oh my gosh, again, I'm thinking back to my early days in New York with JP Morgan. I looked at the charts like all day long, and then I had my little Reuters beeper thing that I could see all the Forex rates, and I would look at them at night. And I would get calls from London, from Singapore, Tokyo, wherever. And I would think, like, why am I even asking for these phone calls? Do I really want to be woken up in the middle of the night? But the truth is, I was very excited about the markets. I was a new trader. And I have since, changed a lot and grew a lot. But if you're just starting out, you're probably definitely spending too much screen time. But it's not for me to say. I can just talk about my own experience. So anyway, instead of guessing, chasing, or spending hours glued to the charts, you get a short list of clean opportunities all in one place. And now let me show you what it looks like in action. I'm going to show you the dashboard. Okay, I hope you can see it. On the right, we have two charts, the daily and the weekly. I like to look at these are end of day scans, by the way. So that's why I have the daily and the weekly up with the Wavy Tunnel Pro indicators. But we can also get live markets. But when I do my work, once a week, I definitely look at the daily, and then I look at the bigger time frame, the weekly. So let me just. But here, I'll show you. I can just, if I click on this wheel, then I can put live at bottom. And this is showing me where we are. This is the hourly. I can look at any time frame. Here's the 5-minute. So this shows me where what price is doing currently. Okay, but I am going to go back to the weekly. So I'm going to go back up to this wheel, and I am going to uncheck live at bottom, and it's going to go back to the weekly. The other thing is that I'll just get rid of dual chart view, and I'll show you the rest of the Wavy Tunnel setup. I can go under indicators. These are all of the indicators that you can put on your own charts. You can change them, but I'm just going to show you what the full Wavy Tunnel Pro system looks like. Okay, this is what it looks like. The bungees tell their own story. This is key in all of these setups, but this is something that you would learn in the training. Like, we offer free training with this dashboard of all of the Wavy Tunnel Pro setups. And this, of course, is the awesome oscillator. I'm just going to get rid of this now. And I'll just delete the pane for now, and I'm going to put the weekly back up because I want to see dual chart view. Okay, so these are the charts. All right, now I'm going to move this over, slide the charts over so I can focus on the scanner. And then we're going to do a scan. Oops. Okay. There. Okay. Let's try that again. Okay. If we click on this here, these are all of the columns that you can get: asset class, name, price, volume. So on these scans, you can say, I only want to see price greater than $25, for example, or volume greater than a certain number, 500,000 shares or 1 million shares. This is the percent daily change. I know some people like to look at the percent daily change, the biggest ones, and you can sort, you can do that. Country, sector, industry, I have these unchecked because it just takes up too much real estate. Market cap, optionable is important to me because I do trade options. And for example, when I see the breakout 4 setup, I might buy it by selling a put or doing a vertical, or so I want to see that the stock is optionable. And then we have the earnings date, the ex-dividend date, the dividend yield, if you trade dividends, the forward dividend rate. And then these are all of the Wavy Tunnel trades. So trend, daily, weekly, I'll talk a little bit more about that. Do I have it up here? Trend, yeah. On the screen, okay, let me just finish going through. The PW, daily and the weekly, the fill the gap, daily and the weekly, we covered these. These are the end of trend trades. The breakout 4, daily and the weekly, and the breakout 3, daily and the weekly. So I was going to show you the breakout 3 trades now on the daily. But let me talk about the trend, the weekly and the daily trend. In the wavy tunnel, when the wave is above the tunnel, the trend is up. If the wave is below the tunnel, the trend is down. And if the wave is in the tunnel, the trend is sideways, it's yellow. So I like to look, when I'm looking for a breakout 4 trade, I like to say that I want to see the weekly trend up, and I want to see the daily trend up or neutral, meaning the wave can be in the tunnel. So that's something that I would do. So this is very important to me, that the trend is the weekly trend is up and the daily trend is down. If the daily trend is up and the weekly trend is down, I'm not interested, because I want the weekly trend to have my back. Okay. And then to get rid of these filters, I just click on that. So these are all of the columns. Now I want to, oh, and also you can take notes here. So here I've this note is filled in. So I just did this as an example. You can post a chart, you can type whatever you want to type in here, and it will be saved. So you can actually have your journal right here in the dashboard. That's something, that's a great feature. You can also set up your scans so that the scan comes to your email every single night. And when additional stocks have been added, then you'll see the additional stocks coming into your email every single night. So let's just bring the charts back, and I'm going to move it over so I can see the breakout 3. So these are all the things that I have here. And these are scans that I have set up. I've set up the breakout 2, breakout 3 scans, the breakout 4 scan, the fill the gap buys, the PW buys, but let's just do it together, okay? Let's set up a scan, and I'm gonna do price over $25 and volume. Let's do over 1 million, because we're gonna have a lot of symbols if we don't. The breakout 3 daily, it gives you a few options. I'm going to select the blue buy ready and the red buy ready. Okay. And then once we do this, here we have 129. So let's maybe limit it a little bit more. Let's just do the optionable ones, because I don't want to see some. Okay, so that brings it down to 75. Then I would add a dynamic watch list so that it's there all the time. And this is the dynamic watch list that I can send to my email and be alerted of all the new stocks. It'll tell me all the new stocks that come up every single day if I want. Okay, so the other thing that I might want to do is I want only the week, since this is the breakout trend, I want the weekly trend to be up. So that brings it down from 75 to 64. And of course, I want the daily trend to be up. So that brings it down to 62. Okay, so now we have 62 stocks. That's still a lot for the breakout 3 trade, but we are in significant uptrend here, so it's not surprising. So let's just click on one and see. So this is an example, AstraZeneca. So we already went through the 8-wave market cycle. And with the breakout 3, you're looking for pullbacks into the wave. That's what you're doing. So this is a pullback into the wave. And I said that I want the wave to be above the tunnel on the weekly. So this is going to show us all of the stocks, there are 62 of them, where the market pulls into the wave. And then you can decide, do you want to buy it or not? Now you can do a little bit more analysis in terms of which which sectors are doing well. Maybe you have your own watch list. Maybe you put your watch list and you run these setups here. It's really up to you. If we look at Barrick Mining, okay, so this, okay, this, yeah, this showed a pullback into the filter. So sometimes the pullback is going to be into the filter because the trend is so steep that it's not even going to make it into the wave. So this is going to call out all of the pullbacks, whether it's a steep trend or whether it's a less steep trend. So we'll move in. We know how the gold stocks have been doing and the mining stocks, they've been doing really, really well. So naturally, there's going to be a steeper trend. Okay, let's see what else. Okay, so here's another one, a pullback into the filter. So this is basically giving you all of the uptrend stocks, okay? And I didn't have a look at all these to narrow it down or limit it. If I want to, since we learned about the breakout 4, I can just click on my watch list, click on the scan, and these are the breakout 4 trades. And these will show you that this will bring the number of stocks down or instruments down from 4,974 to 32. So this is the scanner, very, very powerful. If I want to go back to end of day scanner, I see all of these stocks. Now, if I want to just see Forex pairs, or let's do crypto. Let's see how many crypto, oh, let me just go like this, and let's just see. So these are all the cryptos that are on here. You can see all of the symbols. If I want to see Forex pairs, these are all of the Forex pairs that are on here if I want to see Forex. If I just want to see ETFs, these are all of the ETFs. Now, the other thing that you can do is you can go and see, you can put up all the Wavy Tunnel setups, and it will show you, if you're looking at a particular ETF, what the daily trend is, what the weekly trend is, so and what the Wavy Tunnel setups are, are showing right now. I'm just showing the breakout 3. But here you can see that this is showing a breakout 3 trade right over here. So if I click on this, this is the breakout 3 trade. Okay, we have price moving down with a blue dot, and that's the breakout 3. So there are a number of ways that you can see this. Okay, let's get back to the presentation now. I think I've shown you quite a lot, and I want to save time for some questions. I don't know if there are any questions now, but let's just keep going. You've seen the Wavy Tunnel Pro setups at work. So I started out by showing you the 8-wave market cycle. I gave you the moving averages. So if you're a visual person, you can, hopefully readily see where you are in the market cycle for anything that you're trading. And you can do this with anything that you're trading, like anything. So stocks, futures, Forex, day trading, swing trading, position taking, whatever you want. So that's how we started. And I hope I taught you something today. If nothing else, you can start to use the moving averages, and let me know, email me and let me know how it's going for you. I mean, that's if you don't join us today for a $1 trial for the dashboard. So the choice is simple. You can keep trying to do this manually, scanning chart after chart, hoping to catch the right setups, or you can let the Wavy Tunnel Pro dashboard do the heavy lifting for you. You'll get full access to the dashboard, alerts, watch lists, and the private Discord with bi-weekly training. That's twice a month. And for those who take action today, I'm including something extra, a one-on-one coaching session with me to help you get set up and accelerate your progress, or to help you find setups, whatever you want. I'm available to you. But this is a fast action bonus. It's only for the first 10 traders who sign up today because my time is limited. And that's my way of rewarding action takers and making sure that you get the personalized support you need to hit the ground running. And we're going to have our first onboarding session tomorrow at 12 o'clock. So if you sign up with me today, you will be getting an email to join me at 12 o'clock tomorrow. And I'll show you how the website is laid up. I'll show you all of the training that we have available, and I'll show you all the training that we have available to learning how to use the dashboard. So this is normally $97 a month. I'm giving you a $1 trial today. So that's to make it easy for you. If you are interested at all, you can try it out. So that's less than the cost of a cup of coffee, and you can experience how this tool can transform your trading workflow. So let's just take a look at the next two examples. This is Microsoft. This is the wave 4 bottom, the breakout 4 trade. This happened, and during panic selling, we talked about the psychology of that, panic selling, and then look what happens after that. Okay, and of course now it's, I mean, I took this, a couple months ago. So a 37% move in 2 months. Okay, now it's higher. So the dashboard found this, all right? Here's another trade that the dashboard found, Live Nations. Like I told you that there were many, many trades that were found by this dashboard. And it's all mathematical. I mean, it really is. The price comes down below the tunnel. We get a gray semaphore, and then we're off to the races. We have since surpassed this high, and we're higher, but this was a 31% move in 2 months. And then if you miss the bottom, that's okay, because all of these entry points, the breakout 3 moves, are also tagged by the dashboard. So that's great, okay?
Hey, Jody,
And,
just a quick note. The link is actually not showing up on the screen because the bottom part of it's cut off. I'd like to post the link in the chat if you just want to give it to me.
Sure. Oh boy, it's wavytunnelpro.com/join. That's the link, wavytunnelpro.com/join. And that will give you your $1 trial. Okay.
wavytunnelpro.com/join.
Yeah.
Okay.
Yeah.
I think I've got that. I'm going to check it, and then if I need you again, I'll let you know.
Okay, for sure. Thank you. Thank you for telling me that. Oh, interesting. Yeah, just let me know. Okay. And if you're wondering whether this approach is really making waves, haha, waves, Elliott waves, wavy tunnel in the trading world, I'm proud to share that it's been recognized by not just one, but 2 major publications. USA Today featured the Wavy Tunnel Pro dashboard as a consolidated hub for market scanning, strategy training, trade plans, and more. And the International Business Times highlighted my journey and the unique missing link I've developed to help traders move from confusion to confidence. Now, being featured in both publications reinforces what I've been showing you today, that this dashboard isn't just another trading tool. It's a great solution that's transforming how traders approach the markets. And there's a lot more to this. A lot of training is involved, and you're going to have my expertise of over 40 years of trading to impart my wisdom so that you understand the Wavy Tunnel Pro and how to read the market cycles, because this is something that I really, really believe in. When I was a trader on the desk at JP Morgan, we hired an Elliott Wave technician analyst from the Chicago Board of Trade to work with us on the desk, because we didn't have time as traders, interbank traders, to analyze markets per se, but I ate it up, and he was there to help us along, and he actually taught me Elliott wave analysis, and now he actually works with, you know, many institutions, and he continues to do this. So Elliott wave analysis does work, and the beauty of the Wavy Tunnel Pro is that it takes these wave cycles and it puts it in a visual format, so you don't have to be a consummate wave counter. And if you are subscribing to an Elliott wave service, well, then this is perfect, because this will just complement what you're doing. So hopefully the Wavy Tunnel Pro simplifies Elliott wave analysis in this visual format. So these are the publications, USA Today and International Business Times. But the best part is you don't have to take my word for it, or even USA Today's word for it. You can try the dashboard yourself today for $1 at wavytunnelpro.com/join. But the truth is, it's more than just a tool. The dashboard is part of a complete system designed to help you trade with structure, clarity, and confidence. We started out talking about structure, and I told you how I need structure in my trading life and in my personal life to manage my busy life. So this dashboard is a way to give you structure in your trading. So here's what you get when you join. First, easy to follow video lessons, so you'll understand exactly what you're doing and why. And these are the Wavy Tunnel Pro setups that I'm going to teach you in these video lessons. Second, market roadmap training, where you'll learn step by step how to read the market like a pro. And many of you that have been trading for a long time, I mean, you do already read the market in your own way. And those of you that are just starting out, you can do it too. Absolutely. And then, you know, I have some students that that have come to me that have been trading the markets for a very long time, very experienced, but they just think that this has really rounded out their education and rounded out the way that they can look at the markets. Third, you're going to get live coaching twice a month, where we review the current setups together, and I'll answer your questions directly. And if you join today, the first 10 traders, you're going to have a private coaching session with me. And finally, private community access, where you can connect with like-minded traders, share insights, and grow on the same path. So normally this package is $97 a month. But today you can get started with a $1 trial and see for yourself how much clarity this brings to your trading. And in fact, this is going to renew. I added a discount. It's going to renew at $79 a month, not $97. Okay, which I'm going to be changing that soon. But if you get in now, it's kind of grandfathered for you. And there's also an annual fee, same kind of price difference, $7.97 if you want to do it for the year. But if you, I'm upping these prices to $97 and $9.97. This is, these are, you know, this price is for this webinar, this Metastock webinar. Okay. So here's your next step. You can scan the QR code or go to wavytunnelpro.com/join to start your $1 subscription, trial subscription. And this gives you full access to the dashboard, the training, the coaching, the community, and your coaching session with me. And we have a lot of onboarding videos also in the onboarding videos in the website. I do have a technology partner, and he's there with me sharing exactly how to use the dashboard, and we're constantly making improvements to it. So this is something that is not, it changes because as we see things that we want to improve. So for example, the daily trend and the weekly trend, that was something that I added because I wanted to see it. So we put it in there. My technology partner turned it around within a week and it was done. So one dashboard, clean setups, real-time edge. And if you have any questions at all, you can reach me directly at Jody@fxtradersedge.com. Yeah, please do. Please do. Now, I think I have a little bit of time left.
You
So
do. You
I
have some
do.
questions too.
Do we have questions?
We have questions, yeah.
Okay, let's
So
see.
going from top to bottom, Richard wanted to know, does the end of wave 5 always look like a Head and Shoulders?
Yeah. Okay. So it kind of does. If you look at the, oh, I don't have a picture of it to show you offhand. If you look at the 8-wave market cycle, you have on the left side, you have a wave 3, 4, 5. Try to picture this. And on the right side, A, B, C. So that is a head and shoulders pattern, right? 3, 4, 5. The 3 would be the left shoulder. 5 is the head. B on the right after AB is the right shoulder. That is your head and shoulders pattern. So if you look at the 8-wave market cycle in the Proctor book, they have a beautiful visual of this. I have it too somewhere, but I don't want to look it up on my screen because I might just, yeah. Yeah, pretty much you see that. And you see that in all the different time frames. Good question. What's the next question?
Is this dashboard a standalone application?
It is. You're going to be trading on your own trading platform. This is a standalone. It's web-based, so it's really fast-moving, but it's an end-of-day scanner. So all of these changes take place at the end of the day, which is why, that's why if you want to see the live markets on here, you have to show that live market chart, because the daily and the weekly will not update like the live market chart does.
We are also working on getting this into Metastock too. So that'll be something.
Yes, I can't wait. That would be fantastic because you have a great scanners.
I agree. One wants to know, what is the column? I think he said Cologne, but what is I think he meant column BO3D. Does that
breakout three daily? That's the breakout 3 on the daily chart. The breakout 3 on the daily chart. Here, I'm going to show you. Here, why don't we show you a futures market? Okay, this is on TradingView. I'll just show you. So the breakout 3, this is the 5-minute chart. So you can see the same patterns. Look at this. Look at this beautiful ABC move down below the tunnel. This was a beautiful buy right here. So the breakout 3 trades are moves into the wave, okay? Moves into the wave. So this is a beautiful breakout 3. This is a breakout 3. Moves into the wave. So the breakout 3 daily on the scanner would be those moves into the wave. So on the left side, like during the trend. Okay.
Cool. Let's see. Richard wanted to verify. I answered this, but I think I want to make sure it was correct. The $1 trial is for 1 month, correct?
1 whole month.
Okay.
It's for 1 whole month. Yeah. I never did give a $1 trial for 1 whole month, but this is, yeah, we're doing it.
John wants to know, do you cover the indices? Does this work well with the S&P and the Dow, et cetera, et cetera?
Yeah, again, it's going to be on the, yeah, for sure. We do have the indices on the scanner, so it's the daily and the weekly, right? But yes, the answer is absolutely yes. So you'll be able to see the breakout 3 setups, the breakout 4 setups, the PW fill the gap setups on the indices. We have the data for the indices.
In the YouTube chat, Maverick says buy Bitcoin. Will this work on Bitcoin?
Yeah, for sure. I'll put it up. I'll show you. I should be showing you this on the dashboard. Maybe I should show you this on the dashboard, but I have this. Okay. Okay, look at this. Oh my goodness. Okay. So here's Bitcoin. I have the daily up. Look at this. This move down into the tunnel. What did we just learn today? That's the time to be buying it, right? Okay, that's the daily. So when you see these setups, this is what you're going to want to do. And if I go to the weekly, here, let me go to the weekly and I'll show you. Look at this. This was the time to buy it. Well, I mean, this was also one of those, the breakout 4 setups. Okay, are there any other questions? I should be showing you this on the dashboard itself. Bitcoin. Okay, here we go. Okay, here we go. So Bitcoin, this is the breakout 4 on Bitcoin right over here. And on the weekly, what do we have? We have the blue dot. You can't see it, right into the wave. So that's why I said I like to make sure that both are consistent, where the wave is above the tunnel. It is on the weekly. This is the beautiful setup right here, right there. Okay, and then once we start to move up, you would have, yeah, you would look for pullbacks. Okay. And your first target is going to be here, and then, yeah.
Awesome. Jody, so the link for that is wavytunnelpro.com/join. You can join for $1, give it a go. If you don't like it, well, it's $1. What a good way to try it out.
That's right, exactly.
wavytunnelpro.com/join. Jody, thanks for spending some time with us.
Thank you so much, Jeff. It's been a pleasure. I can't wait to be able
to show this on Metastock.
Yeah, me too.
All right.
Okay, terrific. All righty. Okay.
Thank you, Jody.
Bye-bye.
Bye. All right, let's go ahead and do this. All right, let's go. Where did my, there's my screenshot. Let me get to the PowerPoint here. All right. As we kind of migrate into the next speaker, I want to invite you to join the tradersforum.com. We just got our 1200th member. You can join us. You can come in. We'll talk about the markets together. We'll have guest interviews. We'll talk about different technical analysis techniques. We've covered everything from like stochastics to CanSlim to Ichimoku, MACD, all kinds of good stuff that we cover. We do really cool trader interviews, and all of that stuff I just told you is absolutely free. So if you want to join us, I'd love to see you in there on it. I'm there almost every single day, thetradersforum.com. So go ahead and click in there. You'll be able to join us for free. We've talked a lot about Metastock. We've talked a lot about how it's the highest rated software in its price category, and it's been rated that way for 32 years in a row. You can get a extended trial. If you buy a month, I'll give you the second and third month for free. You'll run it almost till Christmas for that. Pricing starts at about $75. So if you do our delayed version, the delayed chart version, which is just a streaming delay of about 15 or 20 minutes on a daily chart, it'll cost you about $75 for 3 months, $25 a month. So for $25 a month, you can evaluate the software that's been rated #1 in its price category for 32 years straight. So I'd encourage you to do that. I wouldn't trade without Metastock, and I think once you start using it, you'll enjoy it as well. Greg, let's give away a prize.
Sounds good to me.
All right. Let me find the next prize. I'm going to reach into the bag of prizes, which we're going to do physically next time because Greg had that idea yesterday.
I think it's
Greg,
a wonderful idea.
Oh, sorry. Well, I figured out what the next prize is going to be. Why don't you tell people that are watching this on YouTube how they can make sure they're eligible and in the prize drawing?
Yes, if you're watching us on YouTube, the only way you can make sure that you're eligible, if you haven't already done so, is go to metastock.com, and there's a banner right at the top. Click on that and enter your information, and then you'll be set up and registered. You don't have to do that more than once. Doing so more than once doesn't improve your eligibility of winning. And if you're watching us in GoToWebinar, you should be good to go. You should have already have registered. And that, I think, is that.
The next prize is from John Thomas, the Bad Hedge Fund Trader. He's going to give you a subscription to the Diary of a Mad Hedge Trader Global Trading Dispatch for 6 months. It's a $997 value. And we're going to give it away to the next lucky winner. Now, if you've already registered online, all you need to do is be lucky and have Greg pick your number. Greg, the number that I need you to pick from is between 2 and 5,089.
Give me just a second, please. Keep on picking that tab, go away. Okay, according to Google Random Number Generator, number between that and 5,089 is, let me do that again, is 2,634. 2634.
Catherine W, USA, with an SBC global address. So I'm going to go ahead and make a note of that real quick. And I'm going to thank you for the assistance.
You're welcome. And please do give all my best to Kevin Nelson as he comes on.
You want to introduce him?
Oh, sure. Let me do that.
Okay. All right. I'm going to get out of the way. I'm going to let you introduce Kevin.
I don't know how to get him going on GoToWebinar and all that, so maybe it's just.
I'm right here. I'll do that part of it, but okay. I'll let you do the introduction.
All right, so Kevin Nelson, I have known for these 20 years now. He was formerly a sales manager at Metastock, and after doing that for many years, he went out on his own and started the business learnmetastock.com, which has been great for him and great for us. In fact, as part of getting onboarded to Metastock as a sales or support person, we actually require that they take Kevin's training because it's so effective. Kevin is, I happen to know personally, a surfer, family man, and dog lover. Is there anything else I should say, Kevin?
Well, you should say that he actually hired me too. So that's.
Oh yeah, he hired Jeff. And I expect it had something to do with me getting hired, though I don't know. I do recall him interviewing me.
Oh boy. All right. So anyway. I'm not sure exactly how much you heard before, but as Jeff and Greg were saying, yes, I worked for Metastock for a number of years. And in 2008, I left the company to start this training company called Breakaway Training Solutions. And our website is learnmetastock.com, where we help people with whatever it is they'd like to learn. So one of the classes that we do is, of course, we cover the different tools inside of Metastock. And trying to think of a class to do today, I decided to go ahead and do a class on the Expert Advisor. And this is actually an advanced class here. And what I'm going to be showing you is I'm going to be creating a number of different formulas here. So depending on your level of expertise with Metastock, you might be looking at this and saying, well, I don't really understand these formulas or whatever the case is. But if this is of interest to you, the key is I just want to show you the capabilities. And number two, if you are interested in what I'm showing you here today, send me an email at the end of today's webinar, and I'll send you all the formulas that I'm working on here during this class. So what we're going to be doing is I'm going to create a new Expert Advisor from scratch. And I like to show it off this way because it really shows some of the capabilities of this particular tool. So the way that I'm going to do this is I'm going to divide this up into 3 steps. Number 1, we'll decide on the indicators that we want to use. Step 2 is we'll create a game plan of how we want to display them. And then lastly, we'll go ahead and create our expert. Now, when I'm generating or creating any type of trading strategy, the most basic thing I like to start with is just identifying what the overall trend is doing. Is the market moving up? Is it moving down? Is it moving sideways? Whatever the case may be. So that's going to be our first step. Second step, we'll use a second indicator to identify swing trades into the overall trend. And lastly, I'll use another indicator to identify specifically entry and exit points. So for our first one, for our overall trend, the indicator that I really like to use to identify trends overall are just moving averages. These are obviously the most common technical indicator that you'll find in any type of platform. And the idea here is that they're very easy to interpret. You can add as many different moving averages as you want. You can make it as complex or as simple as you like as well. But my game plan here today is I'm going to try to keep it as simple as possible. But as always, if you have any questions, make sure and send me a message there in the chat window. I'll be happy to try to help you out here. So the way that I'm going to do this for our first indicator here is we'll use a moving average to identify generally bullish and bearish areas, and we'll display them using what's called the ribbon inside the Expert Advisor. So let me jump over here and I'm going to change screens here and hopefully this works. Yeah, there we go. And again, if there's a problem, just let me know. But what we're looking at here is just an ETF of the S&P 500, which is, in other words, it's just the SPY, SPY, it's a symbol. What I've got here on our chart is just a 50-period simple moving average. Now, with this moving average, we can use this in a number of different ways, but again, we're going to try to keep it really simple. And all we're going to say that is if the closing price of the security is above the moving average, we're going to call it generally bullish. And if the price is closed below the moving average, we're generally going to call that bearish. And let's go ahead and then create our expert here based off of that first part. So to get started, up here at the very top, I'm going to click on the expert advisor up here, and we'll go ahead and create a new one. And the way that you do that is you click on this icon right here that has the plus sign in it. And then the second step to this is, of course, we have to name it. So I typically, whenever I'm creating something, I typically put like an exclamation point in front of the name. And that way all of my formulas get grouped together. And it's a lot easier for me to keep track of what I've created and define those different systems. So I'm going to call this just our expert advanced class. And for this first one, what we're going to do is we're going to jump up here to the Trends tab. Now, the Trends tab is what gives you the capability of placing what's called the ribbon on the chart. And in this case, you'll see you'll have a bullish and a bearish area here that you can work with. So what we want to identify here is, for example, in a bullish area, we want to identify if the closing price is above that moving average. So the way that you identify the closing price is just type out the word close. And if we want to identify if that's above the moving average, we want to put a greater than sign. And then we need to put the formula for a moving average. So now, again, this is where, we're getting into the formula writing and so forth. And again, if you're newer to Metastock, not, haven't worked with it all that much, if you want these formulas at the end, just let me know and I'll make sure and get them out to you. So the way that you write a formula for a moving average is just MOV, open parenthesis, your date array, which in this case is going to be the close. In other words, what I'm asking, or what the formula is asking for, is we want to do a moving average of the closing price. We follow that with a comma, and then the number of periods that we want to use. In this case, we'll use 50, and then the type of moving average. So in this case, I just want to use a simple moving average. So our first formula right here is just identifying if the close is greater or above 50-period simple moving average. Now, if we've written this and it's correct, or we feel that it's correct, what we can do for the bearish side is I can make a copy of that. And then I can go down here to the bearish side down here, paste it in. And then all I have to do is just change that greater than sign to a less than sign. So in other words, the close is less or lower than its 50-period moving average. So this is going to be our bullish condition. This is going to be our bearish condition. Now, to control what it looks like on your chart, if you click on the ribbon button over here on the right-hand side, this is going to open up another dialog where you can then specify exactly how it's going to appear. So for example, I want to make sure that the ribbon is displayed. So I'll make sure that that's correct or selected. And then the second one is asking about vertical lines. What that does is that will place a vertical line all the way through your chart. And if you want to see it that way, of course, then go ahead and choose that. But generally, I turn that off. And then underneath here, this is going to identify if the pattern is bullish, it'll be color-coded in green. It'll be labeled bullish. And if it's bearish, it's going to be color-coded in red. It's going to be labeled bearish. And you'll also note there's a third area here too, which is called neutral. Neutral just means that neither situation is actually true. It's neither bullish nor bearish. But in this case, we're only looking to see if the close is above or below a moving average. So in other words, we're not going to have any neutral area. So we're not going to worry about that. So we'll click on OK. And to see what it looks like, just click on OK down here at the bottom. And then choose Attach down here at the bottom. And you'll see that when you do that, you're going to get what's called the ribbon down here in this case at the bottom of our chart. Now, this ribbon, if you hold down your left mouse button on it and drag it, you can move this around your chart there as well. So if you'd rather see it at the top, it's fine. But generally what we're really looking for here is we want to make sure that where this ribbon, in this case, goes from a bearish to a bullish area, is where the closing price of the security closed above that moving average. So right there is where it became bullish, for example, okay? And then again, like over here, where it went from bullish to bearish, we want to make sure that this is the point right there where that security closed below it. And of course, then our ribbon is color coded correctly. So a lot of times what you're doing is that when you're working with these different tools, one of the best tips I can give to you is to try to break things down into the smallest increments possible, and don't move forward until you get that part correct. A lot of times I just see people just trying to do too much, and that's where they kind of run into problems. So again, we'll just kind of take this one step at a time. So let me go ahead and go back over here, and let me choose to show my other screen. There we go. So once we got that first part working correctly, then we can think about adding this second part here. Now for our second item, what we're going to do is we're going to add a swing component to this. And for a swing, a good swing indicator, in my opinion, is a MACD. A MACD is actually made up of 3 moving averages, and it does a really nice job of identifying turning points. So we'll use this as our swing component, and what we'll do is we'll color code the price bars accordingly. So if the MACD is quote unquote bullish, we'll color code the price bars to be green. If it's bearish, we'll color code them to be red. All right, so let's go back over here. And let me change that back over here to my Metastock. All right. Okay. Now, what I'm going to do for this one, to check this one, is the first thing I want to do is I want to plot my MACD onto my chart. So up here at the very top, I'm just going to look for my MACD indicator, and I'm going to, in this case, I'll drag it up here to the very top of our chart, and I'm going to use just the default settings here and just click on OK. Now, when you plot your MACD, for example, on your chart, yours is probably not going to look like mine. And the reason being is that one of the really nice changes that they made in version 19 is the ability for you to custom any type of look, feel of the indicators and how they're set up and so forth, and then save that as a default setting. So what I did, for example, in this MACD, for example, just so you can see it real quick, if I double click on the MACD and open up the properties of it, underneath the color style here, all I really did is I just changed the colors, and I also chose to use what's called a filled line. By doing this, for example, down here at the bottom underneath this default, you can choose to save this as a default every time you plot this indicator, for example. So again, that's a really nice feature that they added there that really makes it nice to work with the different indicators. Now, with the MACD itself, the MACD is actually made up of 3 moving averages. The solid red line itself is the MACD itself. And then the blue dotted line, this is a signal or trigger line of the MACD. So like so many different indicators inside the program, there are so many different ways that you can interpret these indicators. But what we're going to do again is try to keep this as simple and straightforward as possible. And what I want to identify is that when the MACD is above that trigger line, for example, I want to call that bullish. And if the MACD drops down below that trigger line, I want to call that bearish. And what we're going to do is we'll color code the price bars accordingly. So we'll open up our expert advisor, for example, and now I'll go ahead and just select the one that we've been working on and click on the edit button over here on the right hand side. And now what I can do is I can jump over here to what's called the highlights tab. And the highlights, this is the part that allow you to color code the price bars however you want. So for example, we'll create 2 different highlights, a bullish and a bearish highlight. So we'll click on new. We'll give this first one bullish. Oops, down in the wrong section there. Let's try it up here. And we'll call this bullish MACD, for example. And when that's true, let's go ahead and color code those to be, for example, like green. And then for our formula, what we need to identify here is we need to identify, for example, oops, don't tell me that's happening there too. Hang on for just one second. Sorry about that.
Well, the good news is, Kevin, we can still see and hear you.
Oh man, I'm about, oh boy. I'm gonna try a different plug. Let's try this. I was telling Greg, actually what's happening is I'm actually traveling and I'm in Spain right now. And There's a lot going on here. Ay, ay, ay. But hopefully I've got it in an outlet now that works and my computer doesn't die while I'm doing this. So let's continue on. All right. So to identify if the MACD is bullish and or bearish, we're going to look at the value of the solid red line above this blue dotted line, and we'll identify that to be quote unquote bullish. Now, to write the formula for this solid red line, all that is just MACD open and close parentheses. Now, the blue dotted line, this is actually a 9-period exponential moving average of the MACD. Okay. So again, this gets a little bit more complicated, but I'll go ahead and walk you through this. So we're going to do a moving average of the MACD, and we're going to do a 9-period and then an exponential moving average. So moving average of the MACD, 9 periods, exponential. And what I want to identify is when the MACD itself is greater or above that moving average. Okay, so this formula right here should identify exactly where that solid red line is above that blue dotted line. So we'll click on OK. And to see this, we'll click on OK, click on Close. But as you can see, I've got my prices of the chart itself in a candlestick form. So I want to change this to a different format. So I'll go ahead and double click directly on my candles. And we'll just change the price style, for example, maybe to like a bar chart. And we'll make the colors white and click on OK. All right. Now, by doing this, now you can see we've got some green colored price bars here. And what we want to make sure is that these are green when the MACD is above that blue dotted line. So we can see that it was true during this section. And some of it's actually kind of hard to see. And what you'll have to do sometimes, you really have to kind of zoom in and see, for example, the relationship of those two different lines there. Okay. Well, once you feel pretty confident that you've got that right, now we can do the exact opposite for the bearish side. So let's go back into the expert and we'll open it back up and we'll click on the edit button. And now what I can do is I'm going to just make a copy of this formula because all I need to do is just make one small change there to identify when it's bearish. So we'll click on new and call this one, for example, bearish. Oops, there we go. MACD, for example. We'll color code it to be red and we'll paste in our formula. And now all we have to do is identify that the MACD is less or lower than its moving average. So we'll click on OK, and let's take a look at that. And now you can see we've got a bunch of red bars here on our chart. So again, if they're green, that's red solid line of the MACD is above the blue dotted line. And if they're red, the MACD is dropped down below that blue dotted line. So that looks perfect. So we'll keep moving forward here and we'll add our third component to it. So jump over here. All right. No, that's not the one I want. Yeah, about that one. Let's see here. There we go. There we go. I think we're there now. Okay. So now for our third component of the system, what we want to add here is we're going to add a faster indicator to this to identify specific entries and exits. Now, again, a lot of different indicators we could use, but one that actually works really well to identify turning points are stochastics. And another real advantage to this, just like all these other tools, is that they can be adjusted to make them quicker, slower. They can be combined with other things and so forth. So we're going to use this stochastic, and we'll actually plot buy and sell arrows on our chart when we get a signal off of the stochastic. So let me go ahead and jump back over here and go back to our program here. Okay. Hopefully you can see my program again. Now, up here at the very top, I'm going to find the stochastic oscillator. And we'll go ahead and plot that on top. I'll just drag it up here to the very top. And we'll plot it just using the default parameters. Now, when you plot the stochastic, one thing to just pay attention to just quickly, it's not a big deal, but the default is 533, okay? Right there, 533. Just make a mental note of that, and I'll show you what I mean by that here in just a second. All right, so the stochastic is another indicator, for example, and in fact, it looks somewhat like a MACD where it has two different lines like this. The red solid line itself is the stochastic itself, and then the blue dotted line is just a moving average of the stochastic. So like all these other indicators, we can interpret it a lot of different ways. We can look to see if it's down below an extreme level or up above an extreme level. We can see the different turning points. We could look for patterns, you know, for example, like if there's divergences between the indicator and the prices, a lot of different ways to go. But what we're going to do today is we're going to just look at crossing points. We're going to identify if this red line crosses up above that blue line or if it crosses down below that blue line. And I'm not going to pay any attention to whether it's at an extreme level or not. We're just going to look at those specific points there. So let's go ahead and jump back into the expert here again. And I'll open this back up. And this time I'm jumping over here to the symbols tab. Now the symbols tab here, this is what's going to allow you to place, for example, like buy and sell arrows or notes on your chart when something occurs. So we're going to create two different symbols. We'll create a stochastic buy signal and a stochastic sell signal. So to start with, click on new. Again, we'll start by saying this is a stochastic buy signal. All right. And now what I want to identify is specifically where these two lines are crossing each other. So again, we're going to go one more layer deeper. We're going to go one layer deeper into the formula writing. And we're going to use a formula to identify where two different things are crossing each other. The formula we're going to use is what's called the cross function. And the cross function is written as cross, open parenthesis, your data array number 1, followed by your data array number 2. And the idea here with this indicator is that this will help identify where these two different items are crossing each other. So if the way that I keep this formula straight is that this item here, data array number 1 is higher and data array number 2 is lower. So for example, if I'm trying to identify where the red line's crossing above the blue line, I need to put the formula for the red line inside of data array 1, and I need to put the formula for the blue line inside of data array number 2. Okay. All right. Now, to identify the formula for this solid red line, it's the stochastic, which by default, you could write it as just STOCH and then 5,3. And as I was pointing out before, that 533 on that previous page, this is where that comes into play. So STOCH 5,3, this will give you the value of this solid red line right here. Okay. Now, the blue line is a 3-period simple moving average of the stochastic. So let me go ahead and write that. That's written as MOV, open parenthesis, our stochastic. And by default, again, it's going to be a 5,3. All right, so that's our stochastic. And now we're going to do a moving average of that. So we want to do a 3-period simple moving average. And we can abbreviate simple with just the letter S. So in other words, this is a 3-period simple moving average of the stochastic, or this is going to give us the value of this blue dotted line. Now, what I want to know specifically is where this red line is crossing above this blue line. So what I'll do is I'm going to grab this formula right here, and I'm going to put it right over the top of data array number 1. And then I'm going to grab the second formula, and I'm going to put that right over the top of data array number 2. Okay. And again, if this is, again, like I say, just sounding like too much, again, if you like this formulas, just send me an email. I'll be happy to send these to you when you're done, so you don't have to worry about it. All right. So what this formula is going to do now, this one's going to identify where the stochastic's crossing up above the moving average. So to identify what that's going to look like, if you click on this graphic tab, you can choose the graphic that you want to see displayed. So for example, I want to see an upward pointing buy arrow. I want the size to be large. And then of course, just choose the color that you like. Yeah, that pink's fine. We could use that. And I'll put a label of buy. And what I want to do here is I want to make sure that the symbol is below the price plot. So the prices are above that. And I want the label below the symbol, so it looks like this over here on the right-hand side. Okay. So let's just see what it looks like. We'll click on OK, click on OK. And then now you can see, for example, we've got a bunch of buy signals here in our chart, right? And what we're looking at here is we want to make sure that these buy signals are matching up with where these two lines are crossing each other. So that crossed up right there. This one's a little bit harder to see, but you can see that this is a pretty nice clean signal. You can see that this is nice clean signal, this is clean, and so forth. But again, once you kind of get to this point, you're in pretty good shape. We've got it in a situation where we've got our buy signals. They're identifying the crossing points of these two different values here inside the stochastic. Now, if we've got that part working correctly, we'll do the same thing for the sell side. So I'll go back into our expert. I'll open this one up here. I'll click on the edit button. And this time what I'm going to do is I'm going to grab the same formula that we just created. I'll make a copy of it. All right. And we're going to go, we'll create a new formula. So I'm going to call this our stochastic sell signal. And I'll paste in that same condition. But what we need to do here is we need to identify the opposite. And that is where the stochastic's crossing down below its moving average. So what I'll do is I'll grab this part of it and I'll cut that out. And then I'll just put it right after that part right there. Okay. All right. So this is going to identify now where the stochastic's crossing down below that blue dotted line. Now, when that occurs, we'll go to the graphic tab and we'll choose, for example, like a downward pointing arrow, for example. All right. And make this large. And yeah, we could color code this, whatever. Let's make this one. Well, I guess we'll do it that way. Now, this time I'll call this a sell signal. And I want the symbol above the price plot, and I want the label above the symbol. And we'll click on OK and click on OK and see what that looks like. All right. Now we've got a bunch of buy signals and we have a bunch of sell signals here happening all at one time on our chart. So at this point here, we've got a lot of signals kind of happening here, right? We've got three different things happening. We've got our ribbon down here at the bottom. This is identifying what the prices are doing in relation to this moving average. We've got our price bars changing colors based on the value of the MACD. And then we've got buy and sell signals based on the stochastic up here. So what's really nice here is once you kind of start working with this, is the next step is figuring out a way to get everything to work together. So that's what we're going to do next. So let me jump back over here. That's weird. Why does it keep doing that? I don't know. Okay. And let's see here. There we go. All right. So for this, what I want to do at this point is I want to combine the trend of the moving average, the MACD, and the stochastic. So in other words, what I'm really after here is I only want to get a buy signal when the trend is moving up. And the MACD is quote unquote in a bullish situation. And the stochastic then crosses up to give us a buy signal. So I want all three of those things to be lining up for a buy side. And then vice versa for a sell side. I want the slope going down. I want the MACD to be in a bearish situation. Then I'm looking for a stochastic to give us a sell signal. So let's jump back over here and let me show you how to do that. There we go. And again, your screen is going to flash. Hopefully we get it there back for you. Okay. Now, to do this, if you have gone this far, for example, and we want to figure out how to put all these things together, we've already have done 98% of the work. And all we have to do at this point now is literally just do a bunch of copying and pasting to make them all work together. So for example, I'll go into my expert here and we'll open it back up here. All right. So for this first one, what I'm going to do is I'm going to put all the bullish signals underneath the symbol here of the stochastic buy, and all the sell signals under this one right here. So for example, I'm going to start with the trends tab, and I'm going to grab the bullish formula here. So I'm just going to make a copy of this bullish formula. I'm going to jump back over here to the symbols tab, and I'm going to open up this one. And what we're going to do is we're going to make this, instead of just a stochastic buy signal, I'm going to call this a combo buy signal or combination buy signal. So I'll go ahead and change that name, and then I'll paste in that formula. There we go. Now, I've got two different formulas here. I've got the close is above its moving average, and I've got the stochastic crossing up above its moving average. In order for this to work correctly, what I have to do at this point is I have to put what's called the logical operator between them. And in this case, all I'm going to do is put the word and. By putting the word and here, this is saying that I need this to be true and I need this to be true. Okay. So if we click on OK and that box goes away, that means that the program at least has something it can work with. It might not be exactly how you want it, but you do have a working formula at that point. So we've got two parts inside our combo buy signal. So now we'll go to our highlights tab and we'll grab the bullish formula here. I'll make a copy of this one. Okay. We'll jump back over here to the symbols and we'll open this up, and then I'm going to paste this one in as well. Okay. And again, I need to put the word and at the end here. So now I've got three conditions. I got the close is above its moving average. I got the MACD above its average, and the stochastic is crossing up. Now I'll click on OK. And if I did this correct, for example, like in this downward trend here, if this worked correctly, I should get rid of a lot of buy signals here, for example, in this downward trend. So I'll click on OK. And you can see that that got rid of those there. So that's perfect. That's exactly what I need now. Now, what I want to do in this upward trend is I'm only looking for buy signals, for example, in a confirmed uptrend. So I need to do the same thing for this side here as well. So I'll go ahead and click on the edit, and we'll move this over, and we'll do the exact same thing, but we'll do it all for the bearish side. So I'll go to my trends tab. I'll make a copy of this formula right here. And then I'll click on OK. Oh, I'm sorry. Then I'll jump over here to the symbols, and we'll change this, for example, to a combo sell signal. And I'll paste in this formula, and I'll put the word and. There we go. And we'll click on OK. And then I'll do it one more time. I'll go to the highlights tab. I'll grab this formula, make a copy of it, and do the exact same thing. So we'll go to the symbols tab, and I'll paste that in here and say and. Okay. Now for a sell signal, what I'm looking for is the close to be below its moving average, the MACD to be below its average, and finally the stochastic crossing down below its average. So again, if we did this correct, what will happen is this should get rid of a ton of sell signals during this upward move here. So we'll click on OK, click on OK, and there you can see it really cleans up our chart a lot. So what we basically did here is we created a system that took three different indicators. And with these three different indicators, we're looking for them all to be trading in the same direction overall. We're looking for that general trend, for example, in a bullish move for the prices to be moving up. We're looking for the MACD to be bullish. And then we're looking actually at the stochastic to give us a good buy signal. And what's kind of interesting about the stochastic, using this as our third indicator, you'll notice that the stochastic, again, does a really good job of identifying turning points. So in this case, for example, in this upward move here, you'll see how the stochastic moved up, it came down and then crossed back up. So in other words, we actually had a little bit of a divergence here, right? The stochastic's moving down during this upward move. And then when it crossed back up, it gave us actually a pretty good entry signal at some of these lower points here on our chart. Okay. So yeah, so I know that this is a lot, but if you are interested in this, just send me an email and I'll be happy to, again, like I say, just send this over here to you because I know it's a lot of information. So with that being said, let me jump over here to the website over here for just a second. And at learnmetastock.com, we've been now doing this for quite a while, to say the least. And we have literally helped thousands and thousands of Metastock users, get more out of their Metastock program. And we do it a number of different ways. For example, like we do them through live classes. We do up to 3 live classes per week. But where the majority of our customers spend their time is underneath this section right here, which is called the video library. And inside the video library, we have well over 100 different training videos inside here on just about anything that you can imagine here. So one of the areas that I typically recommend somebody get started with is just taking a look at like the introductions to Metastock, and then the next step into Metastock, for example, just to get started. But in our live classes, for example, we do them again up to 3 times a week. Our live classes, I know, don't meet up with a lot of people throughout the world. So what we do is anytime we do a live class, we also record, make a recording of the class. So you can always watch that video of the live class there as well. So again, if they're not matching up with your schedule, you can always access recordings of it as well. But everything that we do in our live classes, you will find recordings of those subjects inside of our site there. Now, one area that we've recently have really added to quite a bit inside the Metastock program is inside of Metastock, of course. Let me just jump over here to the program here for just a second and just verify this. I want to, so I can show you this here. Inside your program, you've got all these different tools here on both sides of your chart here. And one of the questions that I've gotten, over the years and so forth are, what are all these different tools here, and how do they work and so forth? And for that reason, what we did is we've added 18 new videos to our service there that will explain exactly how to use each of those individual tools. So what you can do is inside of our video library, you can go to, for example, this section right here, which is called the drawing tools, and that'll cover, again, like I say, all those different tools on both sides of your Metastock screen there, and hopefully explain it to a point where you can then, of course, use it in your trading. So that's all brand new right there. But in addition to that, we have training on, of course, all the different tools here, system testing, exploring, whatever the case may be. One of the most popular sections of our service, though, are the trading strategy section. And this is where we'll take trading strategies, for example, from a book, a magazine, whatever the situation is, and I'll show you exactly how to duplicate that inside your Metastock program. And where that becomes really valuable is, say, for example, like on this one, the super trend indicator. This was a strategy that I got out of Stocks and Commodities magazine. But once you actually watch the video, if you want to download the formulas into your Metastock program with what I'm showing you, all you do is down here is click on the link underneath each one of these videos, and that will actually, again, install all the formulas directly into your Metastock program. Okay, so we've got a lot of different ways that we can help you there at Learn Metastock. So hopefully, if you have any questions or need anything, of course, just let us know, and we'll be happy to help you. All right. So with that being said, I'll go ahead and turn it back over to Jeff.
All right. Let's see. Did you see the question from Kenneth in the chat?
I did not.
Said,
Jeff, I've got so many things going wrong here. It's just
I'm just glad
I'm having a fun time just showing my screen.
I had to go through quite a number of dad jokes getting you on here today. Now, Kenneth wanted to know, can an exploration and system test then be written for the EA in addition?
Oh, absolutely. And that's really one of the advantages of doing something like this, is that these formulas, you can literally copy and paste them into the other power tools. So if you're searching or want to know for, securities that are meeting all 3 of those criteria that I was showing you, you literally can copy and paste it directly into the Explorer, for example, and then scan on and find the securities that are meeting that criteria. Now, to help explain how to do that, depending on your level of expertise with Metastock, then of course, what I'd recommend is take a look at our Explorer videos here, right there. Just click on those right here. And these will walk you through, for example, how to work with the Explorer, the advanced features, and so forth. So you can take this, this, of course, you can of course take this as far as you like, and we're there to help you with whatever it is that you want to get out of the program.
All right, let me go ahead and make me the presenter here. I do want to talk a little bit about Learn Metastock. Thank you very much, Kevin. Really appreciate you coming in. Glad we got you working. Okay, let me go ahead and do this. And again, yeah, as Greg had said earlier, let me go ahead, actually, with the luck we've had with Kevin, I'm going to dismiss him just so we don't run into any issues with this. As Greg said earlier, every time we onboard an employee, we actually have them go through Learn Metastock. That's the first thing that I'll do. I'll be like, here's a computer, here's some headphones, have at it. Because really, what Kevin does is a really good job of talking about not just Metastock, but the different ideas behind technical analysis. One of the things that he does that I like a lot is he'll take a system or a methodology out of stocks and commodities, code it for Metastock, provide the code, make it available, and then say exactly how he feels about the system, how it works, maybe the benefits, the disadvantages. Those are all stuff that he kind of does as part of the service, the Learn Metastock. So with learnmetastock.com, it pairs very, very well with the extended trial. He does 3 live training classes a week. As part of it, it includes 21 basic Metastock videos, some expert advisor videos, system testers, all kinds of videos. But in addition to that, I kind of talked a little bit about the formulas that he has. As part of learnmetastock.com, he's actually done 14 different expert advisors, 28 different system tests, 13 scans. These are all available as part of his service. You can kind of go see what you want, grab them, download them, very, very easily get them. And again, one of the things that we've been talking about extensively throughout the week is just how big of a toolbox Metastock is. You know, the ability to test ideas, and scan. And Kevin gave you a pretty good insight into how easy it is to code for. But the thing about Metastock is it is a toolbox. It's a toolbox we've been making for decades now, right? It's been rated #1 for decades now. So as any toolbox is, the better you understand how to use those tools in the toolbox, the better it's going to work for you. So what we're going to do, you can pair this with any extended trial, or even if you've had Metastock for a while and you just feel like you're not taking as much advantage of the software as you could be. Maybe you're not utilizing some of the tools in it. What we're going to do is, for all the new customers that want to do Learn Metastock, if you pay for a month, it'll be $99 a month, but we'll also give you 3 months. So again, that'll be $33 a month. And it pairs really well with Metastock and the Metastock trial subscription because the length of time is the same. So if you want to sign up for that, you can go to metastock.com/learnmetastock 3-for-1. You can call us at 800-882-3040, or you can go to metastock.com/saleschat. Yaka, I'm going to stop trying to pronounce your name. I'm sure I didn't do it very well. Is there an advanced decline indicator, and how does it work on options flow? So there are advanced decline indicators that are in Metastock as well. So for more information, I'm not sure exactly what you mean by when you say options flow. You are welcome to kind of put a little bit more information in the comments, or if you want to chat with us, Mr. Yaki, just metastock.com/saleschat. So, okay. All right. Any more questions? No. Okay. Metastock.com/learnmetastock 3-for-1, 800-882-3040, metastock.com/saleschat. I do want to say thank you to Stocks and Commodities Magazine for always sponsoring our events, always being great partners for us. www.traders.com for that. All right. Of course, you can also sign up for Learn Metastock or get any of the other offers that we're talking about this week that are available from Metastock at metastock.com/conf-promo. And if you haven't tried Metastock, I'd recommend you do it. I'm running through a list of scan results today, and I just took a couple trades. I wouldn't be able to trade as well as I do without a great scanner and without using Metastock. So if you want to try it, if you buy a month, we'll give you the second and third month for free. Pricing starts at $75, which is $25 a month. Metastock.com/conf-promo, metastock.com/saleschat, 800-882-3040. Greg Lewis, you know I'm looking over to the prize list, so you know I'm going to call you next.
All right.
All right, let's see. I'm glad we got, I am glad. Did I close the spreadsheet? I am glad that we got Kevin running.
Oh yeah, It's so funny. He just doesn't get rattled. Like he just, I mean, he does, but he was just so like, okay, let's go, boom, and he just says a very good. That's why he's such a good instructor, because he just lays it out piece by piece, gives you the information you need, not more than you need. I really can't recommend more highly his classes.
Yeah, I mean, literally, it makes it so much easier for us to onboard somebody. You just gives it so much better. Yeah, it's a great. And again, Metastock's huge. It's nice to have training that's there.
Yep.
All right. We're going to give away a Theta Trader membership. Erik Gebhard is going to come in and talk about this as soon as we're done. So, but what we're going to do is he's added to our prize pool free membership. So with the membership for this is a retail value of $997. And Greg, what I need from you, you know what I need from you.
Yeah.
Give me a number between 2 and 5,089.
Okay, according to Google Random Generator, ooh, it lowballed it. 959, 959, 959.
That's a Mark R with a Gmail account in the US of A. So good. All right, now I would like you, as I'm kind of just copying and pasting this into my spreadsheet so I don't forget, I would like you to tell everybody watching on YouTube how they can make sure that they're entered into the prize drawings.
Yeah, absolutely. If you're on YouTube or watching right now or watching this recording, maybe tomorrow or something, by the way, you can do this. Well, I'm sorry, I'm getting too complicated. Bottom line, if you're on YouTube, go to metastock.com, click on the banner at the top and register there. It just takes a moment and then you're good to go. There's no point in registering more than once. It doesn't increase your chances of winning a prize. And if you're on GoToWebinar, you're probably okay and you don't need to worry about it. And that is the in and out.
If you are watching short, GoToWebinar, there's definitely, you don't need to worry about it. So
yeah,
cool. That's it. Thanks, Greg.
But also there, this is only day 4. There is another entire day. So if you register now, you have chances of winning all those times tomorrow. So, and also Jeff, you should point out that I think you said it before. On the last giveaway today, rather than going from a registration, you're going to go by people who commented. So we encourage your comments and questions.
Yeah. For the Metastock Mega Prize, it's based on somebody asking a question, making a comment. You can even just comment on how salty my beard is getting instead of salt and pepper.
Or salty your language is getting. All right, I'm out.
All right, thanks, Greg. Michael wants to know, where are the sessions being recorded and available? I have to miss tomorrow morning. Well, Michael, I'm going to miss you tomorrow morning. However, all of these sessions will be available on the YouTube channel at youtube.com/Metastock. We will fire also the direct link to you after the session ends. So you can write that down. This is youtube.com/Metastock. If you haven't subscribed and become part of the YouTube channel, you should. We do a lot of good content up there. So our next presenter is Erik. Erik's going to talk. And Erik, we need to get a better picture of you than this. It's too blurry for what we're using it for. But we'll worry about this later. Erik founded AltaVest in 1997. It's a registered broker firm. He has some pretty cool options technologies that he's going to talk about. I don't want to spoil it for him because I wouldn't be able to anyway. I'm going to go ahead and get Erik started. Erik, how are you doing today?
Hey, good to see you, Jeff. Doing great. And
okay.
My picture is blurry by design.
Oh,
it's more of a glamour shot.
It's blurry because you don't want people to be able to see exactly how handsome you are.
Something like that.
Okay, I gotcha. I see what you're saying. All right, let's see. I can see your screen.
Well, let me see if I've got the right screen here.
You're in the speaker view screen.
Okay, let me switch that here.
Perfect. First try.
Okay.
All right.
All right. Yeah, very good.
Your turn.
Okay, great. Yeah, that was a great presentation by Kevin. I enjoyed that. That was a tour de force on digging into Metastock, but We're going to do something a little bit different. We're going to talk about options trading and using automation. And we're going to look at what the professional option strategies are and what they aren't. And we have an algorithm that we've created to help us along the way to choose the trades for us and to manage the risk and the reward. That's just as important, of course. Once you get into the trade, you need to know what to do with it. And we're not going to rely on any screen watching where you're spending 6, 7, 8 hours in front of your screen. And we also have a back testing engine and a trade simulator. And along the way, we're going to talk about how we can help you and be your coach along the way. So let's get into the material here and talk about speculating. Of course, we're always trying to make money and profit when we're trading. That's the whole idea, but there's always risk involved. If there was no risk, there'd be no profit. So do take a moment and look at that risk disclosure. You could certainly take a screen image or a copy of that picture and read every word and put you to sleep perhaps. But the important thing is when trading, you should only be using risk capital, and that past performance is never a guarantee of future results. And a little bit about AltaVest. We are a registered introducing brokerage firm. We develop proprietary options technology. We're going to show you that. We've traded tens of millions of contracts along the way over the years. We're registered with the CFTC. We're members of the NFA. We're located in California, and that is yours truly there. I graduated from USC many years ago with my business degree. I'm a co-founder of AltaVest. I used to have my various securities licenses, Series 6, 63, insurance. Currently have my Series 3 and 65. Those are for commodity futures and investment advisors. Okay, and maybe you've seen us before. We have a bit of a presence when we do some of these presentations, and it's always fun to be invited to these events where they have multi-speakers. I enjoy listening and watching and learning from all the speakers. But maybe you've seen us in some of these other venues or perhaps in the financial press. Here's something just yesterday or the day before on Market Watch talking about the deficit and inflation and the gold market and the Fed and so on and so forth. But you can see us quoted there. I guess that was yesterday. But in any case, with the introduction out of the way, let me jump into maybe something you can all relate to. Trading is not an easy thing to do successfully. We could probably all agree on that. And there are probably 3 barriers that you might, I guess you could say, relate to. And certainly our clients over the years can relate to these. That's sort of how we came up with these. So confusion, or a lot of different phrases for that, narratives, noise, conflicting opinions, lots of clickbait, just a lot of information. For example, every year the Wall Street firms give their projection for the next year on the S&P 500. I always find it fascinating. Here you have Wall Street S&P 500 price target ranges anywhere from a negative 25% return to a positive 18% return. And this is not actually a full list, but I guess the question I have is, what do you do with that information? Because who do you choose? What do you do? What do you go throw a dart, take an average? I don't know what you do, but I don't think that's useful at all. And this chart here on a little bit of, let's just say, over the top technical analysis, a little bit of humor for us too, because we can overdo things at times as well. This guy here says, according to my calculations, the stock market will fluctuate today. So that's what we're talking about, too much info. And how about no time? There's time and discipline needed to screen watch, and not all of us have the luxury of time or having a setup like this in their home. It looks great, but the practical reality is not everyone has time to do this. This person here says they sit in front of the computer, they trade full time from the market open until the close, and every once in a while after market hours. So that's just really not that realistic for most of us. And the third barrier or hurdle would be really us. We become our own worst enemy. We are full of emotions. We're emotional train wrecks sometimes when we're trading. You got the fear and the greed. We're on that roller coaster of emotions as we're trading here. I think we can all relate to this. You're feeling pretty good about yourself and pretty smart when you're making lots of money, and things start to turn sour, start to go downhill, and maybe you get nervous and anxious, and sometimes you wave that white flag of capitulation and surrender when it doesn't look like there's any hope, but then perhaps things turn around, you get optimistic again, and that whole cycle repeats itself. So we need to control our emotions and stay off of that roller coaster. And what we're going to talk about and show you, I think, helps do a lot of that for us. And it's difficult, though, because in the algo-driven landscape, things are moving more quickly than ever these days. So your competition doesn't have emotion. Everything is automation, built-in controls, a lot of essentially a mixture of high-frequency trading and positioning and repositioning and hedging and speculation, and it moves quickly, folks. And this is according to Tier 1 Alpha. More than 50% of global trading is controlled by computer algorithms. Traditional fundamental analysis is no longer enough. Understanding how the machine-driven side of the market can impact your portfolio. So we think there's a lot of truth in that statement. And we're going to talk about automating professional option strategies to help us compete in that landscape. So first of all, which options markets are we going to talk about? Well, we're looking at stock index futures options. And these are available, of course, as a tool, a very flexible tool. That's why we like them. You can use them to hedge your traditional assets, your portfolio, or perhaps just purely speculate. These are all highly liquid, and these are the major benchmark indexes. And that's in large part why we focus on these. So these are the primary markets we're going to talk about right now. The Russell 2000, small cap markets, stocks, I should say, and the NASDAQ 100, mostly large cap tech, and then the S&P 500, all the large cap stocks. And one reason we look at these indexes is really because of the volatility. So let's compare volatility of an index versus an individual stock. Here's Tesla versus the S&P over the last 3 years. Obviously, Tesla is the black line. The S&P looks very tame in comparison. And also, an index may move in different directions versus an individual stock. Here's Alibaba versus the S&P. The S&P, of course, has done very well in the last 5 years, but not so much for Alibaba. So you got a big disparity in the spread there. So if you pick the wrong particular stock and kind of hold the bag, that may not work out well for you compared to the lower volatility of an index. And of course, stocks can make idiosyncratic moves based just on news and headlines and fundamentals. Here's one just from last week. Here's Oracle. Look at Oracle before the news and look at the S&P. Almost look like they're in parallel on flat lines. And then, you know, you saw what Oracle's up 40-some%, I think, just overnight. And it's kind of fading a little bit, but nonetheless, it makes the S&P look like it's not even moving in comparison. So that's why we like the indexes. Sometimes that lower volatility can be used to our advantage depending on the option strategies we're talking about. So we're going to show you that here and why we're looking in particular on the E-minis. So for example, the E-mini S&P 500 futures index. We're going to look at that, and we mentioned the Russell and as well as the NASDAQ, but part of another benefit here would be you don't need to choose from 6,000 plus different securities. So that's kind of a benefit as well, kind of simplify things. And the mini really is bigger than you think. This is interesting. You probably don't know this. Not many people would think about this, but the E-mini S&P 500 futures market, it outtrades all ETFs around the globe by over 2.5 times. In terms of its average daily dollar volume. So you can see here, 192 billion versus ETFs at 85 billion, and that's from the CME group. So if you didn't realize it, the E-mini is actually a bit of an oxymoron. It's actually enormous. So that's why we like these markets. And the options are also very, very active. Stands to reason. If the futures contract, the underlying contract is active, then so are the options. 1.5 million average daily volume on E-mini S&P 500 options, one of the most liquid options markets around. And before we jump into the demo, we're going to learn 2 letters in the Greek alphabet. Delta helps us determine probabilities when we're trading options. And the formal definition is how much does the option value change with a change in the underlying asset price. And it's also the approximate probability of an option expiring in the money. So here's an example of a delta at 0.25. And what that means, there's a 25% chance that option would expire in the money. But conversely, the inverse of that would mean there's a 75% chance it expires worthless. And of course, the delta is always moving. It's not just one number that stays static. It's dynamic with price and time. And this is important here too. The delta does not represent the probability of a winning trade. And then there's theta, the other Greek letter. So theta is just references sensitivity to time. It references time decay when speaking about options. So remember, options are a wasting asset, as they call it, and they always decay. They have limited lifespan. And here's what they look like. You want to look at a graph here. You can see as the option approaches time zero, the value drops and drops and drops. Okay, so which option strategies should we use? Well, there's several, more than several to choose from, and that can be another, I guess you could say, hurdle, which, in other words, which strategy is most appropriate in a particular circumstance. Well, let's look at how large firms might be trading options, and we'll use an insurance company as an example. Well, you know they get paid premiums to assume risk. You pay them a premium, and they're selling and managing time. They're insuring themselves or hedging, and they're consistent and they're patient in their process, and they're really relying on probabilities and favorable long-term odds, you know, statistics, actuarials, formulas, you know, all the types of things that the number crunchers love. And Wall Street pros are doing the same thing, and part of the strategies that they use are multi-leg option spreads. And they use theta decay to their advantage, and they collect premium from buyers to offset their cost for their trades. So here's a quote from this woman. I have her link in a little bit later. And it says, an option spread is the buying and selling of different contracts, a very common way for investors to hedge risk and volatility. And it's usually cheaper because you can offset your cost by the proceeds from different contracts. And it's been used by Wall Street professionals for decades. So basically, if it's good enough for Wall Street, it should be good enough for us. And what does that actually look like? What is the strategy or the strategies they use? What do they look like? Well, here's an example, very simple. You sell an out-of-the-money call spread. This happens to be the E-mini S&P 500 for the August end-of-month expiration. So you sell this out-of-the-money call spread. You collect net premium for doing so. And you can see the market here below. You got the vertical line there as your expiration date for that particular trade. But that's just what it looks like, and we're going to get into more detail in just a second. And here's something more of a non-directional strategy called an iron condor. You sell an out-of-the-money call spread and simultaneously an out-of-the-money put spread, and you collect net premium on both the puts and the calls on that trade. And then you look for the market to stay range bound, like in between those black arrows. Generally speaking, that trade would be profitable if the market stayed within that range. Then there's something called the dragonfly. We created this years back. It's a variation on the condor where you collect premium and you add another leg to the strategy. So there's 3 calls and 3 strike prices for the calls and 3 strike prices for the puts. And you essentially place this as one order, all doing it simultaneously, and you collect net premium. And I'll point out a little bit later, though, the quantities here. I'll get into why we do that, but essentially you have 4 that you sell of the red line, and then you buy 3 further out of the money calls. That's the blue line above at the top. And then you buy 1 closer to the money call here. And you own this call. So the delta is higher, and that means it can act as a bit of a additional insurance or a buffer or an additional hedge. And it changes the whole dynamic of this dragonfly trade compared to a condor. And then you can see the same structure here with the puts. You sell 4, you buy 3, and then you buy 1 closer to the money. And you're going to wonder probably, how do I know which options to choose and select? Well, that's what we're going to show you. And then what happens is you get a blue signal, and that's the RTI, and that's our proprietary indicator, and that means take profits. So when you get that blue signal, you have an order placed to buy back the spread. You can see at this point in the trade, it matures enough, and you cover your trade, and you take your winnings, and you move on to the next position. And you can see the vertical line is where it expired. So you get out well before expiration. So rookies mostly buy call options. That's what a rookie trader is almost always going to rely upon. Here's a quote from the CEO of Options AI. Majority of small-time traders are buying the most basic call and put options, which have a much lower probability of profit versus advanced strategies like option spreads. So if you're only buying out of the money calls, you're likely going to lose money over time. In fact, they referenced Robinhood in 2021, 11% of their monthly active users that traded options, fewer than 1% did a multi-leg options trade. So keep that in mind. We don't want to trade like the rookies. We should always look to what the professionals are doing and try to skew those odds in our favor. And he mentions here that the question that an option trader should ask would be, can I have straightforward access to the option strategies that Wall Street uses? And I think the answer is yes, and that's what we're going to show you with our demo here. We're going to actually reply to a live trade alert as well. We're going to show you how that works, where you just simply touch accept on your phone, and then our technology handles everything for you. So these are professional option spreads created and managed for you by algorithms. That's called Theta Trader is the technology. Pre-built spreads or a proprietary algo will create these theta trades, one-touch responsive trade alerts, bull, bear, and flat market strategies, and then automation using our indicator called the risk thermal indicator. So we're going to do a demo here. Let me switch screens. Okay, so it looks like this on our dashboard. And if you can't see my Theta Trader dashboard, someone please let me know. But as far as I can tell, you're looking at it. And this here is where the alerts would come in on your dashboard. This here would be all your Theta trades for the day. And there are bullish strategies and bearish and non-directional strategies, and they're all pre-populated and built for us. We're looking at the 3 markets we talked about, the E-mini S&P 500, NASDAQ 100, and Russell 2000. Then on the dashboard, you can see at a glance all your open short option spreads, or just short positions in general. And these are always covered option spreads, I should point out. And then these are any open bought or long positions down below. And then to the right here is your account information. And this is all integrated with your AltaVest brokerage account. So Theta Trader is our technology that AltaVest built for AltaVest clients. All right, well, let's look at an example here of a dragonfly. We'll look at an E-mini S&P 500 dragonfly, and you can see there are trades available anywhere from 33 to 72 days till expiration. So the formula behind the scenes, I guess the wizard behind the scenes, the computer algorithm is choosing these particular expirations, and also the strike prices are pre-selected for us. And you'll notice here, this is your potential profit at expiration. And then this is something called the targeted annualized return at expiration. And I would just point out, this number here really is to compare one trade to another, to essentially relate itself to another trade, not necessarily to say if you place this particular trade, you're going to make 59% return on your account. This just is to compare one trade to another. So you can see the strike prices are pre-selected. Let me go ahead and drill down, and we'll look at a graph of this trade. So this would be selling the 5,900 puts and the 71.75 calls. This particular trade has 72 days till expiration. And here's what it looks like. You can see the vertical line is the expiration date. And you can see the structure here of the calls and the puts that we talked about on the Dragonfly. So you're selling 4, that's the red line. You buy 3 further out of the money, and then you buy 1 closer to the money. And the difference between the strikes in this case happens to be 50 points here, but it's not always that way. It could be different depending on market conditions. Then you have the same structure on the puts. But the net result is you collect premium on the puts and the calls, and you do this as one order on a net basis. You can see all the details. We won't go into every detail, but you can see the put risk, the call risk, commission, cash required, maximum profit potential, targeted return on cash, and your targeted annualized return. I would also point out that Dragonfly would be considered more of a risk-averse strategy compared to a Condor. But let's look at this here and drill down. You can see selling 4 of the 59 puts. And let's look at the delta, a 9.92% delta. So that means there's over a 90% probability the puts that are being sold to someone else will expire out of the money. And then look at the calls, 6.34. So over a 93% probability that the calls that are being sold would also expire out of the money. So that's why you're collecting premium. The computer basically is choosing these particular strikes because they have a high probability of expiring out of the money, at least according to the math. You can see the cash required on a Dragonfly is, in this case, $46.49, so just a little bit less than $5,000, and then your maximum profit potential here. And people will ask, well, why am I allocating 4,600 to make a max of 351? Well, the answer is the delta, essentially. And these are higher probability strategies. And this is what it's like when you collect premium. It's like picking up dollar bills along the side of the road as opposed to trying to pick up a $100 bill in the middle of traffic. So it's a more risk-averse approach. And you can see it always defaults to a sell. You're selling the spread, trying to collect the premium. Quantity always defaults to 1. You can raise the quantity or lower the quantity. You can see the numbers changing. You could change the value. This is 8.7. You're trying to get that or higher. And we'll just leave that alone. You could change the strike prices, by the way, if you'd like. But really, most people don't do that. But you could if you wanted. And we'll go ahead and place that order. And that's a demo account. So you can see here, it just assumes that you're filled in this demo account. So that's just how simple it is to place a trade that would otherwise be so complicated you wouldn't probably be able to follow it or build it on your own or even track it. And let me show you how to track this in just a second. But what I first want to do is show you the trade simulator up here. We also have a back testing engine, and I've loaded a couple of these here so we can kind of play a game, I guess you could say, compare a Condor to a Dragonfly. So here is on July 1, it's a July end of month Iron Condor. Let me squeeze this down a little so you can see more of the screen. Okay, we can use these buttons to play, go forward, you can go all the way backward. We can go right to the end in one click, but we're just illustrating here. So you can see the RTI is green. That means do nothing. Green is good. Okay, all is well. The market's just going sideways. So remember, you sold this call spread and this put spread, collected premium for doing that, and you look for the market to stay really essentially between those red lines, basically speaking. All is well, and then you get a blue signal here, and that's your profit taking signal, and you have 3 days left. So you can automate this so that ThetaTrader is monitoring and tracking your account every day, and once you get a blue profit taking signal, it will automatically place an order for you. But remember this here, that was July 29 with 3 days till expiration. Now let's compare a dragonfly to the condor. So this is the same end of month July expiration. Instead of a condor, you placed a dragonfly. Obviously the same market movement. But look at this. On July 17, you have a profit taking signal, and you have an order that would be placed for you to close out this position and take your profit. So this trade matured much more quickly compared to the condor. And that's again because of the different structure. You own this call right here, has a higher delta, and it can provide a lot of robust protection if the trade comes under pressure, can allow you to get out of a trade earlier, or it may even allow you to take a profit on a dragonfly compared to a loss on a condor. So you'll notice here, you had to wait till July 29 before you could close that trade out, but yet you have a profit signal here on July 17 with the dragonfly. So that's a big advantage. And then let's look at another condor. I kind of forget what happens here. Yellow is elevated risk. You can see why. It's getting closer to your upper boundary there. And orange, and then finally red. Too much risk. Take your loss and move on. And when it turns red, you can also have that automated. So you'll be able to have orders placed for you and close out that trade on your behalf without screen watching and monitoring it. And the algo says there's too much risk in this trade. Markets move too quickly against us. So that's the May end of month condor. And I believe this is the May end of month dragonfly. It is. So again, let's see if the condor and the dragonfly have a difference in performance. So the same expiration, same market movement. You see that yellow RTI, elevated risk, and the orange RTI, more elevated risk, but it still says don't do anything. And then it gets green. So you're back now profitable. And then you finally get a blue RTI, which is your profit taking signal. So the dragonfly in this case actually ended up being a profitable trade versus the condor that was a losing trade. And you can see why back here, as the market's running higher and higher up towards your upper boundary, your red short calls, this call that you own actually paid dividends and became more and more valuable at a faster rate because the delta is higher. So it provided some protection, just enough to keep you in the position so that it could then have a chance to mature and theta decay could start to work. All right, so there's a good example. And let's see, there's one other. Let me go back. I want to show you the trade alert now. So you'll see the active trade alert here on the home page or your dashboard. So when a trade alert gets sent out, you'll see it here, and then you just click view. And then you'll see here, here's the trade alert on your screen. There's a graph explaining the alert. This is the November week 3 dragonfly. And you'll see the quantity is already pre-selected for you. So every alert you receive is customized and tailored to you and your account and whatever it is you're doing in your account. So it looks at other trades in your account, looks at the expirations, it looks at the strike prices, it looks at the market, and also the available capital and how much concentration risk you may have in any particular market or position. And then you'll get the alert that's also pre-sized, and you could change the alert if you'd like by only lowering the risk. You can't increase the quantity. So this one came in as a quantity of 8, selling 8 of these dragonfly positions. And you'll see here you're trying to enter at 8.35 or higher, collecting 26.68, and your cash required in this case 37,332. and 65 days till expiration. I should also point out that everything in ThetaTrader is net of all costs. So I should have pointed that out earlier. But just for kicks, I'll go ahead and change this to a 7. So we'll do 7 of these, and then we'll just touch accept, and it's just that simple to accept a trade alert. All right, now let me jump over. Wanted to show one other trade on the simulator, I believe, or actually, no, I wanted to show you here, the settings. So you go under my account, let me show you how to automate everything. You go to settings, and then you click activate risk manager, and you'll notice there's a red, an orange, or a custom level for the RTI. And I just have red as my default setting for the demo account. You could change it to orange if you'd like. That's a lower RTI setting, or you could change it anywhere from 25 to 50. And you're welcome to do that, but keep in mind, if you change the RTI from the default to something lower, that means you'll have more frequent losing trades. However, the magnitude of the losses will be smaller. So if that's more comfortable for you, that's okay. I just leave it as default on the demo account. And then you'll also activate your profit directive right here. Then you just click Save Settings. And it's just that easy. So then you can automate everything in terms of managing the position, whether it's for a win or a loss, you'll be out before expiration. There's also a great help file here, and it explains the color coding to the RTI. Don't have to get into all of it, but it's all explained here. And then we also have daily research available. And you'll notice we do a bit of technical analysis here, and I'll show you a little bit more in detail in a few minutes, but we look at the E-minis, and then we also look at some of the option flow data, look at some of what's happening with dealer positioning and options, and then we kind of provide a market outlook as well. And that's done every day, help provide some context to what's going on with the markets. And I should also point out that there's a great video series here on navigating within Theta Trader and placing trades and whatnot. And we have an education package. So we have an educational package here of videos, and you'll learn about AltaVest, and then starting with the basics of futures trading all the way to the advanced option spreads, some of which we've covered today. So very good. And we've already accepted that alert. And then I wanted to show you one other thing here. You can look at closed positions all on one page as well. So here's closed positions. You can filter by time and market and date range. And you'll see there's 20 trades on this page. This is just my demo account. I wouldn't really draw any conclusions from the results of the demo account, but I would say this: you have 20 trades total, 13 winners, 7 losers. Look at this here though, you have 11 short positions or short option spreads where you're collecting premium. 10 of them were winners and 1 was a loser. And then meanwhile, you've had 9 long or bought spreads or debit spreads, not credit spreads. 3 were winners and 6 were losers. So that actually kind of correlates quite well with what we're talking about. You have the higher opportunity trades when you're selling premium and collecting premium versus when you just buy premium. So, and if you want to look back in time at any particular trade, you just click on it. You can see the gray, it's highlighted, and you scroll down and you can go back and say, here we were when I placed the trade, had 47 days till expiration. And it's very common for a trade like this to show a negative P&L at first because theta decay hasn't started to work. But then as it starts to work, you can see you had a profit taking signal here, and then you had closed out that position. So let me show you how to operate your alerts via phone. You saw how it works on the dashboard. But I should also point out, we're not just doing neutral or strategies like dragonflies or condors. Sometimes there's not a condor because the algorithm says it's not a good opportunity. But you can do any number of these bearish strategies or any number of these bullish strategies on any of these markets as well. So I just want to point that out. We're not just only selling condors and dragonflies. Just wanted to make that clear. And let me show you what I think is probably the best feature of all. In fact, that's kind of the feedback we get. All right. So we've got the one-touch trade alerts, even more convenient than going to your dashboard. So these are, of course, integrated with your AltaVest trading account. You saw how they're what we call live alerts or dynamic alerts. You just touch accept and your order is placed, or you can touch reject. That's fine too. But here's what it would look like. You get an alert with a link. You just touch that URL there, and it will take you to the alert page on your phone or iPad or what have you. And you'll get an explanation of this particular trade that's on the alert, how many days till expiration. You get a screenshot of the image there, what it looks like. You see the calls and puts, see the market currently trading right there. And this one is set up to sell a quantity of 7, collecting 27.72, 66 days till expiration. Again, you could change that quantity if you'd like. You could go lower, but not higher. We just moved it down to 5. And that's all you have to do. You read everything and you just touch accept, and then the order's placed for you. So it's just that easy. Couldn't be more convenient and user-friendly. And here's what's involved with becoming a Theta Trader member, and here's what you get. You get everything we just talked about with the Theta trades, the pre-generated option spreads, the risk thermal indicator, that's the automatic risk and profit controls, the color coding there. And again, these these trades are tailored for your account. So all you have to do is touch accept if you like what you see, and then the RTI can automatically manage that position for you. Included with your Theta Trader, you get actually live people to help you along the way. With private coaching, we can do screen sharing sessions with you, Series 3 licensed experienced traders. So they can work with you, talk about your trading history, talk about your goals, review what you're looking forward to achieving and accomplishing, kind of have a co-pilot. And then of course there's more. We have our daily research. You saw that briefly, but I wanted to point out, here's an example of how we like to use Metastock. We kind of have a not always the same approach, but here's just a very simplified approach. You can see here on the E-mini S&P 500, this was back in late July. The market's making a high there. You see that blue arrow at the top, but then you see the RSI, the relative strength indicator, is not following. And you're also spent a couple days above the top of the upper band on that Bollinger Band. So this would have been an opportunity here to make us at least pause and think, maybe we should consider a trade that is at best not bullish. It doesn't mean when you get divergence like this that you're going to have a big crash. It's just oftentimes means at least you're going to get some consolidation. But in this case, you did get a nice pullback to the bottom of the Bollinger Band. It happened very quickly. And if you look back, you say, well, what could I have done with that signal? Well, maybe you could have placed a what we call a bear hedge strategy. Like I pointed out, you can do bullish and bearish strategies, and that would have worked out well, of course. But just want to point out that sometimes we have the algo developing these strategies for us, but you don't always know when it's best to apply them. And so we use some of this technology here to help us along the way. Here you had a similar condition here in the Russell, the bearish divergence. Look at this one. You had the market making this high here on the chart above the top of the Bollinger Band for a 2 days there in a row, and yet the RSI was actually at a lower level compared to where it had been. So that's also signifying at least some consolidation, if not a pullback. And then we did pull back into the middle range there on the Bollinger Band, and similar with the NASDAQ here, similar setup. So I know in hindsight sometimes it looks easy, but sometimes these things play out just that simply, and you can have these strategies at your fingertips to jump on them and take advantage and capitalize on them. So we also offer education with that futures and options masterclass. That's all part of the Theta Trader membership. Some of the chapters that you'll have access to, anywhere from starting with futures basics, again, all the way down to advanced stock index futures option strategies. So you have all of that research available to you and education in the masterclass there. And then you have the online video tutorials I mentioned as well. So to summarize, you get this Theta Trader software with the alerts, plus the private coaching, plus your research and education, valued at over $21,000. And of course, that's not what we're going to offer this membership at. We used to do these in-person events for almost $4,000. People would sign up at the back of the room at a nice table we had set up there. And so we're going to do even better than our retail price, $997. This is our lowest price ever, one-time payment of only $497 for a lifetime membership. So I always get asked, well, is that $497 a month? Is that a year? Is it quarterly? No, that's just a one-time membership for a lifetime membership. So here is the link, cf.altavest.com/meta. I guess I abbreviated Metastock there. And you can use the QR code if you'd like as well. And that's only one payment of $497. You can take a screenshot of this page if you'd like, or just go right to the URL with the QR code. And there's a 30-day money-back guarantee. So if you change your mind, that's fine. Just let us know. And really, so you have no risk on your membership fee. And if you want a free membership, people like to take advantage of this as well. If you have an account of 100,000 or more, we'll rebate your membership fee 100%. If you have an account of 50,000 up to $99,999, we'll rebate 50% of that for you. So please take advantage of that. And then just a few more items here that are important to kind of keep in mind. Some of the advantages of trading ES options and even an E-mini. You have this large market share, densely packed strikes and daily expirations ensure granularity and coverage. So what that means is when our algorithm is looking for strike prices to build a trade, it's going to find them. So you can't really do a dragonfly in probably almost any stock or individual stock or security. Only probably the biggest issues would have strike prices that far out, that are that deep out of the money with enough liquidity and volume. And then even then, if you're trading securities, correct me if I'm wrong, someone might know, but I've never been able on any brokerage platform trading securities, and never been able to place a dragonfly with one order at one price. You have to break up the trade into two separate orders and leg in. So it's very cumbersome. It's a bit of a nightmare. So you have that deep liquidity, a wide array of maturities and strike prices. CME Group says it offers superior execution to SPX options when you're trading on the E-minis. Cost savings of $4 to $15 per contract, and that's on the S&P 500 in particular. So essentially, you're looking for that bid-ask spread to be tight on every option that you're trading, and that's what the E-minis offer us. There's no margin calls, by the way, when trading spreads with us, because we're only doing coverage strategies, and we use a proprietary margining approach as well. So you never have to worry about naked options or trades, blowing up and your account going deficit or whatever if you're trading covered option strategies. So these are not unlimited risk. So no margin calls. You don't want to ever get a call from margin. I always kind of get a kick out of this. This woman says, who is margin and why does she keep calling you? So you don't want to be like this guy. So don't worry about that. There's also no pattern day trading restrictions in futures markets. When you're trading in securities, a trader who executes 4 or more day trades within 5 business days in the same account, they're going to be singled out as a pattern day trader. So that's additional regulatory scrutiny and limitations. So that means if your account drops below 25,000, you'll be prohibited from making further day trades until the balance is brought back up. So just something to keep in mind. Doesn't mean you can't day trade stocks. I mean, everyone does something like that to some degree, but you don't have to worry about any of those limitations. Also, there's tax efficiency when trading in futures compared to securities. All futures and options are tax efficient in terms of how they're treated by the IRS. So you can lower your tax rate. For example, you get that 60-40 favorable tax treatment. 60% of your gains are taxed at the capital gains rate versus 40% at your personal rate. That's according to IRS Code Section 1256. And here's a mathematical example, and we'll get into the details here. Don't have all day and it'd be boring, but an example, if you're trading stocks versus futures, you're going to end up with a tax savings of over $2,000 just because of the tax efficiency in this example. And there's no more itemizing each trade. You just get a 1099 when you're trading futures and options at the end of the year. It has your P&L on that, and that's all you need for your taxes. But always consult your tax attorney or advisor for details on that. And then you can trade futures and options within a self-directed IRA as well. We work with Equity Trust, and they will waive your setup fee, by the way, if you're coming from AltaVest. So they have over 71 billion in assets in custody. And then again, we're full service, so we can trade any commodity futures and options market. So not just the E-minis that we talked about using Theta Trader. So anything you can think of, we can trade it: gold, silver, coin, euro, dollars, treasuries, whatever. And there's a lot of efficiency trading futures too. It's 20-to-1 efficiency ratio compared to ETFs. That's only a 2-to-1 when it comes to margin efficiency or capital efficiency. So Theta Trader is what you call an alternative investment solution. You need to be on your toes. There's inflation with us every day. This is interesting. What some consider the actual inflation rate is that blue line there, versus what the published rate is here is the red line. And look at the price of gold along the way, kind of following the, I guess, alternative statistic on inflation. So maybe it's not so alternative after all, if gold's following it. And here's your dream house when you were a kid, $1 million, and now that $1 million dream house kind of looks like that. And what's the last best performing asset in the last 20 years? Little shout out to gold. Look at that there. So just to point out that we do more than just the options that we talked about. So we can do everything. Even in the last 2 years, gold's the best performing asset. And then keep in mind, stock market drawdown can last longer than you think. Here's the .com crash, but people forget that if you bought at the worst time, it took 15 years to recover if you just sat on it. So don't rely on just being passive. That's why we like these option strategies, alternatives in a low correlation to what's happening in traditional investments. So you can use options to speculate or even hedge your stock portfolio, and the automation can help us along the way to do a lot of that heavy lifting for us. So to summarize here, and I'll wrap it up, these are flexible strategies for any market condition. Professional premium collection strategies are simplified with the technology. The convenience and the automation saves you the grief. You can use these strategies to diversify or hedge a portfolio with what we call non-correlation. And there's tax efficiency and tax advantaged results here with futures options. And then you love those one-touch responsive trade alerts, at least I know our clients do. Then you don't have to worry about pattern day trading restrictions as well. So that's a lot of information, and I don't know if I have any questions or if I have time, maybe a minute or two, but here is the last slide, and let's see here. Trying to kind of go back to the screen to see if I had any other comments or questions to respond to.
Chris wanted to ask how you can check to see if he's already a member.
Email me. Yeah, Erik, E-R-I-K, @altavest.com.
And that's the only question we really had for you.
Well, that's great news. That means I was so thorough. There's possible no questions.
I think that's it for sure.
Yeah, I'll just believe that. But yeah, no, thanks. That was a lot of fun. And I think again, I invite anyone to call me and email me, and we'll be here to help you out.
All right. Thank you very much, Erik.
Thanks, Jeff.
All right. Let me go ahead and do this real quick. All right. Give me just 1 second here. All right. We're just sorry for the dead air there. I had a note from our next presenter that he's having a hard time logging in. So see if we can get him some help. So in any case, glad you're doing well. I'm glad you're here. As we kind of start to migrate to the next speaker, I'd want to say thank you to both of our sponsors. Let's say thank you to Stocks and Commodities Magazine for sponsoring the event. They've done a great job of sponsoring it for a number of years, and we certainly appreciate it. So thank you very much for Stocks and Commodities. You can find out more about Stocks and Commodities Magazine at traders.com. In addition, if you haven't yet, you can join the Traders Forum. You can find them or find us at thetradersforum.com. We have live market chats. We do a lot of lessons. It's a community trader designed to help traders, and it's completely, everything I just talked about is completely free. So you can do that at thetradersforum.com. So there you go. Of course, we are Metastock. Metastock has been rated the best software price in its price category for 32 years in a row. It can help you test trading ideas, scan the markets, get feedback, all of that kind of good stuff. So there you go. You can get our extended trial at metastock.com/conf promo. You can give us a call at 800-882-3040, and you can get us at metastock.com/sales chat. If you're wondering why I'm a little bit distracted, we're just trying to make sure that we can get our next guest in here. So hold on just a second. We're going to give him a call, see what we can do to help him. Not while you watch me, though. We'll do a prize drawing while you watch me. We're going to have Kelly actually give him a call. So,
Jeff, do you want me to go ahead and, well, I guess there's nothing I can do. We have contacted, boy, this is a fun afternoon. We have contacted Kelly, and he's trying to contact Peter to help him log in.
Yeah.
But so far, we haven't had any luck.
Yeah. Okay.
Plan B is in place in case it's necessary, and Plan B is Jeff's backup presentation.
Well,
we could just exhaust his entire book of dad jokes.
Yes.
That would also work.
For sure. We should do a drawing.
Well, let's absolutely do that. Just to make things a little stickier, I need to leave here in about 5 minutes. I'm jumping ship.
Yeah, that's okay. I think we can always talk about Ichimoku or something. You know, it's not a big deal. I can talk. I can talk a lot. Let's see. Erik's email was just erik@altavest.com. Thanks for the question, Chris. I'll type that out real quick.
I already did, but okay.
Oh, there you go. Okay, one sec. Let's get on target. Let's do a prize. And we did just give away one of the theta traders. Let's do Trading Winds Pro membership. How's that sound?
Kelly's asking if we can send Peter the link or send him the link.
It's probably still on my clipboard, yeah. And I tested that one. It worked. It let me straight in. So I know that Peter's in the middle of a reboot just to see if it'll work.
Okay.
So we'll see. Anyway, I see somebody coming in. That's a good thing.
There he is. Yeah, that's Peter coming in.
Good. Well, hopefully it's not just really testing Peter's link.
That's me testing his link. Sorry.
All right.
All right.
I tested it.
I'm working with him right now. Give me just a moment.
Yeah, you're fine. Okay. So let's go ahead and give away a year of the premium nightly updates from tradingwinds.com. It's normally $97 a month. It's Vince Vora, and now it's also Rahul Aurora. Yeah, and they get together. They do recommendations on a regular basis. I think they do 3 Skype videos every week. I'm not sure if they use Skype, but you get the idea. And they also send out daily alerts, all that kind of stuff. We're going to go ahead and give that prize away. Greg, what I need from you for that prize, and it looks like the The real Peter Dalal might be here now.
It looks like he is.
All right. What I need from you,
Go ahead.
give me a number between 1 and 5,089.
I don't have random up right now, so I'm just going to say 6,000. No, 600, 800, 642. Wow, that's why I guess I used the Google random number generator.
All right, Greg, is that your final answer? No, is it 642,870? Okay.
642. I was trying to do 642. 642.
All right.
I'm sticking with that.
All right. Final answer is 642. Do you remember that show? That was a great show. I love that show. Rick H. In Canada with a live.com address. So congratulations, Rick. If you are here, let us know, because we love it when somebody's here and they win, because you don't have to be present to win. So
immediate satisfaction.
Okay, let me go ahead and do that. Let's trade wins. I'm glad Peter got in here though, because I'm running out of jokes. I would have had to get.
I can't even produce a random number, so obviously I'm useless to this group.
Michael has some feedback for you. It says sounds like almost like the devil tried to give him a number.
I did feel a little bit like what do they call it? I can't think of anything. I did feel a little overcome by something.
Dakar is here.
It was a gift of tongues. Yes. I was a little overcome with a gift of tongues.
He's a Peter. I can't talk anymore. Peter is an awesome instructor. I hope he can make it in. Looking forward to seeing him present. So thank you, Greg, for the assist. Peter, let's go ahead and just test your microphone real quick. I want to make sure. I don't know why I'd be a little bit nervous, but I just want to make sure you're working okay. Okay. Let me send him an unmute request. I do want to, as we kind of get Peter coming in here, Peter's been a long-term partner of Metastock, a big friend of Metastock. He made the FX Traders Advantage product. And over the course of about 15 years, he refined those into a product called the Magic Trader. I'm getting a little flustered too. Certainly because we're looking to kind of get Peter presenting, and I can't hear him. But he did really great with the FXTA. People really, really liked it. Magic Trader is just an iteration of that. It includes so many of, like, he's going to talk about its ingredients, and just the people that use Magic Trader absolutely love it. So let's go ahead and see if we can't get Peter started. Peter, can you hear me? Can you?
I could hear you. I could hear you.
There. I'm glad I can hear you. Let me go ahead and make you the presenter real quick.
Okay.
All right. I'll let you know that I can see your screen, and then we'll get you going. Sorry,
Okay.
we had some technical issues getting you in. I'm glad you're here.
Okay. I said I saw my screen. That's what I told.
Okay. Cool. I do see that it's coming through, but I can't see it yet. What I can see right now is your presenter view. So I can see the notes and the slides and that kind of stuff. This is fine. If you want, I can show you how to, if you just click on the display settings, you can swap the two views real quick.
Okay. Display settings.
And just say swap presenter. And I think it says something like swap presenter and speaker view. If you do that, we should be able to see
It
proper.
does not let me. Okay. Swap presenter, right?
Swap presenter view and slideshow. Yes.
Okay.
Perfect. I can see it great. I can see exactly what you want me to see. All right,
Okay.
Peter.
Which one? You see my full slide or?
Yes, I see what you want us to see. I see the welcome Magic Trader. I don't see the presenter view anymore. I see what you want us to see.
Okay. I think fine. I could live with that.
Okay,
All right. So let me know when you're ready.
it's
All
all
right.
you.
Okay, Jeff, we are on the air.
Yes, we are, and yes, and the floor is yours. Eugenia says hi.
All right. Thank you. All right. So good afternoon, everybody around the world, different timing, but whatever the timings you have, good to see you again. Thank you very much, Jeff and Kelly, for having me. I saw Greg before. All right. I'm so happy that we will be representing. And before we start, we're gonna try to finish in time, right? But hopefully I don't go over. Jeff, anybody else coming after me?
Yes, sir. Silas Peters is the next presenter after you.
Okay, so we're gonna hurry up and catch up the time. I'm gonna put my phone on a silent and get it over. All right, so everybody, again, thank you for coming in. And I'm excited because I spent quite a bit time to change most of the things. And Jeff also probably can see. So I'm going to talk briefly here because we got a lot to cover here. The important thing is we're going to do simple presentation. We call 5 ingredients, but these are all risk-based software clusters. At the end of the day, it is all about the risk with this software. So we're going to show you, and it works in a multiple time frame. And basically, today I officially admitting manifested AI. I'm going to show you the definition. I got the expert review what I did it. They are expert in AI, right? I did not have time to show much, but actually manifested AI is not what you're looking and people hype about it. This is embedded into the code and I will reveal, and Jeff has better slide than me, can list those items in his slides, has a list of at least 11 plus items where AI, which is manifested AI, and I'm going to briefly talk about manifested AI as we go along. And having said that, I'm going to move to catch up some speed here. And I'm regulated, my company is regulated, I still have an active license. I took some exemption, so they let me breathe. Them is regulators. And I'm still communicating with them, and we adding here whatever they want, changes. And you could see here a couple of things added here, simulated hypothetical performance. Every slide they're asking me to put it in because I do compliance, so they know I will give people, other people messages, I guess. I've been doing for 25 some years between SEC and everybody in both places knows that I'm a compliance guy, I guess. So I'm going to make it short. Jeff has all these slides available. If you don't have it, let him know. We'll get you all disclaimer slide. I'm not going to distribute our slide only disclaimers. Right, I want to be clear. Yes, because it is our intellectual property, and for about 20 years, I've been guiding these things. In a way, in this era of internet, we don't get abused, and people, do all kind of stuff. So I will be short in a disclaimer, otherwise we'll be here for another hour. Not necessary. So again, trading is risky. Everything we do is for education purpose only. I'm not here to work as your trading advisor. Past performance is not guaranteed for future results. And you could lose money, you could make money. And we cannot even use a word consistent. Regulators don't want us to use it. We can't even put testimonials on our site. They made me take out twice, my first product and second product. So we just let them win. So they leave me alone. All right. CFTC rule 4.41, which I am the living proof. Even though live trading, everything is hypothetical because there is no way you could duplicate record. And I cannot duplicate my own record. This is the way it works because markets are dynamic, and don't expect if somebody is telling you consistent result. There is no such thing. And we cannot even use guarantee word. I will get violation. So I just don't want to get there. Options are risky. I love options. Practically, I was an investor, then become prop trader, and then become institutional trader. And now I'm back in a business. I money manage too. I don't want to do it because too much compliance I got to do it. That doesn't mean I cannot do it. I have a lot of commitments with Metastock. Plus, I'm developing a lot of things behind this scene, which most people will not have any idea. I share with Metastock later. I talk here and there because it is very deep. People, I don't know who is giving presentation. Everybody is looking for to buy and sell arrow. There is no such thing in reality. When you come to risk, right, there are not billions, trillions of risk permutation and combination. And I have expert even telling me I understating that, looking at Magic Trader. And I have in writing. All right, so let's don't get there. I'm still registered. I wanted to deregister so I could breathe 25 plus years between two agencies. I really want to enjoy a little bit freedom, I guess. But I like compliance. Why is not moving? Jeff is frozen. Okay.
let's see.
All right. We are big in that. I spent hundreds of thousands of legal fees between patents, patent filing, both product, and I'm still messing around with lawyers, putting more patent claims and whatever, right? And trademark, hundreds of things I want to do it, and it costs a lot of money. So please respect our intellectual property right. We do not, and we have notified all these AI people do not ever entertain our Magic Trader any part or in pool because it is going to make you lose money when you mix both things. And we do not entertain those. Any trader, we will take their license away. And unfortunately, I got to give Metastock in writing that get rid of that guy. All right. So copyrights and intellectual property, we are very big in there. Again, simulated trading results are not going to be the same. They are not typical. And you could see here at the bottom of this slide, they made me put this every slide now. All right. And it's asking more things to do. All right. Testimonials, we put it here. We're not giving any testimonial because regulator said so. This scalp screen is our bread and butter. And I'm not going to hype anything, but it's a reality. I have a third party giving me in writing. You could with, and I'm one of the maybe very few in the world because I don't have that record. I do scalping on options, vertical spreads, as well as butterflies. And I'm very happy I did do. So I don't have to lay out that kind of money in equity. I used to be long-term or a swing trader or an equity side. I think it's, for me, it doesn't make business sense. And I'll tell you honestly, once I teach people, they will forget about all of the stuff. All right, so today we're going to talk about our famous 5 ingredients and how to trade with that in a very simple way. I cut down all the noises from my slides so you could enjoy it a little bit better. And we're going to talk about catalysts, which are yellow bar, indigo bar, things like that, which are monumental, and they are the backbone of this software because this is where you get the highest probability of low risk, low drawn, and there are evidences there, almost zero drawdowns, right? And I'm giving you a hint, yellow bar, and there are hundreds of them. And when Jeb represents later on, he will show you there are YB3, YB4, YB3, there's so many kinds. But that whole family of yellow bar and indigo bar, if you learn it, I cannot guarantee, but you will be very happy. All right, so we're going to show you how to boost your confidence, giving you some hints here and there so you could do it. I changed this slide. So what I did it, and it's very logical what we do. So we have 2 experts. One is for regular expert, which is Magic Trader expert. And this is the elite version, which is kind of Lamborghini. All right. of the business, and eventually we will trickle it down to further smaller. So I can't get rid of these people for some reason. Even though I turn it off, it keeps coming back. All right, sorry about that.
Did he say something to me?
No, I'm talking these phones doesn't get what do you call turn off. They did something with the upgrade. Okay, whatever. So what I am trying to tell here that uh, the beginning you need this expert. However, we have options which combines both of them. So I like to do this one and this one, but for a new trader, keep in mind you're going to get two expert and you have to use this expert when you start. Don't jump into all the fancy stuff. All right. So this way you could learn quicker and easier. All right. Then for a new guy, especially these are the time frame I would suggest you initially trade with. So it's a 5 to 13. Don't try to do tick charts. It's kind of back in days I used to trade futures with that. I don't even use tick charts anymore. Look at the bigger picture is much better than all the little move, right? Because it's scary. So what we're going to do, we're going to suggest you could do whatever you want. Focus on this time frame. Magic Trader works with any time frame. Metastock has a good thing on our left hand side, a custom. You could do whatever the 138. Some people are using 138, 134, 118. Do whatever you want to do it, right? But common thing, mass number of people, what they're using, you will have a better liquidity on those time frame. And an oddball, you could curve fit it, but this is what whole world is doing. Where everybody's trading based on that, you will have more time to get successful or less time to be successful, in my opinion. Right? Institution, like when I was trading institutionally, we don't even open less than 60-minute chart. We have millions of dollars to put it in. However, I learned hard way drawdown. So I started using 15. And when I team up with Metastock, we started bringing down to 5 minutes for Forex many years ago. All right. Market flexibility, right? Any instrument you want to use where Metastock can provide you data feed, Magic Trader will work. So recently we are taking data from LSEG, I guess, which is supplied by Metastock. And for beginners, as I told you, use this regular expert. It says here expert in expert list of the expert. And this is for big guys, all right, or people who are very smart traders, I guess. So we are all little guys. All right, I made this one up in last few days. I thought probably I will make a cute, right? I couldn't do an angle, but this is what you need to trade. And these three lines are magic line extensions, which is a part of manifested AI. Probably half people don't know, right? So, but you could put a regular 60-minute magic lines. But multiple time frame is my thing. My first pattern was granted based on cumulative desire to buy and cumulative desire to sell securities, right, in a multiple time frame. That's how my pattern was issued back in days, right? But 2003 we started using that pattern to make Forex software with Metastock, and I was going on the next one because I really don't have time to do all this trading plan, this, that, and I want pinpoint entries. I don't want drawdowns, and I don't have time for a lot of technical analysis. So Magic Trader was invented, and I always learn from prop trading and institution side. Risk is everything, right? So I wound up inventing 8-dimensional risk, different kind of risk. And we got pattern around that. I have about 1,000 new inventions. It's hard to believe, but it is there. And I made a statement, my first public, speaking about Magic Trader. Magic Trader, it is like oceans and galaxies combined. But you don't need to worry about having all the fish colors. You pick up few things, eat it, and go to the next one. That's what I do, right? And I have fun doing every day new things I tried. And market is so wonderful. Any given time, I could buy, and conservatively, 200 to 500 trades I could find I could trade with. And it is not just a hype, it is the reality. And I'm talking conservative. Proprietary edge magic pinpointing highlights actual triggers across multiple time frame, right? Because I came from multiple time frame. So I love it. And my first product was multiple time frame. Metastock was so smart. They figured out in one little menu like this, you could see every damn time frame what is happening. We don't need to open even chart except 5 minutes. That's what the first product was. I wish I could combine both one day. That will be wonderful. And this is very big, driven by magic priority sequence. And I spend a lot of time to find out where those risks align themselves on a priority. You could have millions of risks, but whether they are the most effective or not, that took time and my experience. So I sequentize and I file for that too. So other people don't steal my sequence, right? And Magic Metastock software helped me to do that. And Magic Manifested AI, we're going to talk about it. All right, I made this thing this morning to afternoon, kind of infographics, and I'm going to give you also written. You could read it later. I'll explain for infographic because I like to have simple kind of visual. So this way, I don't have to read the lectures, right? So this is the manifested AI. We put service mark, so we're claiming all these things. So be careful. Smarter than traditional AI. I have in writing from the expert opinion. This is our AI manifested is smarter than current AI. So you go and figure it out. And I'm not in a, whatever the contest to prove, you go and figure it all out. I don't really care. This has been working since 2006. So what that tells you, story. I kept my mouth shut because of the hackers, and I had to put DLL protection around it so nobody can steal anything. All right. And I don't trust too many people except Metastock people. It is true story. They are so good. I argue with everybody, but it wasn't for Kelly and Jeff, I won't be in the business. Trust me when I'm telling you, without going too much. They put their lifeline for me, fighting with Reuters for me. All right. And I will never forget those things. So I'm publicly admitting that. I argue with everybody anyway. But when it comes to loyalty, Metastock is my company. I don't want to do business with outsiders. Simple. Okay, it is built in by design. 11 plus proprietary indicators, forecasting symbols, fully embedded, independent of AI models. We have nothing to do with regular AI. Adaptive in real time, adjust instantly across markets, timeframes, volatility regime, align with dynamic trading conditions. Forward-looking precision. Everybody knows Magic Trader has a forecaster. They predict the future. I predicted 4 major crashes in writings. The last one, 2020, I spoke on January 2020 in Chicago in person and got challenged by Wall Street gurus. It cannot happen. I told everybody. Right now it's around 29,500. It's going to crash, right? And go to 18,000 around and then turn around. And at one point, it will overcome 35,000 and towards 50,000. I had a bunch of witnesses. And in 2018, in my room, I was telling people it's going to crash because Magic Trader has a bond inversion inherited all these tools you needed. And I was looking at bond inversions week after week. I'm showing in my trading room. I said it has to crash within 24 hours, not 24 hours, 24 months or earlier. And it did happen. And a lot of people in my room knows about it. All right, I'm sorry, I spent a little bit time, right? So identify turning points before the obvious powered by Magic Risk Cluster and institutional liquidity mapping. I normally don't talk about liquidity because it is scary for a lot of people. Every single thing, whatever you pulling trigger, every single thing lead to two things. One is the risk clusters and liquidity dumping and liquidity pumping. And you need to get used to, and I last 2, 3, 4 years I started talking about gamma, and one of the artificial way I created without option data, and Jeff will testify that right here. I couldn't get the data from whatever the company they used at that time, right? So I went crazy. How about that? Manifested AI, I wrote whatever I had to write, and the damn thing working pretty good. And there are 3 stages in there. So gamma squeeze and all this happy stuff. I figured out something in a stages. A lot of people don't have it, or they even don't know what I'm talking about. But at the end of the day, it's a liquidity. That's what we learned from prop trading as well as from institutions. Everything is liquidity. So you better start learning, and you're going to need to learn risk clusters and concentration. Proven since 2006. Magic Trader is not born yesterday. I use with the institutions, and then Kelly was nice, coming almost every quarter to look at what the hell I'm doing, right? And they supported me, all right? Because at that time, whatever the reasons were, but here we are with the Magic Trader. It's aligned with Magic Trader's Magic Risk Clusters and Magic Forecasting Engines. It does forecastings many different ways. Magic Zone Lines also forecasting, adaptive. All right, this is the thing what I just talked about it. If anybody wants to read it later, be my guest, read from the recorded thing. All right. So here the risk cluster, which is a big thing, and whole software is based on Magic Risk Clusters. So in one sentence, the most important here is, first time I'm talking all this, Magic Cluster show where the risk gathering, where they accumulate, like all these, rallies, they accumulate, right? Makes a big move from there. So making hidden liquidity pressure in the market easy to spot. This is like a little tough for some people to understand. So hidden liquidity. So Magic Trader shows you where the hidden moves will be. And probably in the next time, I'm going to show a little bit about reality. It did happen in, I do believe, in AVGO. I documented everything, and I have some witnesses, right? It is crazy. Once you see how Magic Trader shows you 3-4 time frame earlier than move really happens, and that can bring you with a low risk, low low drawdown area to pull the trigger. And that's where my proprietary concept of scalp swing takes place. So I do scalping. I'm not a scalper by design. I was other way around. But I accumulate in scalping enough money to lay out my money for my overnight option trade. So whatever happens to the whole world, I cannot lose. That's what I accomplish, and I'm doing every day. But sometimes I don't trade. Today I didn't trade. Right, but most of the time I trade, and I enjoy scalp swing, which is part of the Magic Trader. So this is the easy guide. Magic Trader clusters shows how risk in the market group together. This is the $1 million sentence. Most of the people buy and sell arrow. No, where the risk concentration is, that's where you go. And that's how you find pinpointing directional decision making opportunity. So bearish risk, right, clusters where risk pile up in the downward side, liquidated dumping strength can spread faster. So it is true, it goes faster. That's why I love to short them. I'm doing put options, all right? So calendar spread, everything about put. or spread trading because reducing my risk. My first professional place was professional was hedging company, so that's where I came from, hedging side. So I learned how to hedge every day equally, or in a way that you don't get hurt. So liquidated dumping strength. These are the words. Some people who are the new, they have no idea what I'm talking about, but eventually you will agree with me 100%. Bullish magic risk cluster, when risk group on the upside, liquidity pumping. So let me give you a hint. I didn't want to jump it, but start reading the tape. And easiest way, I have nothing to do with think or swim. Look at those open interest and a volume. There is a method to the madness, but you need to find out, and I'll give you another hint for option trader, which I did not plan to do it. Technically, the volume should be greater than open interest, and there is a ratio about it, right? I prefer ratio 2. So that means it's a huge amount of volume, and a block trade and a sweep. These are the things for new guys. It's like a big thing. No, it is not big. It just matter of you understanding it. So start understanding where institution buy at least 1,000 contract in one print, and think or swim in what you call the real time. They give you the what you call a place where you could see the order placement, right? That's we call tape. And ask think or swim where to see it, okay? And find if there is a contract, or sweep means 200, 200, 200, 200, right? There will be a bunch of orders, same timing. That means 16 exchanges, some of them participate and they fill them up with 200 contract of each and made 1,000 contract, which is fine. That's a block trade. Start following it. Think of magic trader risk cluster is like a traffic light pattern. When many signals point the same way, right, the move becomes stronger. This helps traders to see turning points or breakout earlier without needing advanced math or complex tools. So make it simple. Magic trader is a visual software. I did this thing in last 2 days, and I'm not a graphic guy, but I had a hell lot of challenges, right? And I'm going to be having much more than that with the intensity of this thing. But this is what I see as a magic trader. Look at the risk clusters, right? That's what magic trader. This is on a indigo bar, right? And yellow bar. They have so many risk clusters and sub clusters. So there is no way physically you could be known. In my previous recordings, you could go and see. I did show you conservative way amount of risk. There are not billions, trillions of risk permutation and combinations. All right, we're going to go a little faster here because I'm a little bit late. So this is the simplest way you could look at Magic Trader. And these are we call highlight. There are 11 of colors. So these candle colors are already documented into the manual, right? There's 120 some pages, and all these colors means something, all right? And you could see here I put some kind of notation. Magic risk clusters and institutional position illustrated by different highlights. So these are under highlights, and symbols are this kind of symbols. So don't get overwhelmed for these things, and they are part of the manual. And this is our famous that yellow bar, you just saw it. And once they come in, things happens. And these are tier 1 institution. These are tier 2 institution. So tier 1 is like a Goldman Sachs and a Merrill Lynch, and those guys participating here. So that's why this color is given. And we got the pattern for that. I'm the first one in the history dissected buy and sell into 5 major blocks. So I could know who's coming and going because I was one of the guy working against them or with them in the trading. I used to do it. So I want to know what they're doing. It. I don't need to talk to my friends there. I know what they're doing right from here. And A1 is advanced price perceptor. That's a cluster. All the institutions come with a truckload. And then everybody else knows, hedge fund, everybody knows, they jump in, then we come later. So we are always late. But with Magic Trader, I'm already in. And do not try to go against this color. Believe me or not, you're going to cry. These are dangerous because these are mega institution participating, right? And they come with a double, triple, tractor. We used to call that, all right, clip. How many clip? Clip means 50,000 on a floor. This is a secret language on a phone. How many clips you buying? I'm buying 10 clips. That means I'm putting 500,000 stock order. I will hide between the orders, showing only 500 using Spear Lead Kellogg's, one of the best platform they ever had it. And we used to hide it, but in reality on a level 2, level 3 shows my 50,000 at a time order. All right. So here are those colors, wonderful colors. You could feel good about it. All right. These are the symbols. There are many symbols. On an option, there are 50 some symbols, altogether 112. I sneak around more than Jeff wanted me to use it. I sneak around. I had only 60 allowed, and I bring it to 112. Jeff, I admit it now, because I want to give good product. All right, so,
I said you did great, and I want you to use as many as you can.
I sneak in, to be honest with you. I beg your programmer, please, this is the best for traders. All right, sorry about that, but it is helpful now. All right, so
I'm glad it worked out.
Yeah, it worked out because of wonderful people working for you. They understood me. All right, so now let's see one of the example. Where is the manifested AI? These are the forecaster. When they come in, it's supposed to go higher. So regulator, I put here, it will go high kind of language. So this is the software, or one of the few in this country were scrutinized for 2 years. CFTC put NFA agent on me, and because I don't want to go to retail until I have blessing from, they don't approve anything, but I want them to know what we're doing, and I made all the changes in the language, all right, and they were fascinated. They said there is no software they come across. This shows every step of the way risk categories, and they were very pleased what I did. 2 years, every week, 2-3 hours, and plus I got to give them documentation. Go and figure out 2 years is not a small pay. Magic Trader went through those scrutiny, all right, before I feel comfortable, because they could stop me distributing this software. If suppose people don't know, it is a regulation, federal regulation. You're supposed to give them an opportunity to review it. I did, and we have everything. You know, I'm registered, so I'm not making up story. But it was not easy. But this language came as a revised language earlier high. They will not let me put it here. It is going to the moon. We cannot put it here, even though it does. But this is the language I had to compromise. Earlier highs, earlier warning sign that we're going to go higher. So 3.3 is on a scale of 1 to 6. It is number 3 category risk, which I teach. But here, look, you don't need to be scientists. This symbol is right here in your software. It is in the part of the expert, and here is a 3.3. So when it came in, and tier 1 institution, so what Peter's tier 1 institution, Goldman Sachs is buying, or Merrill Lynch, I don't care who's buying, but they're part of the tier 1. All this color, same color is there, and then everybody else coming. UBS is tier 2 guy, right? So they're coming too. Oh, Goldman Sachs bought it, so I should buy it for my client. Okay, you keep doing it. But Peter was here earlier than Mr. UBS, which I used to, and I still have an account with them. But those money managers are something. All right, so I took control of my own destination. All right, so these are very, very important slide for any kind of trader. All right, so we're going to make it simple. Going forward, all the hard work is done. So if you went to kindergarten or even high school, you could read number 1 here. So this is one of the dimension. I redid it, every single thing in a way. It is also in a, what you call a manual. So this in a Magic Health window, you could find where to find it. Magic Health window. It is a bullish magic directional line. When it shows up this in upper window, then you go long. In a health window, you go long. That's what it says. So if you can read this color and a vertical line, means we're going. So we don't need to do all this fancy technical analysis, which I used to do for many years. And I used to talk about this thing to all the Reuters clients all over the world. I don't do that anymore. I don't need to. All this technical analysis, very minimum. Once in a while, I will do that for traders in my room because they have technical background. All right, so I will have a kick out of it. Head and shoulder, cup and handle. I could still identify patterns, and I practiced for a long time. They're not bad, but I don't have time to analyze all these things. Okay, so that's the direction line. So once it shows up, we're going to the moon kind of direction line. All right, bullish guys. All right, so let's go. That's one of the thing you got to learn. Simple as less than high school student. Number two, bullish lines. So these lines, there are 3 lines in a health window. All right, so that's why they are health lines. So they all falls under number 2 in the ingredient. So that's why number 2. However, on the chart, they have a values. I prefer you only enter into when it's a 4, 1, and 0. Dotted line is 0. The blue line is 1 and 4. That means we're good to go. That's what you have to learn, nothing more. You don't make a project. Oh, where to find that? Right here. So this is what it looks like. So when they become parallel here, this is a 4, this is 1, and this is 0. Once you see that, eyeball it, we're good to go. Right? You don't need to learn all the other things for now. Simple is that. That means you're in a safe zone. You don't make a lot of money, but you make safe entry. We cannot guarantee about safety, but safer than coming here and get heart attack here. Bullish magic entry spike. When they do show up, you better believe that you got to get in there. Whether the direction line came in or not, at least you wake up from dead. It comes halfway, so it gives you warning. 3 time frame it takes to anchor. Anchor means once it stabilizes it, that's the last call. I enter once I see this thing happening, and I will start short covering myself, right? And if I have put option, I close it out, or I know I'm going to get whacked otherwise. And if this gets anchored, that means it's good to go. And when you subscribe, Metastock gives you in your account, there is a PDF explaining these are not regular Metastock spike. And this is also part of manifested AI. This is not normal. These spikes are not normal. They are part of manifested AI. I should put it there, but it is with the Jeff list. Yeah, from this point, you're going to get a lot of phone calls.
All right, we're
All
ready.
right. And all of my competition, make sure it is our intellectual property. So respect that. Tell them. Can't have them. Uh-oh. This goes, as soon as I touch it, goes. Okay. This is the 4th one, pure health. Suppose you don't want to know everything about that health window. All right. So internal health, this is all in one juice. Once you have this thick line, I'll show you where it is. You know that internals are good. So what is wrong with you? Go in there. So you could trade with that itself. So you have bunch of line, okay, second line, right? You could say that if it goes away, that means it's a retracement coming here, retracement coming here, retracement. Then you take the profit. All right. That's at least if you don't have anything knowledge, you trade with that simply. You make less money, but without guarantee, it's a safe zone. Once they come in, they don't go away. It's the juice of internal health. It's like a getting younger. You know, people looking for that juice, right? To look younger. So this is your trading youngness. I like to crack jokes. Okay, ribbon. This is not your Metastock ribbon. We use their platform, but this is based on one of the dimensions I discovered or invented, that there are risks which has direct relations with time. and you've got to find where they are. So when you see this thing, this is not normal ribbon Metastock gives it to you. This is based on those risks, and you need to pay attention. And there is a madness for that. If there was a red color here and switch, that means they are in hurry. That means all of a sudden come up with a block trade. This is it. The institution's buying at that time. So there are basically 6 switches of these, which I teach in this in my classes. But what I'm saying to you, there's so much it talks to you what institutions are doing. That's what I care. So like here, they're taking profit. Neutralize. Those are selling. They're taking profit, right? They're dumping. But as long as this is there, I know liquidity is there. I'm good to go. And here, before that, there are so many other things I look at. I get the hell out of it, right? I look at my pure health. Okay. So people who are brand new, you could do little things. As I told you, out of millions of fishes, different color, you don't need to eat all at once. You take goldfish and be happy. So this is one of the goldfish, or maybe tilapia or whatever. I don't eat any more meat or anything, so I don't know even. I forgot everything. All right, so what I did is I put it all together for people like you and me. So an overall picture, what it looks like, these 5 things Peter is talking about, most important thing in a software. So even though you missed every single thing, this is a recap. All the names are same way, everything. And this is where we're going. It says green color, so what is wrong with that? Green color. So this is bullish. That's how you remember. All right. So what are we going to do? We got a lot of things to cover, right? We are only even nowhere practically because Jeff has only spent. So I will go what he calls speedy now. All right. So this is in opposite direction because regulator wants us to balance. All right. So this is for bearish side, and the whole market is going the other way around for now. Okay. We'll see. Making new highs. Trump syndromes. All right, he's the biggest indicator. Is the fine gradients. You just saw it. When he tweets, it's a fine gradients. All right, so this is the bear direction. So this is the direction line. This is the health indicator, right? So in this case, what we should be doing. So I have it here somewhere. Let me show you. All right, so these are the values, 0 line. So number 2, -1 and -4. So when you put the arrow on Metastock stock, it shows you this is the value is -1, -4. Then you're good to go. That means we're going down. So I had better way of representing it. So you could see here, all the numbers are here. Everything is here. These are going in a bearish direction. Then number 3 is the spike. Right, the spike comes halfway and a full. I prefer for new guys to have a full spike anchored, and you could scan it too. You know, what do you call our Explorer, which you get it with the software. You could find it, and they show half spike also. Right, so you got to open the chart. Sometimes half spike will disappear, and I will explain in trainings, right? And you could know what to do at that time. So long story short, suppose this spike came in and it got anchored here, and here is the indigo bar. It is one of the catalysts. It says you're going to go down, so it went horizontal. These are advanced price perceptor. They're accumulating all these things ready to dump it. So this is part of the liquidity dumping. All right, and then look what happened. Boom! I traded this one. All right, and -6 is my way of knows that it's going to reverse on a scale of 1 to 6, -1 to -6. This is the last one, -5, -6. You got to start thinking they're going to reverse at one point. However, this we call it the perceptors. These are advanced, and these are the regular perceptor. But it's forecasting we're going to go further down. So it went down, and the last set of seller, but they give you heads up. We're going to turn around, and this is the catalyst. From this point, if you stay in a trade, you're going to get hammer. All right, so this is the last call. So this, on my first invention, I invented this turquoise bar, and then we refined for magic terror based on additional risk. So there is a difference between those turquoise bar, and this is more functionally right? And has a 3 different functions. Eventually, you will learn all of them. So again, this is the pure health. As I told you, you have to know this thing. Because this thing took me 2-3 years to perfect it. 2 times pattern filing, health indicator, and Metastock programmer, 2 of them took 14 months because it was a mile plus long formulas. Because I want nobody to copy it. This is purity of the security. All right, so this is number 4 is your ticket for people who doesn't have time. That's me. I look at it and just pull the trigger. Hell with everything else. I don't have time sometimes. Let me give you one thing. I looked at the order flow, or I look at what is the call walls and put wall. I teach all this. Right? These are all institution talk. Even though you're brand new, you cut down all these steps. You don't need to go to kindergarten. You jump. Tell your parent to jump, right? To me, to 3rd grade. All right. I just did it to my grandson. Right. Cut down a couple of steps. So he's already ahead. So my father did it too. Right? If you're smart, you don't need all this nonsense. I forgot to take a color here. It's okay. I should put red color. Goofed. All right. So same thing, HDR. As long as it's red, all right, do not compare your whatever ribbon you're using for Metastock. It has nothing to do with that. And the worst thing, and I'll tell you one thing, one of the guy, when we had first software from DC, I told this guy, do not mix with those traditional indicator. He promised me, this guy trades standard lot. Guess what? He called me, oh, with this product I lost money. I said, wait a minute, let me have all your thing examined. I examined. I had his brother testify against him, right? We didn't go to court, but we are friends. And brother admitted that he'd sneak around the averages. The guy put 5 standard lot, $250,000 loss. You can't do that with any software unless it's a proven track record. That doesn't mean the other things are wrong. You do not marry 3 women kind of things. You know, that means you get fired from your wife. All right, so this is what I put it together. I'm married 40 plus years. That tells you something. I'm married with Metastock. God knows, in 90s I started using Metastock. Then officially from 2003 we are having partnership. Metastock is the same company. Thomson came, Reuters came, Refinery came, LSCG came, but we're still dealing with Metastock. That tells you something. I stick with the people I feel comfortable. I don't need to marry 10 women to make money in this case, all right? So this is the chart showing that when you do this homework, look at those colors and go and open those previous slides and see and do some practice. What is Peter talking about? So they are presenting all the colorful candles and you could do practice. That's why I put it for you guys. So they are here. Number 4 is a pure health. After a while, you will know, oh, this is pure health. Good to go. So we're going to short it. So we went down. You have to learn to cut down all these noises and make a project out of it. You have to learn it at one point, but in pieces. Long story short, I have a history from kindergarten reading, right, ABCD, right, from last alphabet to front, and I got in trouble. My father said, do the time test. I did it in half. So I proved, and that helped me to forecast things in the world. I could see what is going to happen. Become a practice. I want to see the end of the book. Not it's boring to go from beginning. So that's how trading. So you have to know what is going to happen before you pull the trigger. That helps me trading. All right. So this is a scanner or explorer, right? This I didn't get a chance to put the new ones I used from the last presentation, but it tells you the story, right? So all these ingredients, what you just saw, they are here. So you could also subscribe to them. Metastock is going to give you some deals, right? I don't know what the deals are, but you could practice this thing. You don't need to go through all this thing. Go and find that explorer, which I give you the names here somewhere. Not here, somewhere I give it the names. And just practice that. Then you feel good about this software. Same thing. This was the one of the chart you could see here. I applied those things. in a 60-minute. It works in every time frame. And this is the one, when you get that Explorer, find this thing on the Explorer. Metastock staffs are pretty good, right? They have a couple of good people in a tech support. Don't call salespeople, they don't know. Call the tech support, they will show you where it is and how to find it. Because salespeople has to sell, but you need help, right? Where it is, software, how it is located, they know it. And they have very good people working there. I heard my friend came back there, Jeff. I had a pleasure to talk to her there after a long time.
Good to hear. Good to hear.
Yeah,
Oh yeah, Heidi.
listen,
Heidi,
that
right?
was a good decision. So pleasant to work with her, and she knows everything about Magic Trader. So helpful yesterday. That's why I didn't bother you.
Glad to hear it.
Yeah, very good people. She took her time, very pleasant. And I worked with her 20 years ago for FXTA too. She's very nice, very knowledgeable, very cool. So I want to have audience listen. They have very good people working. You have to find them. Not everybody will satisfy you 100%. Right? So I find my own niche there. So I don't have to bother Kelly and Jeff. But they're good people overall. I fight with them, but that's that's given in a business. But at the end of the day, trust is there. They're good people. All right, same thing. You should do the practice. This is for a bear side. Some of the bulls and bears do practice. Open up this thing. I'll tell a little bit about my daughter. You don't need to know much about me, right? My daughter played a big role for design of Magic Trader. All these symbols. There are 9,800 different symbols, notations for pattern filing. She put it together. 9,800. Do you realize what that means? I told you, it's oceans and galaxies. And that is one filing. We got plenty of filings. So she played a big role. Every business, you could know my past, right? A couple of rehabs, right? You could see international trade, private equity, all these things, not the theory. I practice in a real life with my money. And I was involved on a Wall Street, and she was involved, right, since she was 9 years old. She worked for a publicly traded company. They don't allow us to talk her company's name anymore, right? And she also currently has the same license I have it. Series 3 and 34. I had Series 7, 63. Too much pain, right? Too much pain, right? So I can't shut this one off. I don't know what to do. It doesn't turn off or doesn't even bring the volume down. Sorry about that. They did the upgrade and I don't know what is going on. All right, so I had Series 763. I manage people's money. I don't manage. I don't want to do all this thing. I'm 60 plus years old. I look young because I never had a time to do it, or I don't like my pictures too much outside. Keep low profile. It's a better deal. Listen, with a low profile, I chase all the mafia out of construction business and made, it's not my company anymore. I used to be part owner, right? Made this company #1 even today. All right, all these monumental jobs, Hudson Yard, right? Yankee Stadium, Barclays Stadium, Madison Square Garden, the new. We all participate in those kind of jobs. And I'm happy. Many people, I made them millionaires, including my partners. They were shutting the company down, said, no, it's not happening. We're going to be #1. They laughed at me. I'm crazy. Yeah, I'm crazy. All right. So this is the inventions based on believeness. I created this concept because I know what institution believes to pull the damn trigger. So that believeness cumulatively, when it's happening, is embedded into the risk clusters, and you got to identify those symbols. So don't get overwhelmed. Oh, pick up little fishes to fill up your belly. Learn scalping so you don't have to risk too much money and get out. And then make money and put it in a swing trading. So this way you know the software and do demo. Thinkorswim has a wonderful live demo. Exactly replicate if you want to. And then slowly you move or go back and forth, doesn't matter. So there are two types of believers. bullish believer, bearish believer, and there is one which is neutral believer, but these are the two major categories. And there is a thing, don't even compare close to your regular lines looking like that. They have nothing to do with that. This was based on those believeness, and we wrote a special formula, right? And Metastock helped me certain time frame. I had a challenges, right? So we did in a way. Oh, this is the line in the sand. If it goes below it, we're in trouble. So get the hell out of here. So that becomes your kind of stop losses, right? And there is a reason why there is another one. This particular line took me 6 months to design because I did not know one single code how to write it, and a lot of pain, sleepless nights, and I like wrestling. I jumped to the bed. My wife said, "What is wrong with you?" I said, "I'll be back. It's something I think I forgot to take out from the formula," and it went through on a euro. I said, "Whoa, this is the one I'm looking for." Then we developed later, right? This one, few months later, right? But I was trading for a while with one line. If it goes below, I'm out. All right. So this is a line in a sign concept, and for scalp swing, this is very important. You don't want to get in between even a risk reversion area. If it is there, I'll buy as a low risk area as long as it goes up. Otherwise, I'm out. But you know, once you practice, you know. If you have a yellow bar, I am saying that. Turquoise bar, I'm saying that. These are my favorites. That's a new life. So I don't need to worry about all the regular arrows, whatever. And everybody knows it goes 3 candles up, I'm out, right? Because there's too much risk, too much away from the mean risk reversion can happen. Doesn't have to come here, but you know, why you want to stay in a trade? Take your money and run. All right, the Jeff is all yours. I'll be here. You could take it over from there. Right?
All right.
I have a slide if you want it. I have a slide too. Look.
All right, there you go.
You
All
tell
right.
me, I will switch it if you want.
No, I've got them. I was able to actually open them up in PowerPoint or
Okay,
in Acrobat.
so you could take me out, but I want to see what you're doing. Okay, I could see you.
Yeah.
All right, so you could take me out.
Okay. No. Okay. Thanks, Peter. Appreciate it.
Thank you very much. Thank you very much, everybody. I appreciate you guys.
All right. Cool. Let me go ahead and just kind of talk a little. Oh, let me turn on my camera. Thank you, Peter. That was good. Appreciate it. I want to talk a little bit. Ooh, I turned on my camera and that's all I can see, and it's a little bit much. Let me just kind of fix this real quick. Okay, that's better. And talk a little bit about the services that Peter offers. Before I do that, I do want to say that it's a very, very well integrated add-on to Metastock. So, like, and what I mean by that is a lot of times I will come in here and we'll kind of have a lot of advice in terms of kind of like what needs to be added. But Peter really kind of got the vision, but behind kind of what we try to do with Metastock, and that's to kind of break it down and kind of show you what's going on. And so when he designed the add-on, he made sure to include commentaries, and you can see right here, this is a little bit of a breakdown. This is Roblox. Roblox is one of my favorite stocks this year, not as much lately, but certainly earlier in the year, it's definitely been a really good stock. But if we come back in here and like I think I've got it right here on this day. If I want to see what's going on a chart, I can actually see it. There's this big old dashboard view and I can kind of go through it. Peter spent a lot of time today talking about kind of the ingredients, and I wanted to just show the summary here. So right here before Roblox had kind of an explosive move. This is right at about $57. It almost doubled up to 100. And I think actually if we went a little bit further into the future, I think it went way up to about 140 before it finally topped out. And it's been kind of going sideways. It looks like it might go up again, but that's besides the point of kind of like what we're talking about. Here's kind of breaking down kind of what the indicators are showing, what you should be doing. And in addition to that, it goes into details about all of that. So those are just have to do with the actually 5 ingredients that Peter talked about. Of course, Peter did show that it does do scanning. I wouldn't release a product without scanning because it's one of those things that I believe Metastock does best. But you can go in and you can say, okay, based on the 5 ingredients or based on any of these particular scans, this is what I'm looking for, and it'll give you a list of those. So that's the add-on. We'll talk a little bit more about that. And one of the other things that Peter offers, and this is something that a lot of his room members really, really enjoy, it's called the Magic Trader Educational Alert Room. It's a room that meets a few times a week. And this is a little bit new of a different of an interface than we've got. It includes, in addition to that, WhatsApp messaging and alerts and trades and ideas, et cetera, et cetera, et cetera. Here's some of the topics that they talk about. I'm not going to read through this whole list, but here's some of the topics of what they talk about when they're in that elite room. So I can kind of look at this. Here's some more in addition to that. What I do have to say about the alert room as we're just kind of going through here is the people that are members of this. All I hear is really good feedback. The stickiness of the room is pretty incredible. Dakari says, thank you very much, Peter. That was great. Michael says, thank you very much, Mickey. Michael says, thank you. All right, good. Okay. Here's some other topics that they talk about with AI. So a lot of really, really good discussions from Peter in terms of things that are going in the marketplace that are designed to kind of help you as a trader move forward, in addition to kind of all the other stuff that's provided as that. And so that's all kind of part of what Peter calls the mentoring room. We're going to give you an extended trial on that. I'm going to talk a little bit more about that. As part of Magic Trader, you get access to a glossary site at magictrader.com, as well as a Facebook group that's that's a private Facebook group. And then in addition to that, just to kind of talk a little bit about what the add-on is, it's a massive add-on. It has about 58 different indicators, 47 explorations, 2 expert advisors, templates, manual, tons of highlights and signals and experts and that commentary window, everything that we kind of discussed today. That's all included in the Magic Trader, which is normally about $199 a month. So we're going to make that available for you. We're going to make his alert room available. In addition to that, we're going to, as part of the package that we're going to offer today, fold in what Peter calls the fundamentals of Magic Trader. And I would say when we recorded this, it's very, very detailed and it goes into a lot of information about over the 4 modules. Like, so there's an introduction. He talks about the 8 dimensions of risk, the types of lines. And I just remember kind of as we were going through this course, as we were kind of recording it and kind of helping him facilitate the course, just how much detail it went into. In fact, it's over about 20 hours of recording. It's all available online. You can watch it, you can pause it, you can come back, but it's all available as part of the package we're going to kind of throw out there for you. So in total, if you wanted to do the Magic Trader Elite, that would be about $597. If you wanted to do the educational alert room, the mentoring room, that would be normally about $897. And that fundamental of magic trading would be $1,000 value. So normally that's $2,500. As part of the conference, what Peter's allowed us to do, what Peter's agreed to do is actually do a one-time offer where you can get 3 months of the mentoring room. You can get the Magic Trader training, the fundamentals of Magic Trader training. You can get 3 months of Magic Trader, and the cost for that would just be $997. So to do that, you can go to Meta. This is an offer that you need to get in touch with us to have us help you set it up. It's not something that's available online, but you can call us 800-882-3040. I'm going to put this in the chat real quick. Okay, it's in that chat. Of course, you can get in touch with us by chat as well. And I'm learning how to type and talk at the same time. The chat is metastock.com/saleschat. This is why Greg is so helpful, but he had to be at an appointment right now. And we'd be more than happy to answer any questions, send you screenshots. This will work on any instrument. It'll work on any time frame. $997. This will be available for a week. So you need to do this right away. 800-882-3040, metastock.com/saleschat. Based on kind of just the feedback that we get from all of the people that go to the room. you should give it a go. If it's something that you don't like, you don't have to continue with any of the subscriptions afterwards. But I have a feeling you're going to like it. 800-882-3040 or metastock.com/saleschat. All right, very cool. And let me go ahead and close out of this real quick. And let me go ahead and jump over here very quickly. Now these, don't worry about these. These are what was already preloaded in here. As we transition to our final guest, there is just one thing we need to do, and that is to give away the Metastock Mega Prize. So since Greg isn't here to kind of help me with that, I think I'm going to have actually our next guest help me with that. What I want to do right now, though, is I want to say thank you to our sponsor, Stocks and Commodities Magazine. Stocks and Commodities Magazine has been sponsoring the shows that we do online since we started them. I think we've been doing them for 14 or 15 years now. They're a great magazine. You can find out more about them at www.traders.com. And of course, the Traders Forum, go to thetradersforum.com to sign up, get a membership. You can chat with other traders. You can talk about trading ideas. Great community of traders designed to help other traders succeed and win in the markets. So we are, of course, Metastock. All of the offers except for the Magic Trader one can be got if you go to metastock.com/conf promo, metastock.com/saleschat, or you can give us a call at 800-882-3040. My next guest and our final guest today is Silas Peters. Silas is a good friend of mine. And Silas, I know I threatened to do this already. You probably heard me, but I'm going to have you give away. I'm going to have you help me give away our final prize. You ready?
Hey, Jeff, how's it going? Can you hear me okay?
I can hear you great. Thank you. How about you?
To give prizes away.
You love to give away prizes? All right. So the prize that we give away at the last of the day, we kind of do it as a transition, or as a tradition, we give away a prize for anybody, well, not anybody, a lucky winner that said something during the day today. So what I'm going to do is I'm going to show all of the questions, and I'm going to tell you when I'm going to start, but I'm going to start scrolling through these questions. And then I'm just going to have you say stop at some point, and whoever's question I stop on is who's going to win. Does that sound fair? Do you understand the assignment? Are you there?
Can you hear me?
Okay, yeah, I can hear you.
Yep.
Do you understand the assignment?
So I'm just going to tell you to stop, right?
Right. I'm going to tell you when I start, and you just tell me when to stop. I'm
All
starting.
Right. Stop.
Okay, Michael earlier asked for Kevin Nelson's email address, so he wins. All right, the prize that we're giving away, I'm just going to kind of put this right here so I can send it to the chat, the bottom of the chat. The prize that we're giving away is 3 months of Metastock. That would be our real-time version. 3 months of the Metastock news service, as well as 3 months of learnmetastock.com. So all those are going to be kind of given to you. If you're already a member, we'll just give you 3 more months. So congratulations, Michael. Thank you for participating. And Silas, let's go ahead and get you started. Silas Peters, I love the pattern you're about to talk about. The 3S pattern. It looks a lot like an M or a W, and I think there's a bunch of different names. Let's go ahead and get you started. Let me go ahead and make you the presenter.
Let me see here. Let me get my deck in line. All right. So am I the last person of the day here?
You're going to take us home. Correct.
All right. Hopefully everybody has got their coffee or their energy drinks.
I got it. I got mine.
All right. Good. Okay. Let's see. I'm going to share my screen, guys, and let's see. Give me a thumbs up or a yes if you guys can see cracking the code there. Can you guys see that?
I can see it, and here's a thumbs up.
All right. We got thumbs. We've got yeses. Let me find the chat there. All right. And everybody, I'm trying to find it. Am I enabled for the chat to see?
No, because what happened, but I can make you eligible to see the chat.
Okay.
So give me just a second.
Yeah, no worries.
What happens with the events is around Thursday, we usually run out of organizer slots. So you get a presenter slot. So now you should be able to see all the chats.
Yeah, I just want to make sure I didn't miss any questions. And can you can still see the screen there?
I can. Yes, sir.
Okay, cool. All right, well, let's go ahead and get going here. I know it's been a long value-packed day for everybody, so I appreciate you hanging around and listening to me. Let me make a couple of adjustments, just moving some stuff around on my screen so I can see everybody. And first off, I want to say thanks to Mr. Gibby and the Metastock crew again for having me. Always enjoy coming on these shows here, and also Stocks and Commodities. I was actually featured in Stocks and Commodities about, gosh, I don't know, 4 or 5 years ago on this exact pattern that we're going to be talking about. So it's pretty cool here, and excited to be teaching you. So let's get started. My name is Silas Peters with T2 Markets, and welcome. We're going to talk about cracking the code, a simple 3-step pattern for all markets, and that is the case. And as always, if you have any questions, comments, feedback, whatever, during the course of the presentation, just let me know. And I want to kind of keep rocking and rolling here and not get sidetracked, but I do want to try and answer everybody's questions at least before I leave today. So I am carrying you guys home, and what we're going to talk about is this. You know, if you are kind of sick of losing money and tired of confusing strategies, you want something real, something that works, you're in the right place. I'm going to show you exactly this method here. You're going to have all of the rules, the exact rules that I use today to trade the strategy, our students use to trade strategy, and I think by the end, you'll see a way to trade with confidence, having a mechanical set of rules, high probability setups, and really, you know, not guesswork. Now, before we begin, we must cover the risk disclaimer. You've probably seen this multiple times today. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. Now, let's talk about what we're going to learn today. And we're going to talk about why price action beats indicators. We're going to talk about this 3-point setup. I'm going to explain it to you in full detail. You're going to learn a step-by-step entry with exit rules, and we're going to look at real trade examples. And really my goal for you is this, is that I will prove to you that this works in any market or time frame. But this is the real benefit of listening to today's workshop. We're going to talk about how we can start applying this today, and we're going to do so without chasing hot stock tips. No need for dozens of indicators floating your charts. Again, you're going to know the exact rules for entry, exit, and target, and leave here knowing everything you need to know about this strategy. There's nothing like hidden or nothing that I'm going to not disclose. You're going to have everything you need to implement this strategy immediately, okay? And this is a quick sneak peek tease of what it looks like here. We're gonna be able to quickly spot, identify entry, risk, and targets, regardless if we're trading GE, regardless we're trading Barnes Group, Bank of America, gold futures on a 4-hour chart, or even the E-mini S&P on a 5-minute chart. You have 8 points, 2.5 points, 6 points, 4 points. You know, I think and I hope that you're starting to see the potential here and why you should be getting excited. Now, again, you are in the right place if you just want simplicity. You want simplicity and consistency. You're in the right place if you tested dozens of indicators and subscription services. You've been frustrated by emotion-driven trades. You want something simple and mechanical. Now, if you're a retail trader out there, or even a pro who's fed up with overcomplicated systems and the endless noise of indicators, then pay close attention, because what I'm about to show you today is different. You're going to finally have something that you can rely on, no guessing. Now, before we officially get into the meat and potatoes of this, I'm going to introduce myself, who I am, maybe why you should listen to me. I'm the founder of T2 Markets. I'm an entrepreneur, risk taker, full-time trader, speaker, author, educator, I worked at the Board of Trade, private family office consultant, 15 plus years of experience in the markets. But most importantly, I'm a husband. I'm a father to 2 beautiful girls, and I'm a mentor to thousands. And this right here is what makes it all worth it. And I've literally spent years in the trenches, stocks, options, futures. I've tried everything. Indicators that claim to predict the market, flashy newsletters, elaborate strategies that cost more in frustration than they ever paid off. And sure, I've taken my losses. And over the time, through this journey, I found what works. And now I build tools so you don't have to bleed your account dry experimenting. Now, what I kind of want to address is my struggle initially, and probably exactly what many of you here are going through or have at some point. Most traders fail because they're overcomplicating their systems, chasing lagging indicators, and going through emotional decision making. And kind of doing this over and over again where you just lack a repeatable edge. And before I discovered this pattern, I was probably right where you are. You know, my charts look like spaghetti, indicators everywhere. I was chasing, hot stock picks, and people are just, overcomplicating the process. Trying to look at, 19 Greeks, robots, expert advisors, EAs, black box systems, trying to figure out what these complex strategies are. Or, and I've seen this, the drill of, hey, we need some more damn indicators on our charts, right? And, I can't even tell. I don't even know where price is. I don't even know where price is on this chart. And, we got to have this confirmed before that confirms, and this confirmed. Oh, this is going north, should be going south. And it just leads to emotional trading, emotional decision making. You're hesitating, entering too late, exiting too early, risking more than you should. And I got burned, again and again, losing money, losing confidence, feeling trapped in a cycle of hoping and second guessing. And so does that resonate, any of this resonate with you guys in here? And if anybody says no, none of that does, then you are a robot. Then you come from a special place, because all of that at some point, I can almost guarantee you've been played by this. And so of course it does. And so that kind of led me to something very powerful. This 3-point reversal pattern we're going to be discussing shortly. It's been around forever, but most traders ignore or overcomplicate. And, I thought, what if I could build something completely mechanical around it, where you have those exact rules, precise targets, no emotional guessing, and start with that, back it up with tests. Hell, I was already doing it manually, and I knew the power of it, and I knew that it already worked. So I've already given you a hint. It consists of 3 steps. And these 3 steps are, we're going to spot the reversal structure. We're going to find what the exact entry, exit, and target are, and then we're going to trade only when the rules align. And so let me ask you guys, can you follow 3 steps? Can you follow 3 steps? Or can you count to 3? And if you do these, your trading becomes much cleaner. And if you skip them, well, you're back to the noise. And because we are trading price action, we have a strategy that produces repeatable setups, that works across all markets, and are easy to spot in real time. And you see these charts right here. These charts right here may not mean a hill of beans to you right now, but trust me, they will. Trust me, these charts will start to mean a whole heck of a lot to you. And they will become your favorite charts. How do I know? Because they are clean, clear, and you'll have exact direction of what you need to be doing. Just like this chart in GE, just like we've showed you in Barnes, Bank of America, gold futures, and even the S&P. Or this chart of the Australian dollar, Japanese yen. Okay? All these examples. Now, you're getting a little bit of a glimpse into what we're talking about, but You know, can it be that simple? You know, I think simplicity beats complexity. How smooth, how clean were those setups I just shared with you? Well, they look clean, but now we need to know what we're looking at and we need to know the rules. So let's get right to the rules. So this 1, 2, 3 strategy is a widely used trading trick that helps traders identify trend reversals as well as continuation patterns with high accuracy. So step 1 is identifying the trend shift, spotting the pullback, and then confirming the breakout trigger point. So whether you're a day trader, a swing trader, or a position trader, understanding this pattern can significantly enhance your ability to spot profitable setups in the markets. So let's start with point 1, as this is the baseline starting point for our pattern. Step 1 is about spotting the reversal, okay? This is the highest point in an uptrend or the lowest low in a downtrend within the current price movement. So let me show you a quick example. Point 1 in an uptrend. As we notch new highs, these become our number 1 points. Now, when we are looking for a bullish reversal, as we are notching new lows, these new lows or lower lows become our number 1 starting point. Okay? Now, point 2 is the retracement. First retracement we see from point 1 forming either a higher high in a downtrend or a lower low in an uptrend. So let me show you an example of this. We have at point 1 here, we have a retracement or pullback, which gives us our number 2 point, okay? In a downtrend, we have our number 1 point right here. As we retrace higher and form a higher high, that gives us our number 2 point. And then now we get to point 3. As the name applies, this is our 3rd leg, okay? It's either the second low point or higher low for a long or bullish formation, or the second high point or lower low for a bearish formation. I know that's kind of a mouthful, but let's put that together. So here we have our number 1 point. The market retraces or pulls back, which gives us our number 2 point. And then we pull back up, creating a lower high, which is our number 3 point, okay? This is lower than our number 1 high starting point. Or you can see here, we have a lowest low, that's our number 1 point. We retrace higher, it gives us a number 2. We pull back lower, creating a higher low, that gives us our number 3 point, okay? It's not lower than the old number 1. So now what? All right, so now what? Well, there it is. I mean, that's your 3-point pattern. So what are we missing? What are we missing? Yeah, where do we enter? Yeah, where and how do we enter this market? Does anybody want to take a wild guess, or a swag? Want to take a swag on where or how we enter? We wait for a break above or below the number 2 point. Okay, we wait for a break above or below the number 2 point for our entry. So in our bullish example, means that we are looking to go long, expecting to go higher. We are simply waiting for the market to do what? Yes, trade above the number 2 point. So there is your high of the number 2. We are looking to get long on a break above the number 2 point, which we can clearly see that happened in this case. Do we agree that price broke above the high of the number 2? Tick, 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 and then boom, yes, we did. Now flipping to the short side means that we are bearish. We're looking to go short or sell the market, expecting it to go lower. What are we looking for? Yeah, we're waiting for it to trade through the number 2 point. Okay, here's our 1, here's our 2, here's our 3. We're waiting for price to trade below the number 2 point. And that's exactly what we got there on the next bar. And we all agree on that. That price traded below the number 2 point. Yes, quite simple. So do you see how this is damn near, if not 100% mechanical? We're all seeing the same thing. That is rules-based. That is mechanical. Okay? We're all seeing the same thing. So once the price breaks through point 2, after forming our point 3, buy side or sell side, it signals a trade entry. And there you go. There is our 3-point pattern. Everybody agree that this is pretty straightforward up to this point. What else are we perhaps missing from the ingredient? What perhaps are we missing? What about stop losses? You know, every trade needs a stop loss to manage risk. What about profit targets? What about profit targets or limit orders to take profits? And then what about just overall trade management once you're actually in the trade? Well, these are all great questions and all equally and extremely important. We must always use a stop loss to protect our capital, and we always need to know where we should look to take profit. I mean, that's why we're in the market in the first place, right? I'm not here to press buttons for fun. So first, let's cover stop losses. Simply means that sometimes Mr. Market doesn't do what we want it to do and goes in the opposite direction. That's okay. We're not going to be right 100% of the time. So we put a stop order in to protect our capital in case we're wrong. And so for a bullish setup, our stop or risk is going to be below the number 1 point, okay? Below the number 1 point. So if we have our 1, 2, 3 pattern here, our risk or our stop goes below the number 1 point, okay? Bearish setup. Bearish setup should be surprising to you. It's the same thing, just flipped upside down. For a short position, where we're looking to go short, we're bearish, thinking that market, XYZ, ABC market's going to go lower. Here's our 1, here's our 2, here's our 3. Our risk, our initial risk, goes above the number 1. Now, there are other tactics and techniques that you can employ once you get into the position. Obviously, the trade management piece. It's very important to let the market breathe and materialize in your anticipated direction. Once we start getting further confirmations, then we can start adjusting stops, okay? But we have to manage risk and protect ourselves against adverse price movements. And so now we get to the fun part, right? The fun part, which is profit taking. Does anybody know how you take profits or what the ingredients or criteria is for this? We know we must always use a stop loss to protect our capital. We also need to know where we should look to take profit. And so for a bullish setup, we're looking for the distance between the 1 and 2 point measured up or measured higher. Okay, let me show you what that means. This is a bullish reversal setup. We know we have our 1 point, our 2 point, and our 3 point. For our projected or calculated target, we're looking to measure from the low of the number 1 to the high of the number 2 measured up. This range right here is $1.98, okay? If you round up to $2, sure, but it's $1.98 to be precise. And so we're going to take that 198 We know this is $1.98. Okay. Could be 4.5 points in the S&P. It could be, 62 pips in the Euro US. Doesn't matter. We're measuring from the low of the 1 to the high of the 2. We're going to take that $1.98 and we're going to add it to the high. Boom. And that gives us our target of $1.98. $1.98, there's our target, there's our risk. Now, surprise, surprise, on the bear setup, how do you think that we find our target in this scenario? Well, for a bearish setup, it's going to be the distance between the 1 and 2 point, this time measured down. So here we've got our number 1 point, we've got our number 2 point, then we've got our number 3 point. 1, 2, 3. What is the difference or the range between the high of the 1 measured to the low of the 2? Well, it's $3.68. $3.68. It might be 31 points on the NASDAQ. It might be 11 cents in wheat. But it's $3.68 on this stock chart. So from here to here is $3.68. $3.68. So we'll take that 368 and we're going to measure down from the low of the 2 point. We know from here to here is 368. We're going to take 368, subtract it from whatever price this is, and that's going to give us our profit target. Everybody following that? Everybody following that? It's a simple mechanical process. All right. So, 3-point strategy. To recap, for a bullish 3-point strategy, what is our trend? What's going on in the market? If we're bullish, if we're looking for a bullish reversal, we're looking for price to be heading lower. We're looking for price to retrace higher, which to give us that number 2 point. We're going to look for price to then make a higher low. Okay, so we're looking for price to head lower. We're looking for price to retrace, and then we're looking for price to come back again and establish a higher low. 1, 2, and 3. And then we're looking for an entry on a break or close above the number 2. 3-point strategy on the bear side. For a bearish strategy, we're looking to see price heading higher, high, high, high. Price retraces lower, giving us the number 2. Price makes a lower high, giving us our number 3. Then we're looking for an entry point below the number 2. Price is headed higher. Price retraces. There's a 1. Price pulls back up. You get a number 2. Lower highs confirm. Number 3, and we're looking to get short on breaks or closes below the number 2. So let's walk through some additional examples here. Again, this is just about repetition. So this is a monthly chart, and I purposely didn't put a symbol here. It could be ExxonMobil, it could be Alibaba, it could be Bitcoin, or it could be the British pound. Doesn't matter. It's just price action at the end of the day. So here we have price moving higher, 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 monthly. There's our number 1. Our number 1 is confirmed once we stop printing these higher highs. Okay. Possible number 2, possible number 2, possible number. There's our number 2. Price retraces higher. There's our number 3. There's a 1. There's a 2. There's your 3. And you're entering on breaks or closes below the number 2. Now we get the same thing, same looking setup here on a weekly chart. Same weekly chart here. Price is driving lower, lower, lower. And the question I often get is, well, how do you know where the number one stops? Well, it stops when we stop printing lower lows. This is a 1, this is a 1, this is a 1, and we stop here. We pull up, we trace back for our 2 and our 3. Where are we entering, guys? I'm giving you a pop quiz. This is interactive. Where are we looking to get long? Where are we looking to get long? Yep, above the number 2. So this being a weekly chart, even if we were looking at a daily chart or maybe even a 4-hour or 1 hour, we've got plenty of time here, guys. This is no white knuckle, veins popping out of our eyeballs type trading here. We know all this in advance. 1, 2, 3, we're looking to get long on breaks and close below number 2. And we already know that. We're prepping. We know where we're going to enter. And what else do we also know? Every other trader out there scratching his head, I don't know where to enter or what to enter or why. I don't know where I'm getting out. I don't know what my risk is. I'm just going to put a stop somewhere. I'll put a target somewhere. Maybe if I'm up a tick or a point, I'll get out. We know all that. We know here's the setup. Before we even get in, we know that, hey, our profit target is here and our stop loss is here. Why is our profit target here? Because this is the distance between the low of the number 1 and the high of the number 2. Whatever this is, we'll call it $5. That's what we're measuring. Let's just call this, let's just say this is $35. Let's say this is $40. 40 minus 35 is 5. You add 5 to 40, that's $45. Target of $5. All right. 1, 2, 3, break above, and you hit target. Now, this is a daily chart. Daily chart. Okay. We're just trading high probability reversals along the way. Okay. Short, long. This is an hourly chart. Obviously, the lower you go, you're going to have more setups. Okay. So people ask all the time, what's the best time frame, or what's the best instrument to do this on? There is no best time frame. There is no best instrument. We're just price is fractal. We'll trade. Okay. So yeah, set up in the works. Okay. This is the ES, by the way. That's how I came up with these figures. Okay, this is the E-mini S&P. E-mini S&P ES. Entry, risk, target 1, target 2. Entry, risk, target 1, target 2. More trades here. It's do not take it lightly how often we hit target 1 and reverse. Hit target 1 and reverse. We don't know what happened here. We can keep going lower. Yeah, we keep going lower. Yeah, we can keep going higher. So 1 minute chart works all the way down to the lower time frames. I even know people using this on 15-second charts. 15-second charts. So you want more action, you want more activity, go to lower time frames. Go to lower time frames. Yes, it's going to be more. There's going to be more noise, just like it would be with any strategy or indicator you're using. But you're going to get more setups, right? Prices forming, new highs, new session high, new session lows throughout the day. So the way this is calculated on, say, an intraday chart is plotting new session highs. So at the time, this was a new session high. You're not going to get a new top pattern or bearish pattern until those are taken out. Okay. New session high. New session high. And this was a session low. That's why we don't have any other buy trades. You're not going to have any buy trades unless the market comes down and takes out those lows. So hopefully you see, how we only trade when the rules are met. Means no forcing trades, no guessing, no fudging criteria because you feel like the market should move up or down. We're simply waiting for our 3-step criteria to be met. And this is what separates hobby traders, emotional ones, second guessing, chart hopping, chasing entries, to those that follow a systematic process. A mechanical plan is either there or it's not. So if we look at this, like these here, it's either there or it's not. You have a 1, 2, 3. You have a 1, 2, 3 pattern. You're not guessing. You're not dibble-dabbling with all the crap in the middle. We call it, no man's land. In the gray, stay away. Here we are on gold. Here we are on gold. Trading, gold futures, GLD, mini gold, micro gold options. This is a stock example, just shy of target 1. I believe that hit target 1, or it's close enough for government work. Here we hit target 1, here we hit target 1. Cardinal Health. What I love about this are these lovely little smiley faces that say, congratulations, you just got paid. Google, okay, how do you trade Google? Well, sell the stock in this case, buy put, sell bear calls. Very simple, very mechanical. 99 out of 100 of us should be seeing the same darn thing. So this is what you've learned so far. Simple, 1-step, 2-step, 3-step pattern. Okay. I'm gonna ask you that. Have I done my job at this point? Have you learned a simple 1-step, 2-step, 3-step pattern? Is everybody here up to this point feel confident in what I've shown you? Something you can say, yeah, cool, I can follow this. I can do this. Step 1, you spot the pattern. What's the pattern? Well, in this case, market's headed south. Market's headed south. I'm going to wait for that last load to form. Start my number 1 count. I get to retrace it back up. Subsequent retracing it back down. 1, 2, 3. And we immediately know and are able to identify the criteria that we need to place our orders to enter the market, right? What are we doing? Well, we know that we have this setup here. This is a daily chart. We have a 1, 2, 3. There's day, there's the next day, the next day. We can sit back and just chill until we take out and break the number 2. And we know if we're going to get long here, we know our risk is going to go below the number 1, and we know our target is what? Our target is a distance between the low of the 1 measured to the high of the 2 measured up. Okay, maybe this is $18. So you're going to add whatever this is. You take whatever high this is. You're going to add 18 bucks, and it's going to give you your profit target. And what's cool is that this can be done or placed as an OSO. Does anybody know what an OSO is? Order sends order. You put your order in here. Once you're triggered into the trade, it's going to then put in an OCO order, or order cancels order. That means you get in, your limit is placed, your stop is placed, and then if you go and hit target, it cancels your stop. Or if the market rolls over and stops you out, your limit is canceled. Or you're not having to sit there and babysit or worry about outstanding orders. And we just put the trade on. Put the trade on, man. Execute. So here we will break above the number 2, right? 1, 2, 3. All right. So this was our initial 3, but then we made a low. That became a new number 3, and then we made a lower low, and that became a 3. And so we're sitting here, maybe a week or two goes by, and right there, that bar took out that high, okay? And let's say that this is, I don't know, let's just make something up. Maybe this is $30. Maybe, let's say this is $70. This is $40 low. So you have $30. So now we're gonna, if we know this is 70, we know the range is 30. We're gonna take 70 and we're gonna add 30 to it. Last time by my Alabama math standards, it's $100. And so there's our target. So if we're bullish, we want to get long something, what do we do? Well, we could buy the stock, obviously. We could buy futures, currency, pair, option, you know, whatever you're trading. Buy call options, just outright calls, call debit spreads, or you can sell put options. Cash cure puts, bull put credit spreads. We don't need to do any flying donkey, iron condor, butterflies, just simple outright directional move. Now I will share with you how I prefer to do this, but it also depends largely on the instrument and the time frame. So in this case here, in this example, this was a $32 move on 100 shares. And so buy the stock, we could buy, say, at the money call options. I like to trade this pattern with credit spreads. So I like to sell bull puts. That way, if the market, you know, decides to screw around, I'm still getting paid down here on time decay. You know, if I bought an outright call, I'm probably losing money depending on how far I went out, yada, yada. And the stock, you know, needed to move up as well. We're bearish. If we're bearish, we can sell stock outright. We can sell futures contract, currency pair. We can buy outright puts, outright put directionals, buy bear put debit spreads, or we can sell bear call spreads. Sell bear call spreads above the market. So if you're bearish, so we got this pattern right here. In fact, we just had a trade in J&J, old Johnson & Johnson. And so we had this pattern here and broke below 2. And you can start selling stock immediately. So wait for the retest. You can do that as well. You sell bear call spreads up above the market. So if we're, you know, let's say this is 175, you know, come up above the highs, maybe this is 185, maybe sell 185, 190s, 190, 195 bear calls, whatever floats your boat. So you're probably sitting here kind of wondering, you know, how do I do all this by myself? How do I find these patterns on my own? I'm a believer, but how do I find these patterns on my own? Well, you know what it takes. You see the steps. Might be thinking, great, well, now I've got to learn to chart patterns. I've got to learn these multiple indicators, spend hours back testing, buy expensive tools. Nope, none of that. So that's what this strategy is built to eliminate. You get a system that does the pattern spotting, the plotting of entries, exits, targets, daily setups across multiple markets and time frames. So you can actually start trading with clarity instead of bouncing around, listening to a bunch of talking heads. You've got these patterns, these setups, basically handed to you on a platter every day. So what if, you know, you had a tool that locates the pattern for you, automatically plots your entries and exits, scan multiple markets and time frames. Would that help you find high probability trade ideas on a daily basis? Now, it's a question for you. Would that help you find high probability trade ideas on a daily basis? Well, good news that you're here, because that's exactly what we did. Is we built a tool that does just that. Replacing the need to hunt and manually hand draw the pattern. So if you remember or recall our examples, from earlier. Remember this little guy right here? We had to find it magically, just found this stock, whatever it is. And we say, okay, there's a 1, because that's a low. Pulled up, that gave us our 2, pulled down, that gave us number 3. All right, let me get my calculator out, because $36.19 minus $18.27 is $11.33. I have no idea. I'm just making that up. See that? Like, we don't have time to do all that. I'm gonna take that $11.33 and add it back to that $36.17. That's gonna give me $48.06. That's my target. You want to do all that by hand? I did. I did for years, actually. Think about if you're day trading. Trying to calculate all that crap in real time. Okay, there's $111.72. There's the high. All right, there's $81.19. Let me take 111.72 minus 82.19 and subtract that. That's going to give me, $62.41. I had to spot the patterns for me. Second, we had to map out the 1, 2, 3 points, and lastly, we had to get the old calculadora out and define the range for our targets. Crazy. The powers of technology, all the heavy lifting is done for you. Imagine that. There's your 1, 2, 3. I don't have to get the calculator out. Show me the entry, show me the target, show me my risk, show me the entry, show me my risk, show me my targets. All the heavy lifting is done for you. And it looks absolutely beautiful. Absolutely beautiful in Metastock. Look at this. Imagine your platform. Let's start with platform. Scanning the markets here for you. Boom, we have a 1, 2, 3 pattern. Okay, let's go. Game on. Entry, risk, target, entry, risk, target. A little smiley face. Okay, remember these charts earlier? You're like, what the hell? What are you showing me? Remember, I said they probably don't mean a hill of beans to you, but you can certainly see why they do now. There's a 1, 2, 3. Here's a 1, 2, 3 on SPY. Here's a 1, 2, 3 entry on SPY. No, Meta, sorry. Another here, Meta. 1, 2, 3. GE Aerospace. You guys see this? Here we are on GLD. GLD, 1, 2, 3. There's a trigger. We can buy GLD options, sell bull puts, buy bull calls, trade gold futures, minis, micros, CFDs, crude oil. Crude oil, find lovely moves in crude. Bonds, 30-year bonds, S&P, NASDAQ, your markets that trade actively. We didn't stop there, though. We've also had this built in Thinkorswim. We can see here, TradeStation, NinjaTrader 8, TradingView, MetaTrader 4, MT4, wealth charts. Why is all this different? You're not using dozens of indicators. There's no chart hopping. There's no second guessing, because I know you've tried it all. 20 plus indicators, 10 subscriptions, loads of strategy experts. They're cluttering your mind, draining you mentally, probably draining you financially, still leave you lost. But this method gives you a simple mechanical set of rules that you can follow. Simple mechanical rules. Mechanical consistency means that you know exactly what to do next. reduces your stress without chart hopping through thousands of different markets, causing you to make emotional trades. Just gives you high probability setups every day. This is what I'm doing every day, providing this to hundreds of students every day. And when you implement what you've learned, this is what your trading day or your new trading day looks like. Confident. Wake up, you glance at your scanner, you see valid reversal shot popping up, bullish side trades, bearish side trades. You know exactly what entry exit target is. It means there's no more emotional guessing. Less stress, better decision making, more margin for error. And results matter, you know, using this as one of my primary entry method techniques. This is one of my primary entry techniques. And I've been using this for close to 20 years. Believe me this, I would not continue to be using nor talking about this pattern 20 years later if I did not believe in it. Plain and simple. Plain and simple. I've already explained to you why I still use this every day, but here's the reason. I'm no PhD mathematician. I like simple, I like repeatable. I like something that's pattern-based, not lagging. And I like something that works across all markets and time frames. All right. If it's working for Dogecoin, then it should be working for the NASDAQ and it should be working for Microsoft. I'm not saying you should trade all those or trade all those simultaneously, but we're trading price action at the end of the day. And now it's automated. I built a step-by-step program to put all this together so you can master this strategy. And we do that with what's called the 3S code. We automate, execute, repeat. Automate, execute, repeat. And with the 3S code package, you're going to get on-demand training. Watch whenever you want at your speed. You're going to get a full indicator and scanner suite, tools that you'll start to use daily. You're going to get ongoing community support. You're not alone. Our motto is no trader left behind. And you're going to get access to weekly live trading sessions where I walk you through real trade setups, ideas, analysis. In fact, we just had our training today. It's every Thursday at 11 a.m. Eastern. And so this is how you can start profiting from these predictable patterns with what we call the 3S code. Let me ask you this. Let's do some quick math here. How many losing trades have you taken because your system was unclear? How many indicator subscriptions cost you, I don't know, $50, $200, $400 a month? How many hot tip newsletters promised the moon, delivered scraps? And if you added up all the time you wasted, stress, mistakes, pain, I can pretty much promise you've already paid way more in losses and wasted effort than what this will cost you. If you tried to build what I'm giving you here, the scanner, indicator, rules, training, live sessions, community, you'd normally spend thousands of dollars, lose time, figure out what works. You make mistakes costing money. You'd feel stress. But here, this package proven ready, we're not charging $3,000. We're not charging $2,000. We're not charging $1,000, not even $997. In fact, not even near that. With the 3S code package, you're going to get access to the 3S code indicator, the 3S code scanner, access to our weekly strategy and scan sessions, and access to our private Telegram room. Imagine being able to spot high probability setups every day without hesitation. Imagine having mechanical clarity You know exactly where to enter, where to exit, and where your target is. Imagine trading both swing and day and swing, from position trading off of a monthly, weekly chart, all the way down to scalping on a 2 and 1 minute chart. Doing all that without chaos, without worrying if that newsletter or indicator you just saw is going to suck you in. 3S Code eliminates all that. On top of the indicator, scanner, access to our live training and our Telegram room, you're also going to get our 25 top option strategy guide, chart pattern principle trading guide, and the 3S Code quick start guides. You can have all of this today for a one-time lifetime access of $397. All you got to do is go to metastock.com/code or call 800-882-3040 and the fine folks at Metastock. We'll be happy to answer any questions you have, and I'm going to answer all of your questions here before I leave. You go to metastock.com/code. Now, I want you to understand exactly what you're getting here. So you're going to get access to the following platforms: Metastock, Thinkorswim, TradeStation, Ninja 8, TradingView, MetaTrader 4, and Wealth Charts. Okay. You're going to get access to our weekly strategy and scan sessions. We'll talk about top setups. We break down mini markets, talk about day and swing trading using 3S Code, using options, trading minis, micros, ETFs, all markets. This is your chance to ask me in a live trading session anything that you want about the indicator, market ABC, market XYZ, and they're all recorded and archived for your viewing pleasure. Now, the indicator and scanner includes each of this. You get a visual plot of the 1, 2, 3 top and bottom reversal areas. They include the entry, exit, stop, and target levels, customizable settings. You can scan for setups only or trigger only or both. You can scan for tops, bottoms, or both. You can scan for intraday setups or swing setups or both at the same time across any instrument. With this package, I'm also throwing in these additional bonuses. My chart pattern principle trading manual guide will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at it and understand the market the proper way. Bonus setups, how we use the power of seasonality to trade the pattern. Bonus 2 is my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this so everyone can take advantage of options if they wish to do so and do it the right way using 3S Code. And then bonus 3 is lifetime access to our private Telegram room. Cover stocks, ETFs, indices, futures, commodities, currencies, 3S Code setups, intraday, weekly, and so much more. Now look, it's not just me. It's not just me. Students come to me all the time. I've tried indicators before, they didn't work. Oh, this one is mechanical improvement. I'm too new. I don't have time. Well, guess what? Works in all time frames, training included. Markets might change. Strategy based on price action. So therefore, it's timeless. So I'm going to tackle what's probably on a lot of your mind. Again, I bought indicators and got burned. I get it. That's why this isn't some secret sauce indicator. It's I taught you the rules. It's mechanical. You follow the rules. You don't guess. If you're not experienced, you don't have hours, fine. You don't need to stare at charts all day. This works across multiple time frames, day or swing, and you have access to our live sessions where I break this down step by step. And then what if the market changes? It's why we're using trading price action. timeless. When emotions flare, mega indicators lag, price action speaks clearly. And so here is your complete offer, guys. You get a 3S code indicator, scanner, weekly strategy and scan sessions, and access to our private Telegram room. It's all, say, one-time, lifetime payment. There's no renewals, hidden fees, any secrets. It's a one-time, and you own it for life. And so before I turn it back over, I'm going to answer a couple of questions here for you. One question that I see is, am I targeting Elliott Wave 3? No, Elliott. I'm not incorporating any Elliott Wave. Am I showing a measured move as a profit target? I'm showing a measured move as a profit target, but how would a fib extension compare? You can put a fib extension on there if you want. I don't. I let the software calculate my target 1 and target 2. You can slap a fib extension on there to your heart's desire. I do use Fibonacci. Don't get me wrong here. I do use Fibonacci, but I'm not applying any fib extensions. I'm trying to boil this down, make it as simple as possible for you. Okay. Yep. Day and swing. The answer to that, any time frame, guys. Doesn't matter if it's a weekly, daily, 4-hour, 1 hour. These are some of my favorite. The higher time frames, weekly, daily, and then the 4-hour and the 1 hour. These are kind of my, so these are going to be kind of longer term. These will set up a little bit more frequently than a weekly, daily. And these will usually last. Again, it depends on, it depends on the market. I can't tell you how long it's going to last, but these are firing off throughout the week. And then on the lower time frames for day trading, I actually will go down to a 15-minute, a 2, and a 1 for entries. I'm sitting at my desk, which I usually am here at my desk. So very versatile. It's awesome. And let's see, I want to turn this back over. Yeah, oh yeah. So I think I already covered that. So with options, let's say that you got the market driving down here, and we finally get a confirmation pattern, and we know we're looking to get long. So in this scenario, I'm also trying to line up. Are we at a higher time frame demand zone, support, whatever you want to call it? And then we get that confirmation. We get a confirmation. I'm looking to. I like to sell bull puts. We know that price has driven down. We know that put premium is inflated or rising because of the fear of price go lower. So put premium is higher. I like to sell inflated premium or credit spreads. But if you don't like credit spreads, it's not your thing, or you don't have approval, whatever the case is, well, you also know that if the price is driving lower, then call premium is on the cheap, right? Implied volatility is cheap on the call side. So now you're buying cheap call options. Buying cheap call options will sell higher price credit spreads. On the flip side here, let's say we have this pattern, 1, 2, 3. Well, here we know so price is driving higher. Retail traders are increasing demand for call options, which is increasing implied volatility. I like to sell inflated call premium, but you know that if price is going higher, then puts are on discount. So it's a perfect place to buy puts. And so if this is the high of the chart, this is the low of the chart, I don't really care about the stuff in the middle. Okay, I'm looking for high probability reversal points. So I think I know it's like 15 minutes past the hour, but I think I started 20 minutes past the hour. So I'm going to turn it back over so everybody can carry on. But I just want to say thanks again to Jeff Gibby and the Metastock team. Thank you so much for having me on. Always enjoy these things, and I look forward to working with the new students. Take care.
Silas, good to have you. Thank you, man. And
yes,
you got all the questions. So maybe that make me the presenter real quick. I just want to kind of add a few things. In addition to all the stuff that you get, want to kind of mention the commentary, which kind of gives you exactly what you need to do with the position, what your stop loss is, what your targets are. Of course, with Metastock, you get that full scanning capability that we're so good at in terms of identifying and finding those trades. And all of that. Oh, wow, that really kind of turned out wrong. All that's available at $397. You can do that at metastock.com/code, which is in the link and all that kind of stuff. So big thank you to Silas for coming on, spending some time with us. I appreciate it. And I do appreciate everybody. All of you guys that have been here all week, watching, asking questions, being part of the event. Thank you for being here. I want to say thank you to our sponsors, Stocks and Commodities Magazine, as well as the Traders Forum. You can join the Traders Forum right now if you want to, thetradersforum.com. Metastock, we're offering all of the specials that we talked about, including 3S code. Today we talked about 3S code. I love that pattern. Very, very straightforward. Works really, really well. We also talked about Magic Trader. We talked about, that's what we talked about, Learn Metastock. And we talked about the Sublime and MET. All of those are great products. Can't go wrong with any of them or all of them. You can get all of them at metastock.com/conf promo. If you have any questions for us, give us a call at 800-882-3040 or metastock.com/sales chat. Tomorrow, we have another great lineup. If we kind of just take a look at tomorrow, it's a little bit of a shorter day. We're going to start with Vince Vora. After that, we're going to go to Buff Dormeyer, Jeff Tompkins, Dave Landry, John and Jack Kosar always do such a great job. I love having them on. And then Anne-Marie Bain. So come back here tomorrow. We'll see you there. I want to say thank you for being here. Thanks for being part of the event today. Take it easy. Stay healthy. Stay well. See you tomorrow. Thanks, everybody.